Everyone, good afternoon, good morning, good evening to all of you. Welcome once again this commodity live एनालिसिस स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे क्रूड ऑयल को एक हल्का सा फ्लैट ओपनिंग थी, नीचे आया, एक रेंज के अंदर फंसा हुआ है। कल एक सपोर्ट ले तो लिया था, देखते हैं आज रेंज ब्रेक करता है ऊपर की साइड या फिर आज फिर से सेलिंग देता है। नेचुरल गैस भी हल्का सा गैप ओपन हुआ था, कल एक वो रिटेस्ट था, थोड़ी बहुत सेलिंग आई फिर अटक गया वहीं पे एंड वहीं पर अभी भी रुका हुआ है। प्लान क्या कर सकते हैं, देखो फिलहाल के लिए अगर अभी चेकआउट करें करंट लेवल पर है तो एक छोटा सा एफईजी है यहाँ पर थोड़ा बहुत रुक रहा है। 12:30 हो चुका है तो लंदन सेशन ऑलरेडी ओपन है, थोड़ा बहुत वॉल्यूम 3:30 तक रहेगा। 5:30 न्यूयॉर्क सेशन की ओपनिंग, 7 PM यूएस मार्केट ओपनिंग, 7:30 जॉब ओपनिंग का डेटा गोल्ड और सिल्वर को ये भी इम्पैक्ट करता है। तो लेट्स सी कुछ ट्रेड बनता है। तो फिलहाल के लिए मार्केट एफईजीज पर ही है, नेचुरल गैस में भी क्रूड ऑयल में भी इट इज़ ऑन एफईजीज एरियाज। ठीक है, ये एफईजी के एरिया हैं सारे के सारे। आ जाए अगर क्रूड ऑयल तो एक बाइंग का प्लान रखेंगे। अभी और कोई ट्रेड इसमें है नहीं करंट लेवल पे। ठीक है, थोड़ा सा नीचे अगर आता है तो बेटर रहेगा। बाकी ऐसा लग रहा है एक फ्लैग पैटर्न बनाने के मूड में है। अगर फ्लैग पैटर्न बनता है तो फिर किसी ना किसी साइड या तो ब्रेकआउट या फिर ब्रेक डाउन बड़ा इजीली हो जाएगा। और उस केस में फिर वो सपोर्ट रेजिस्टेंस होल्ड नहीं करेंगे। बेटर है थोड़ा ऊपर जाए, वहां से सेलिंग ही आ जाए, दैट इज ग्रेट। बाकी ऊपर के लेवल भी काफी बार टेस्ट हो चुके हैं कल, एज वी सीन यस्टरडे। मल्टीपल टाइम टेस्ट कर चुका है अपर लेवल भी, 5 बार, 5 से 6 बार टेस्ट कर चुका है। कल बिल्कुल हाई लेवल से सेलिंग आई थी तो कहीं ना कहीं हाई लेवल थोड़ा सा फिर वीक होना स्टार्ट हो ही जाएंगे। जैसे थोड़ा सा हायर टाइम फ्रेम पे देखोगे तो ये रेजिस्टेंस पे कंसोलिडेट हो रहा है एक्चुअली क्रूड ऑयल। कल सेलिंग जरूर आई थी बट जो बाइंग आई थी उसको पूरा तरीके से सेल आउट नहीं कर पाया मार्केट। तो ये रेजिस्टेंस पे एक तरह से कंसोलिडेट कर रहा है। अगर ब्रेकआउट होना है तो बहुत अच्छा तरीका है, बहुत अच्छा टाइम है। इसी तरह से कंसोलिडेशन होकर अगर ब्रेकआउट कर देता है अब 5470 के ऊपर तो अच्छा मोमेंटम आ जाएगा। नहीं कर पाता है तो फिर वापस थोड़ा बहुत नीचे। बाकी हम देखेंगे इंट्राडे में, क्योंकि लेवल इतने बार टेस्ट हो गए हैं, अब थोड़ा सा क्वांटिटी बढ़ा नहीं रह सकते क्योंकि नए सपोर्ट रेजिस्टेंस बने ही नहीं है करेंटली। ये रहेगा फिर एक मेजर नेक्स्ट रेजिस्टेंस जोन 5540 550 के अराउंड। अगर ये होल्ड नहीं होता है, ब्रेकआउट हो जाता है कंसोलिडेशन के बाद। एक रीटेस्ट भी है यहाँ पे। कंसोलिडेशन कर रही है बिल्कुल। क्रूड ऑयल रेजिस्टेंस के अराउंड कंसोलिडेशन में ही है। ऐसा नेचुरल गैस अगर अपसाइड की ओर आता है तो यहाँ पर भी देखते हैं एक सेलिंग का अगर ट्रेड बनता है नेचुरल गैस में इसी पर्टिकुलर जोन पे। फॉरेक्स में जो कि वहाँ पर एक रेजिस्टेंस है तो नीड टू सी। कैंडल ओपन इक्वल टू लो नहीं बनती है तो एक सेलिंग का ट्रेड प्लान हो जाएगा नेचुरल गैस में।
Is on. Everything you need to get the edge at the end of the market day. This is The Close.
A middling end to a monster month that leaves investors with more questions than answers. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Scarlett Fu. We're kicking you off to the closing bell here in the U.S. What's next? Sell, Maine, go away? Are we done?
I don't know. Can I sell for the rest of the year and just go away until like 2028?
As long as the uncertainty remains, right? All right, let's get a check on where markets stand right now. The S&P 500 losing 0.25%. Stocks under pressure here on renewed signs of trade tensions between the U.S. and China. Of course, some data did prove to help limit some losses. We'll get into that shortly. You have food and staples holding up better than the rest of the market. And of course, this comes on the heels of Costco's latest results. So the safety sector is still very much in play here. We're also looking at 10-year yields. Little change right now, 4.41%. But treasuries are on track for their first monthly loss of the year. And the dollar not moving a whole lot today. It is a Friday, but the dollar has closed out every month this year with a loss. So that is the worst or longest streak in about 5 years, Romaine.
We're going to talk a lot about, of course, the monthly gains and monthly losses here. May really was, though, a great reminder of the dichotomy here, the resiliency of U.S. financial markets. But this week, a great reminder of the fragility that still remains. In fact, all of the gains from this month's 5% rally in the S&P, that came in the first 2.5 weeks of the month. Since then, the S&P has been range-bound and now slipping about 1.5% since May 19th, with half that percentage loss coming from today's slide alone. Now, a core reason, of course, for the pause in this rebound rally can be summed up by one word: uncertainty. That's the drinking word game of 2025 so far, a game that got more complex after yesterday's court rulings on Trump's tariffs, today's report on broader restrictions on China tech, and tonight's political rally to tout a Nippon U.S. steel deal that nobody seems to have any details on.
Uncertainty is the theme for the market, and we think it's going to start to become a headwind for equities here. But when we look at the equity market, we see more risks on the downside than the upside.
And making the market calculus even harder is the debate over whether all this chaos in Washington actually is having a real economic impact. Remember, yesterday's GDP revisions did seem to suggest yes. So, too, did today's trade data that showed a record plunge in U.S. imports. But then you had tame PCE inflation data this morning and a better-than-feared earnings season, Scarlett, that says, well, maybe not.
Yeah, so lots of question marks here. And as you point out, it all comes back to that lack of visibility for the people who are actually running businesses. Since the start of April, S&P 500 companies have used some form of the word uncertain or uncertainty about 3,100 times, 3,132 times to be exact, during their earnings calls and other events. That's according to a Bloomberg analysis of transcripts. And that tally, by the way, is the highest in any quarter, surpassing the early days of COVID in 2020. And if you go even farther back, even the global financial crisis in 2008. And now that the fate of so many White House policies are being litigated in the courts, the one certainty remains is companies are unlikely to get much clarity in the near term.
Absolutely. Here, let's kick you off to the close here on the final trading day in the month of May. Laura Castleton is U.S. Head of Portfolio Construction and Strategy at Janus Henderson. And Laura, I really love those types of charts that Scarlett. It's why I love Bloomberg, frankly, because it really is data-driven. But the problem that we've run into over the past few weeks is that the data all seems to be conflicting with other data. And I do wonder, as you sort of chart your path forward for the rest of the year, do you have any sense of clarity? I want to use the word certainty, but maybe some sort of semblance of clarity about where things might go next.
Well, I think we're already 3 shots deep in this first 2 minutes with the word uncertainty, Romaine. So I think that's exactly as you put it. The problem here is that we cannot really surface the meaningful data because of the headlines. For May, we actually got a reprieve from some of the tariff headlines. It is becoming very clear that June, that is going to come back with a vengeance, and that's therefore clouding, I think, some of the actual constructive data that's under the backdrop. You mentioned today, PCE coming in softer. Investors don't care about that softer print of PCE. They don't really care about the softer CPI print from earlier this month or strong employment data. Tariff uncertainty is going to be the headline, but it is extremely uncertain and unpredictable. So investors really do need to focus on underlying trends that are beneath the surface.
I am curious about this idea of American exceptionalism that we were talking about and then, of course, poo-pooing for quite a few weeks now. And we should be point out, when we look at the monthly numbers now, of course, that sort of 5-month streak that we had of the U.S. underperforming the rest of the market, that came to an end in May. And I do wonder if investors are a little bit more comfortable with what's going on here in the U.S. Yeah, sure, everything's still unresolved, but maybe people have gotten a little bit more comfortable with the chaos and how to navigate it.
Well, clearly, I think that is the case. But then again, you see the headlines today where tariff uncertainty is coming back with China with a vengeance, and you're seeing a hit to the U.S. stock markets today. So the worry of mine is that back in May, we got to valuations within U.S. equities that were almost back to where we were at the beginning of the year. And so if you actually look through April, previous to this past month of May, there were less than 5 companies of the top 50 performing global companies that were the top performing winners outside in the U.S. So the majority were outside of the U.S., but investors have about an 81% concentration to U.S. equities. To your point, with May, tariff headlines subsiding, there's strong equity earnings in the U.S., so it does not mean that investors need to abandon those good quality companies. But valuations and fundamentals are going to matter. And quite frankly, outside of the U.S., there were already transitions happening pre-Liberation Day for why investors were looking to rotate outside.
Absolutely. And your CEO has made the point back in mid-April to late April, about a month ago, that the firm could see about 10% of clients' exposure or AUM reallocated from U.S. assets because of this fraying of the idea of U.S. exceptionalism. How much of that do you think we've already seen so far?
So I actually do think that we've started to see a little bit of a trickle from ex-U.S. investors reshoring their assets back home. So you've seen a lot of the flow trades coming mostly in from Europe, where those investors who may or may not have had an overweight to U.S. stocks are now like, let me bring some of those assets back home. The clients that we're talking to are, I can't tell you how many calls I've had on international, probably more than I've had in the past 5 years in total. So they are now contemplating and wondering that. I think that there's a lot more of that transfer of assets to come as you continue to see the uncertainty and volatility. And clients are looking for where valuations are more reasonable. Ex-US, especially with the fundamentals and spending and potential deregulation abroad, is going to be a good place to search for that.
And as people debate whether U.S. stocks should be something that they overweight or underweight or go back to neutral on, one thing that there seems to be consensus around is that the dollar is weakening. How does the weaker dollar play into where people want to be exposed or how much they want to be exposed to the U.S. versus, say, overseas like in Europe?
I think that's a great point. A lot of clients, unfortunately, that were allocated ex-U.S. hedge that currency risk because that was the play that you wanted for the past 5 years. That clearly has not been the winning trend this year. So currency is extremely unpredictable. The dollar has clearly been on a trend downwards. That's what the administration, part of what they want is to have a weaker dollar, but then part of what they want is also to maintain that strength in the reserve currency. So there are some dichotomies happening within what the dollar could do going forward. I think what's important is for investors to think if you're investing abroad outside of the U.S., it is for a particular reason. It is for diversification and for different beta than what you can get from the U.S. markets. Allowing a manager that is active and can manage that currency risk for you is going to be crucial to maintain that.
And just to wrap this up, Lara, we're basically at the tail end of earnings season. We've got basically, 90% of the S&P is out there. We've seen what they had to say. Better than expected, certainly, with regards to the quarter that was. Obviously, much more of a mixed bag in terms of the forecast and the guidance that they gave. Do you think that some of those companies will have more confidence to give more concrete guidance when we get to the next earnings season in about 3 months?
Look, I hope so. Absolutely. I think in general, volatility is going to continue, and that is becoming the norm, as you mentioned at the beginning. So companies will adapt to this environment. And at the very baseline, it gives credence to shift from passive investing of the past decade to active investing, where you can find the companies that, whether their guidance was cloudy or muted, they still may have better margins and opportunity for growth, whatever comes.
Laura Casa, I'm going to leave it there. U.S. Head of Portfolio Construction and Strategy over at Janice Henderson, kicking us off to the close here on this Friday afternoon, the final trading day of the month of May, with stocks on the back foot despite a relatively strong month. As we move forward here on the big program, we're going to focus on the macro uncertainty and we're going to focus on the AI trade, a conversation up ahead with the CEO of NetApp.
Meanwhile, Bank of America says one company could see massive momentum even in this economy, and that's Netflix. Jessica Reif-Ehrlich, senior media and entertainment analyst at B of A, joins us to break down her recent price target increase on that stock.
And we're going to get the skinny on whether the wellness and beauty industry can actually weather the current economic climate. Lauren Bostic, no relation, the founder of the beauty brand The Cine Confidential. She's going to be joining us in the next hour. You don't want to miss that. This is The Close on Bloomberg.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
Several of today's data releases paint a picture of the U.S. consumer tapping the brakes in April. Inflation-adjusted personal spending slowed down to a gain of just 0.1% after increasing 0.7% in March. While imports, they slumped almost 20%, leading to a narrowing in the U.S. merchandise trade deficit in April. Here now to contextualize what all of this data signals is Jennifer Lee, senior economist and managing director with BMO Capital Markets. Jennifer, great to speak with you. Is the hard data starting to show the weakness that the soft data had been really signaling for the past couple of weeks?
Hi, and thank you very much for having me on today. I'm going to say no. This is another reason why one can never look at one piece of data and just make assumptions on that, and especially now when things are very noisy. I think we have to look at all the data now with sort of like a big grain of salt. We saw, for example, as you mentioned, the trade data, record plunge in imports, but that's because we saw a huge jump back in January and in March as well, where everyone was like front loading, getting as much stuff as they can, when they can, while it's available, and while the prices were still at a reasonable level. So this is just some give back that we saw in earlier this year. So I'm not too concerned about it as well. And then, of course, the personal income numbers we saw. Yes, real spending was up only 0.1%, but that followed a 0.7% jump in the prior month. The fact that they still managed to rise, I think, was quite noteworthy. And if anything, it shows, I think, the U.S. economy overall, and I say this now, seems fairly resilient given all of the headwinds that it still faces, but we're still moving along.
Yeah, we're still moving along. And I guess that resilience also shows up in the fact that inflation has not picked up in any meaningful way because of all the tariffs, threats and tariff impositions. Why is that, Jennifer? Are we at a point where we can say that we're safe on the inflation front?
Not yet. Actually, that's a great question, and I don't know if I have a complete answer to that. I mean, I actually was one of the people that thought that we're going to see a big jump in inflation, and maybe it's because we haven't seen a lengthy period of tariffs just yet, and there are also, other ways potentially of getting around it. So a lot of companies, for what I understand, have actually again been front loading, so they got everything at a lower rate, so they're not exactly pushing through the prices at a fast pace just yet. So we're going to have to see how this, again, unfolds over the next few months. Now, given the fact that we have this new 90-day pause, so there are 3 dates that we have to think about. Okay, July 8th, July 9th, and August 11th. So those are the end dates of all these pauses for potential tariffs between the U.S. and China, U.S. and EU, reciprocal tariffs, whether or not they're legal or not, that's another story. But so you're going to probably see a lot of front loading, which means that the data now are going to be a lot noisier.
Yeah.
So we're going to see how this plays out, see what happens after those dates, and see how, again, the economy reacts.
With regards to just the idea of consumer spending holding up, I am curious about how that folds into the labor market. We get another jobs report next Friday, and I know there's been a lot of talk about the resiliency we're seeing there. And I know a lot of the sentiment and the survey data does seem to have a direct link to the employment picture, and more importantly, how consumers view their job security.
Absolutely. I mean, we're still seeing job growth overall, and things are slowing, and that's, to be completely expected. But the jobless rate is still fairly low at just, over 4%. We still have, over 7 million jobs available out there that are still open. They're still available to be filled. And that, I think, is also critical. Employers, as we've seen in some of the ISM surveys, have noted that they have cooled the hiring, but they're not letting go of anyone just yet. So I think that's important to note. And it's important to note that wages and salaries are still rising at a steady, I think it was like 0.5% for 3 months in a row. As long as consumers have a job, have a steady income, they're putting a little bit aside for a rainy day, which we saw with the uptick in the savings rate. I think it's very key for the outlook. And they don't have to spend it all at once, and that's not a bad thing. As long as they have enough and they're comfortable to spend later, I think that's a good thing. And this is what's helping keep the U.S. consumer resilient for now.
With regards to the stability of the economy going forward, and I know we focus a lot just on what consumers are spending, how trade, imports, exports factor into that. There are a lot of sort of other elements of, let's just say, foreign policy right now in this country that we know potentially could have a drag, whether that, of course, is what's going on with the universities and the blocking of foreign students. That has economic impact, whether it's farmers not necessarily being able to get the labor that they need for the upcoming harvest season. That has an economic impact. Is that something that you've started to try to model, or is it too early?
I think it's difficult to model because a lot of this, again, is just talk. We've seen some of it play out. But for example, when you're looking at some of the cutbacks in the public sector, and of course, at the beginning, it would be like, okay, so job growth is going to slow meaningfully because of all the cutbacks in the public sector. We saw people reportedly getting the pink slip and saying they're gone, and then another letter following up saying, please come back. So much uncertainty, again, because of that, and I think that's one factor that could potentially and probably is starting to hold back consumer spending a little bit. We're not sure whether or not we have a job in the next few months, especially in the public sector. Hold off, put a little aside for the rainy day, and let's just see what happens.
Jennifer, you're joining us from Toronto, so you're away from the groupthink that tends to set in when you're all in one big city like New York. I'm wondering, from your corner in Canada, what you see differently about the data that perhaps your peers in the U.S. don't necessarily see.
So we might be, and maybe I should speak on behalf of myself, but sometimes I'm a bit hesitant to believe everything I see, and this is why I always say that we have to take a handful of months, at least the last few months, roll it all into a 3 or 4 month moving average to see again what the trend is. But at the same time, there's something to be said about being on the ground in New York City, as you say, or California, to see what you're seeing. At the same time, the surveys mean a lot as well. We're all looking at the same surveys. We're all reading the same respondents from the survey, from those participating in the survey. And I think it shows, broadly speaking, that the U.S. economy is still continuing to hold up. It's just going to depend on how all these policies play out, whether or not they can play out. Again, tariffs, whether or not they're legal or not. We're going to see how that plays out. All
right, Jennifer, great stuff. Jennifer Lee, Senior Economist and Managing Director with BMO Capital Markets. And, of course, next week we do get a slew of economic data, hard data, if you will, the ISM, as well as S&P PMIs, and, of course, that big jobs report on Friday. I think we get durable goods and a few other things in between.
It's the culmination of a lot of jobs reports in between, the more high-frequency ones. And, of course, so far, the data seems to show the U.S. economy holding up much better than anyone had anticipated.
All right, we turn back to the public markets here as we count you down to the closing bells. And we're going to take a look at actually one of the best performing stocks of the year. It's Netflix. We're going to talk to Jessica Reif-Ehrlich, Senior Media and Entertainment Analyst over at BofA. She just upgraded her price target in a big way. That's coming up next here on The Close on Bloomberg.
Progress never stops. Neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
All right, let's get right to our top calls. Big movers on the back of analyst recommendations. And we start off today with Airbnb. Truist cutting its stay short, downgrading to sell from hold, trimming the price target to 106 from 112. The analyst says, quote, soft summer leisure trends, both here in the U.S. and Europe, not being fully anticipated by investors. Investors, though, shrugging it off. The shares fractionally higher on the day, and the shares, we should note out, still moving higher on the week and on the month. Rockwell Automation up next. An upgrade over at Barclays to overweight and a price target boost to 350 from 283. Barclays saying that the maker of industrial sensors will show an improvement alongside a rebound in factory orders for new automation equipment. Those shares headed towards their best month since July of 2022. And last up, BRP, the Canadian maker of Sea-Doo watercraft, seeing a wave of analyst upgrades after its earnings yesterday, including from Stifel. Stifel upgrading to hold, increasing the price target to 68 Canadian bucks, up from 49. Stifel saying that the company is on its way back to growth mode. The share is growing by almost 10% here on the day, headed for its best month since April of 2020. Another big performer out there in the marketplace is Netflix, one of the best performers year to date among large cap names, trading at a record high today. And Bank of America sees room to run, raising its price target to $14.90 from $11.75, implying more than a 20% upside over the next 12 months. Unmatched scale and streaming. That's a big part of that call, and the analyst behind it joins us now. Jessica Reif-Ehrlich, senior media and entertainment analyst over at BofA Securities. All right, this has been, to me at least, it was kind of a surprise kind of stealth rally in these shares, but I'm starting to get it. Looking at these past couple of earnings reports, I'm curious, Jessica, as what you see the growth trajectory for the next couple of earnings reports and beyond.
Yeah, I mean, it has been, as you said, it's been an amazing performance of 33, almost 35% year to date. But we see a lot of drivers for it to continue to outperform. There's clearly room on subscriber growth globally. But the really big driver will be advertising over the next, call it 5 years plus. This is a revenue driver that they have not really had before. They started in Canada. They just introduced the U.S. in April, and they have 10 more markets coming online within the next few weeks. So those 12 markets represent 85% of global advertising revenue. Also, more than 50% of new subs are coming in on the AVOD or advertising tier. So they're scaling up. They clearly have content that people are watching. So they're scaling up. They have engagement. They have more viewers, and they're innovative. And it's a completely new business. So regardless of whether the advertising market is strong or tepid, this is incremental.
It's incremental. I get what you're saying, but in looking at your new price target, $14.90 would represent a 24% jump from current levels. What's going to be the catalyst that gets us to that point? Because it's not a steady climb up at that point. You're talking about jump conditions.
Well, basically, it's Netflix's current multiple on 25 just rolled forward a year. So it's a kind of I'd say rich multiple at 40 times, but we believe that the company, the risk is to the upside because you have a new business in advertising, which will double this year, granted from a low base, but should grow. They're only beginning to scale up in second half 25.
Yeah.
And 26, it really scales. And then, there's just, it's pricing, it's sellout. It's more people, more engagement. And so but what drives engagement? It's content.
Yeah.
Normally, as an analyst who's followed media for decades, I'd say it's really hard to predict what shows or what movies will do well.
Yeah.
But in this case, that second half will be strong because they have 3 of the biggest shows ever coming back. They have the final
Squid Game, right?
They have the final season of Squid Games. They have second season of Wednesday. And then they have things like Bridgerton and Emily in Paris coming back, which are highly popular. So,
what about Happy Gilmore? What about Happy Gilmore 2, Jessica? I mean, that to me, that is Happy Gilmore 1 is a classic. Happy Gilmore 2, I feel should be in the pantheon of the greatest movies ever made.
Exactly what I don't predict. Unknown, so I won't go there. Could do great, could not. I just don't know.
All right, Jessica, thank you so much for joining us. Jessica Reif-Ehrlich, senior media and entertainment analyst with BofA Securities. What do you know about Happy Gilmore 2 that the rest of us don't know?
I don't know, but I love Happy Gilmore 1. And, I go in with pretty low expectations for any Adam Sandler movie. So it's like, you just go in to laugh. And, I like potty humor.
I feel like expectations are pretty high just based on Happy Gilmore's opening montage alone.
I think it's going to be fantastic. And, it'll keep me tethered to the Netflix platform, at least for a few more months.
I know, and you don't even watch any TV either,
so
that's
nothing.
The amazing thing.
No.
All right, coming up, we've got a conversation with George Carrion.
I watch this show. So.
He is CEO of NetApp to discuss the company's latest earnings results and how AI is transforming his business. This is The Close on Bloomberg.
.3:30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostic.
And I'm Scarlett Fu. And earnings season is winding down. I mean, we're at the tail end with retailers all but done. But we do have some big ones next week.
Yeah, there's still kind of one big one, and that's Broadcom. I mean, NVIDIA, of course, was really the capstone here. And everyone was talking about the AI trade, how much juice was left in that. NVIDIA, I think, gave us a little hope that maybe it is. Been here for Broadcom, obviously, a chip maker, but they make a lot of stuff that, of course, is part of that AI ecosystem. And we've heard from a few other companies also in that ecosystem. And it's been a mixed bag, but overall, it seems to suggest that there's still growth there.
Yeah, and in fact, analysts are looking for Broadcom semiconductor sales growth to reach a 2-year high on the back of that AI computing demand. So we'll see how that all shakes out. When it comes to technology, there's that big divide between hardware and software. NetApp is a company that offers both hardware and software-based storage solutions to companies overall. And its CEO, George Kurian, joins us now. George, thank you so much for joining us on Bloomberg Markets, The Close.
Thank you for having me.
So,
good afternoon.
Good afternoon. Your latest results, both for the quarter that ended and for the full year outlook, suggest that companies are being fairly cautious in their IT spending. By contrast, I'm wondering how much conviction they are showing when it comes to their adoption and their spending on their AI build out.
We just completed a record year across every element of our P&L, from top line to bottom line to earnings per share. And it was powered by the growth of our big bets. Our all-flash portfolio grew well ahead of the market. Our cloud portfolio also grew strongly, 44% year on year. And our AI infrastructure solutions grew 5-fold year over year. We are seeing the shift in the AI market from getting ready using technologies to train AI models to now applying those AI models to drive business impact. And that's what powered our record quarter and year.
When it comes to the spending on IT by your clients overall, though, I'm wondering if you could share a little more color on that. Clearly, they want to put their money to the highest impact to get the most effect. But I'm wondering, are they delaying their IT spending, or are they actively slashing their IT budgets overall?
We saw strength in our business in North America and in Asia Pacific. We saw a note of caution in U.S. public sector, particularly in the federal segment. And we saw a hint of caution in the large manufacturing and export-based economies in Europe. These are primarily related to some of the macroeconomic uncertainty that exists in the market.
How much, though, I mean, when we talk about, George, the exposure to macro conditions and the idea that a lot of CapEx spending, particularly when it comes to AI and AI adjacent projects, that spending seems to be much more structural and much more long term. How much can you count on that, though, over the next few months?
Within our business, we saw the strategic projects like AI projects, cloud transformation, cybersecurity continue to get priority even in a relatively muted spending environment.
So when we get to this idea, George, of the expansion that we're seeing in that space, and to a certain extent, and we, just to be fair, we should point out there are some companies that have either pulled back or at least put on pause any increases in spending. But overall, when you talk about the hiring of CIOs, when you talk about the migration to the cloud for a lot of these projects, I do just wonder where NetApp fits into that broader ecosystem.
Yeah, AI is a combination of chips, semiconductors like NVIDIA's, large language models, and data. And we are the data part of the AI market. We hold the largest amount of corporate data in the world. And what clients depend on us is to use that data with these large language models so that they can apply AI to their business. And that's where we're seeing really strong growth.
Thank you for explaining that. You mentioned your customers, including in the public sector, especially at the federal level, as well as manufacturing companies in Europe, are the ones that are showing a bit of caution. I see also that you have universities as your client base as well. What does that look like, given the pressure that a lot of schools are now under with the pullback on government funding, in some instances in the U.S., and I'm sure in other parts of the world, a willingness to spend because they have a once-in-a-lifetime opportunity to gain market share?
It hasn't rolled through the university system yet. I think many of our clients still have grant monies left over that they're using. We'll have to wait and see what the impact of some of the pullbacks on, government research funding has over time.
Understood. I'm also looking at your M&A profile on the Bloomberg terminal. That's the BUYP function here on the Bloomberg. And it shows that it's been a while since you made any acquisitions. The last one I see here is from 2022. What's your strategy when it comes to M&A?
We do small tuck-ins that help bring more value to our platform. We have the world's best data infrastructure platform, which we have built over many years, and we buy tuck-ins like, for example, enhancing the cybersecurity of our platform to improve the privacy and governance capabilities in our platform. We don't do large adjacent market acquisitions.
All right. So what's kind of the future, though, long term, George? And I mean this not so much just in the context of acquisitions and things, but we've talked a lot on this program about how challenging the environment is. We're obviously going through some huge geopolitical shifts. We're going through huge industrial shifts as well. And we talk about this idea of what it takes to be a CEO in this environment, the idea that you're not just a manager, you're not just a visionary, you're to a certain extent a diplomat, if not a babysitter. I am curious how you hold up in this environment on a personal level, and whether, and forgive me for phrasing it like this, whether this is the job you signed up for.
I think you have to build resilience into your business system and your organization and to yourself. We've done that over many years. We, for example, struck joint ventures to give us access to markets that are less accessible to American firms. We have built resilience into our supply chains so that we are not exposed significantly at all to these tariff situations. And we've built capabilities in our organization to remain agile, to operate as one team in such an environment. And then personally, I think, listen, you just have to be, balanced. When you have a great year like we did, you got to stay humble and focused. And then when times are tough, you got to work on how you can do better.
All right, George, we're going to have to leave it there. Really appreciate you taking time for us. Give my best to Pamela. George Corian is the NetApp CEO on the heels of that company's earnings just last night. When we come back, we're going to pivot from tech and back to consumer spending. Shares are red robin, having a phenomenal day after reporting earnings that outperformed expectations. We're going to look ahead to some of the big earnings reports coming out of, a few other companies in the restaurant space as part of our Stock of the Hour. That's coming up next here on The Close on Bloomberg.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin in Washington, where President Donald Trump has been working the phones and social media trying to get Republicans in the Senate behind his multi-trillion-dollar tax and spending cut bill. The legislation passed the House by just one vote last month. The president can afford to lose no more than 3 votes in the Senate. Republican leaders plan to make many of the temporary tax cuts in the House bill permanent. North Dakota Republican Kevin Cramer says that will be key.
The biggest piece of the Tax Cuts and Jobs Act from 2017 that we need to fix is to make those tax cuts permanent. Those are pro-growth tax cuts, and if we want to make a dynamic economy even more dynamic, I think that's got to be sort of the foundation of it all.
Republican Senator Kevin Cramer spoke on Bloomberg's Balance of Power, but extending those tax cuts could put fiscal hawks at odds with moderate Republicans who are concerned about the bill's cuts to Medicaid, which could end coverage for about 7.7 million Americans. President Trump is pushing for the bill to reach his desk by the 4th of July, but any changes in the Senate would mean the House would have to take up the bill again.
Nathan, we may soon see the impact of President Trump's trade war on the global economy, and we get the details with Bloomberg's John Tucker. John, good morning.
And good morning, Karen. The Organization for Economic Cooperation and Development has slashed its annual global growth forecast. And it says the United States will be especially hard hit. It places the blame squarely on U.S. tariffs. The OECD downgraded its 2025 growth forecast for the U.S. from 2.2% to 1.6%. And they say the world's biggest economy is expected to slow further next year to 1.5%. This is a club of 38 rich nations. It says the combination of trade barriers and uncertainty are hitting confidence and holding back investment, while also warning that protectionism is adding to inflationary pressures. And now for the U.S., the OECD says curbs on immigration and a sizable reduction in the federal workforce add to the trade-related drag on the economy. It also cautioned that the budget deficit will expand further as the impact of weaker economic activity will more than offset spending cuts and any revenues from tariffs. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thanks. We do have some developments on the trade wars this morning. The White House says President Trump and Chinese President Xi Jinping are likely to speak this week. Now, Beijing has not commented on the prospect of a direct conversation, but we get more from Bloomberg News senior editor Bill Ferries.
It's not clear to me who's going to blink first here in this battle. When you talk about the trade side, countries now know that there's a chance that some of Trump's tariffs aren't even legal. The courts have ruled against it. We'll wait and see how that plays out. But the president's leverage, I think, has shrunk over the last week or 2 weeks or so. And I think a lot of his adversaries and friends who are negotiating over tariffs know that.
Bloomberg's Bill Ferry says Washington and Beijing have traded accusations they violated the terms of last month's broad agreement that saw both sides reduce tariffs from astronomical highs.
Well, Nathan, a former White House official says any potential trade deal between the world's top 2 economies hinges on Donald Trump and Xi Jinping overcoming core differences in their negotiation styles. We caught up with former acting White House Chief of Staff Mick Mulvaney.
Trump wants to talk at the very highest levels. That's not always how the Chinese want to do business, and I'd be curious to see if they're able to make any headway. Trump doesn't want to go through the back channels. He doesn't want to go through the ordinary course of business. That's never been his style as a leader, being in business or in his first term in office. He wants to talk to the principal. He wants to talk to President Xi himself.
And former acting White House Chief of Staff Mick Mulvaney also served as President Trump's budget director during his first term.
Well, while deals with China and the European Union prove elusive, Karen, Commerce Secretary Howard Lutnick says he expects the U.S. and India to strike a trade agreement before higher tariffs kick in on July 9th. Lutnick spoke at the U.S.-India Strategic Partnership Forum in Washington.
Earlier countries get a better deal. That's the way it is. So those who come in, July 4th to July 9th, there's just going to be a pile. Right? But those who are earlier, and I think India is trying hard to be one of the earlier countries, which I appreciate.
Commerce Secretary Howard Lutnick says both countries are discussing bringing their tariff rates down to a reasonable level. He says President Trump's strong personal relationship with Indian Prime Minister Narendra Modi has made an easier path to trade negotiations.
Now, Nathan, to the latest on efforts to end the war in Ukraine. Russia and Ukraine held a second round of talks in Istanbul, but failed to reach a peace agreement. The two sides did lay the groundwork for a new prisoner swap. We get more from Bloomberg Russian economics and government editor Greg Sullivan.
The prisoner exchange was the biggest element that came out of this. Obviously, there was some talk about a ceasefire, and both sides did exchange what they called memorandums outlining what they need to reach either a temporary ceasefire or a full peace. But that was not met at this meeting. They instead exchanged these proposals, agreed to study them, and the big thing that came out was an agreement to prepare the groundwork for a prisoner exchange. Now, the prisoners that they agreed to exchange are the heavily wounded, those that are young under the age of 25, as well as some war dead.
And Bloomberg's Greg Sullivan says Russia presented peace proposals that include Ukraine surrendering control of territory in 4 partially occupied regions, while Ukraine demanded an unconditional truce and proposed another meeting later this month. Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. An NLCS rematch in Los Angeles. Shohei Ohtani hit his 23rd home run, but the Mets beat the Dodgers 4-3 in 10 innings. Surprising news for the Detroit Lions. Their Pro Bowl center, Frank Ragnow, retiring at the age of 29 after 7 years in the NFL. They'll start the quarterfinals today at the French Open. American Tommy Paul plays the last match of the day. He takes on the defending champion Carlos Alcaraz, and other American Francis Tiafoe plays Lorenzo Musetti. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
Today, peace talks between Russia and Ukraine in Istanbul amid escalating war.
What we know about the attack in Colorado at a demonstration to remember the Israeli hostages who remain in Gaza. And the U.S. Senate takes up Trump's big, beautiful bill.
It's Monday, June 2nd. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in Liverpool.
And I'm Christopher Waljasper in Chicago.
First to the war in Ukraine and a sharp ramping up of fighting. With weekend drone battles coming ahead of a fresh set of direct peace talks beginning today in Istanbul. Our reporter Max Hunder is in Kiev.
You had the war's largest Russian drone attack on Ukraine. Almost 480 drones launched by Russia. Ukraine shot most of them down, but that's an incredible number. And then we got from a Ukrainian security official that the Ukrainian domestic intelligence had, they said, conducted this huge drone attack where they simultaneously attacked 4 Russian air bases. The furthest is, I think, over 4,000 kilometers from Ukraine. This is way further than anything Ukraine's been able to hit before. So we initially wondered, how on earth is this possible? And we soon got an answer from our source, which is that these drones were hidden over the course of a year and a half. Ukraine, which snuck them into Russia, hid them in the roofs of wooden sheds. And then these roofs sort of retracted automatically as they were being transported on trucks and essentially just took off. Then dozens of these drones then zoomed into Russian strategic bombers, which were thousands of kilometers away from Ukraine and thought presumably they were rather safe from Ukrainian attack.
And with all this as a backdrop, what can we expect from this round of negotiations?
What Ukraine wants to see is a 30-day full ceasefire, as well as the release of all prisoners of war on both sides, and the release of the children that Russia essentially took away from occupied areas of Ukraine. Ukraine says that it wants to see the current front line as the starting point for negotiations, and it also wants to ensure that all Russian territorial gains in Ukraine since February 2014, when Russia annexed Crimea illegally, Ukraine basically is keen for none of that, as well as the current occupation in this war to be recognized. Russia legally recognizes 4 Ukrainian provinces, all of which Russia mostly controls but does not fully control. Russia sees those regions as fully its own, and I think Ukraine has perhaps included this point to push against that Russian line.
Now to an election across the border from Ukraine that Kyiv and much of Europe has been watching closely. Nationalist opposition candidate Karol Nawrocki has won Poland's presidential election. Nawrocki won the backing of US President Donald Trump for his bid for Poland's top job. He campaigned on a promise to make sure economic and social policies favour Poles over other nationalities, including refugees from neighbouring Ukraine. His win is a blow to the reform agenda of the pro-European government.
An attack in Boulder, Colorado on Sunday is being investigated as a hate crime after a man attacked a crowd demonstrating and calling for the release of the remaining Israeli hostages in Gaza.
Authorities have named the suspect as Mohammed Suleiman, who was hospitalized shortly after the attack. Alexandra Alper's been covering the latest.
So the details are still emerging, but what we know is that there is a regular demonstration of people remembering the Israeli hostages that are still in Gaza, and it looks like a man threw an incendiary device into this crowd of people. An eyewitness saw about 4 women sitting or lying down. One of them had burns that appeared so bad that it looked like she had been wrapped in a flag, perhaps to put out some of the burns. The man is in custody now, and we're told that he did yell "Free Palestine" during the attack, and authorities are now investigating it as a potential hate crime. And it comes sort of amid heightened tensions in the United States over Israel's war in Gaza. We've seen both an increase in anti-Semitic hate crime as well as conservative groups led by President Donald Trump to brand pro-Palestinian protests as anti-Semitic, and to detain protesters of Israel's war in Gaza and cut off funding to universities that allowed for those protests.
To Gaza now, where there are conflicting reports over a Sunday incident. According to the Gazan Health Ministry, more than 30 Palestinians were killed near a food distribution site, with witnesses reporting that Israeli soldiers fired on people trying to collect food. Israel denies the allegation. The US-based Gaza Humanitarian Foundation says food was distributed in Rafah without any incidents. The ICRC says its field hospital in Rafah received almost 200 casualties with gunshot or shrapnel wounds, all of whom said they've been trying to reach an aid site.
And OPEC Plus is increasing its oil output in July by 411,000 barrels a day as it attempts to wrestle back market share and punish overproducers. The group of oil-producing nations has been increasing production since April. It tripled its output in May and plans to continue at that pace through July. The Republican-led Senate is back in session today, and one of its first priorities will be to tackle President Donald Trump's tax and spending bill. As it winds its way through the upper chamber, the bill is likely to change drastically, and whether it passes at all is still an open question. Trump has promised his tax cuts, which will add trillions to the deficit, will benefit working-class Americans. But analysts say some of the more popular provisions, like tax breaks on tips, actually have few upsides for low-income Americans. Our reporter Andy Sullivan is in Washington, D.C.
Problem is, the tax break as written wouldn't actually help a lot of people, those bartenders, hairdressers, people like that who rely on tipped income. And that's because a lot of these people basically do not make enough money to pay federal taxes to begin with. So a tax break wouldn't help them. You've got to make money above a certain threshold. You have to declare it on your taxes. You've got to fill out forms, etc. And that's sort of broadly true of the tax bill as a whole. It expands a number of other tax breaks that are aimed at lower income folks. a tax break for if you have kids, for example, or if you're working and not earning that much money. But it adds a lot of new provisions and red tape. For example, it requires people to provide a social security number. That means fewer people would qualify. There's more sort of administrative barriers and hurdles to claiming these benefits that a lot of people might just throw up their hands and say, sorry, I can't do this. At the same time, it's getting harder to claim these benefits, Medicaid and SNAP, that help working people cover their bills, get health coverage, etc. Those programs are being tightened. It's harder to qualify. Millions of few people will benefit from them in years to come. So at the end of the day, people might be paying more money out of pocket for health care, for groceries, and that would more than offset any tax savings they might get from the bill, according to several analyses we've looked at.
Today's recommended read is on how the Trump administration's cuts threaten safety training for some of America's most dangerous jobs. Based on hours of interviews, our reporting shows that the safety trainings aimed at fishermen, loggers, farmers, and other workers could be scaled back or wound down entirely as soon as July. You can read more by following the link in the pod description.
For more on any of the
Today, the Dutch Musk returns his focus to his businesses. Laura Oakes in Liverpool. First to some breaking news in the Netherlands, where far-right Dutch leader Geert Wilders has decided to leave the coalition, toppling the right-wing government. Wilders says his coalition partners were not willing to embrace his ideas on halting asylum migration. His surprise move will likely lead to new elections. In Istanbul, Russia has set out punitive terms for peace with Ukraine, including Kiev giving up big new chunks of territory and limiting the size of its army. That's according to a memo reported by Russian media. Ukraine has repeatedly rejected these Russian conditions. Both sides have agreed to exchange more prisoners of war. The man charged with tossing gasoline bombs at a pro-Israeli rally in Boulder, Colorado, planned his attack for a year. That's according to prosecutors. Mohammed Sabri Soliman told investigators that he wanted to, quote, kill all Zionist people, and used Molotov cocktails instead of a gun because his non-citizen status blocked him from buying one. The 45-year-old Egyptian national has been charged with a federal hate crime, as well as attempted murder. And in Gaza, dozens of Palestinians have been killed by Israeli fire near a food distribution site in the southern Gaza Strip. That's according to local health authorities. The Israeli military says its forces opened fire on a group who left the designated access routes near the distribution centre. Iran looks set to reject a US proposal to end their nuclear dispute. That's according to an Iranian diplomat who says it's a non-starter that doesn't take into account Tehran's interests. It comes on the heels of a damning International Atomic Energy Agency out past secret nuclear activities in Iran at 3 locations. The confidential report seen by Reuters paves the way for a push by several Western nations for the board to declare Iran in violation of its non-proliferation obligations. Francois Murphy covers the IAEA.
This latest report does kind of bring this to a head, particularly by mentioning the fact that there were various activities conducted at different sites involving nuclear material that Iran should have declared to the IAEA. And the United States, Britain, France, and Germany are now planning to propose another resolution against Iran at the board, which would declare Iran in non-compliance with its safeguards obligations, which is something that the board hasn't declared in just under 20 years. So that's a really big step.
So what's Tehran saying about the report?
They've denounced the report itself, and they said they don't agree with the findings. One senior Iranian official was saying that Iran will accelerate its activities much along the lines of, what we've seen before. But for now, the big game, the 600-pound gorilla in the room is these talks between the United States and Iran, and everyone's really focused on seeing how those pan out. By the sound of it, it seems that there's movement towards letting Iran enrich on its soil. But again, it's a complicated picture, and we have to see what comes of it.
Staff at the Federal Emergency Management Agency have been left baffled after the head of the agency said he had not been aware that the country has a hurricane season. That's according to 4 sources familiar with the situation. The remark was made during a briefing by David Richardson, who has led FEMA since early May. It was not clear to staff whether he meant it literally, as a joke, or in some other context. And South Koreans are at the polls voting for a new president as we record. The election comes after 6 months of turmoil in the country, triggered by the shock imposition of martial law by the former leader. And you can follow the latest from the election on Reuters.com and the Reuters app, and check out our special pod episode on how gender has proved a big divide in Gen Z voters in South Korea and worldwide. We'll put a link in today's pod description. On to tariffs now, and what's your best offer? That's what a letter drafted by the White House shows the Trump administration wants countries to provide on trade negotiations by Wednesday. The document suggests an urgency within the administration to complete deals against its own tight deadline. Jarrett Renshaw has the story. So Jarrett, what is this letter asking for exactly?
Yeah, it's asking for countries. There's like a list of about 7 bullet points of what they're asking for. Tariff rates, purchases of agricultural, industrial products, how they would resolve some non-tariff measures, and then something called country-specific commitments, which is kind of like, what are you going to do for us? Are you going to make a big purchase of corn? Are you going to make a big purchase of soybeans? Something that can really entice the U.S. to agree to the terms.
And so what does this tell us about where the White House is in negotiations?
Sure, you could imagine negotiating with dozens of countries at one time could be confusing, unwieldy, and what they're doing is trying to streamline it, saying, hey, listen, we've made some progress. Let's lay our cards on the table. You show us your best offer, and they'll do that with multiple countries all at once. And I think this ultimately shows there's a sense of urgency to get these things done well ahead of this July 8th deadline. Thus far, the White House has only inked a deal with the United Kingdom. And there's been some critics who say that's more of a framework of a deal than a deal per se. Certainly not 120 deals, 120 days. But I think he'll be judged by what happens after July 8th and what all these deals look like. And if he fails to deliver as promised, I think he'll see a lot of criticism.
As Elon Musk turns his focus back to his business dealings after several months helming Trump's Department of Government Efficiency, it's still unclear how his time cutting government spending might impact the fate of his companies. Our global automotive editor, Brian Teveno, has been looking into what this means for Tesla.
So I think a lot of investors will be comforted by the fact that he's spending less time in Washington and more time at Tesla, which is, of course, the source of the vast majority of the wealth of the world's richest man. And the stock value has historically been tied up in the leadership of Musk, although he's got quite a few companies to run, right? He's not only got Tesla, but he's got SpaceX and X, the social media platform, XAI, and Neuralink, the brain chip company. So his attention remains divided between all these firms.
So how is Musk viewed in the business community right now?
I think the question of whether Musk is an asset to Tesla is becoming more and more of an intense debate, because historically he certainly has been seen as the unquestioned leader of Tesla, a sort of genius behind many of its previous accomplishments, including selling the first real mass market EVs. At this point, about 75 or 80% of Tesla's soaring stock value as the world's most valuable automaker is tied up in promises of products that Musk has been talking about for years but has yet to deliver. At the same time, Musk's increasingly controversial social media posting has alienated a lot of Tesla's traditional customers who tend to be politically liberal and focused on environmental concerns.
So what's in the near-term pipeline for Tesla then?
I think that's part of Tesla's big problem is it's unclear what it has in the pipeline. Last year, we exclusively reported that they had ended a project that was highly anticipated to build an all-new $25,000 EV. Instead, they seem to be now planning to produce more affordable Teslas that are essentially stripped-down versions of their current cars. So without something exciting on the horizon, it could face some trouble with both sales and with sustaining its very high stock value.
And for today's recommended read, an exclusive out of Syria. In democracies worldwide, a political gender war is intensifying among Gen Z voters. From Germany to South Korea to the US and UK, young men are increasingly drawn to right-wing politics, while their female peers lean left. And as they reach voting age, it's having an increasing impact in elections. So what's driving this chasm in the youth vote? In this special episode of Reuters World News, we investigate economic anxieties and online echo chambers and the starkly different futures young men and women are now voting for, as well as the potentially profound impact the divide could have on democracy. I'm your host, Tara Oakes in Liverpool. Lee Jong-min is a first-time voter. Getting ready to cast his ballot in South Korea's presidential elections on June 3rd. Young women are expected to lead a broad political backlash against the main Conservative Party, punishing it for months of chaos. Lee won't be joining them. Like angry, frustrated men in their 20s around the world, Lee is turning to the right. He says he'll vote for the right-wing Reform Party's candidate, Lee Jun-suk. The Reform Party has vowed to shut down the Minister of Gender Equality, an appealing issue for Lee, who says he particularly resents that only men have to do military service. The data is striking. In South Korea, almost 30% of young men aged 18 to 29 plan to back the Reform Party, compared with just 3% of young women. That's according to a Gallup Korea poll in May. The divergence shrinks for older age groups. So, what's happening? Soo-hyun Lee is a political economist at King's College London.
I believe Korean young men are angry and frustrated, and there are a few factors at play. But probably the most important thing is the economic insecurity they are experiencing. Good jobs are hard to find, and the competition for a good job is ever so fierce. And young men are increasingly believing that the economic insecurity is blocking them, preventing them from leading a normal life involving family formation and possibly having children.
She was speaking to our global managing editor for politics, economics and world news, Mark Bendai. Hi, Mark.
Hi, Tara.
So, Mark, we started off this episode in South Korea, where younger men, like first-time voter Lee, are being drawn to right-wing parties. Well, polling shows that almost half the women of his age want the left-wing Democratic Party candidate to win. But before we go elsewhere in the world, South Korea, like anywhere else, has its own particularities, right?
Indeed. I think South Korea is exhibit A for this trend, but it does have one particularity in particular, which is South Korea doesn't have a lot of immigration. It's negligible. So when young men are looking for scapegoats for what in some respects is a real, and they feel it is a real reversal of fortunes, especially compared to their fathers, they're blaming women. Many of them are buying into a narrative that women are basically being preferenced for jobs, for instance, which is one of the first steps in terms of meeting kind of the traditional expectations of a South Korean man, which is to not only get married and raise a family, but importantly, buy a home and get a decent job.
And those expectations, though, even though South Korea has its own issues, those resonate around the world with young men, right? Young men and women are polarizing politically around the world. What first drew your attention to this pattern, and why did you decide to explore it now?
Well, we noticed it in Germany in February. That's the number that really stood out all of a sudden. I think, it's well known that among Gen Z, there's a gender divide in terms of views, social views. But what we're really starting to see now, and particularly since the pandemic, is that this is playing out at the ballot box. And it was Germany that first kind of rang the bell. And so we decided, okay, let's have a look at elections and just see if this is a common thread that is being weaved throughout democracies worldwide. And the answer is, although it's a little qualified, is yes.
Yeah, it was definitely Germany's elections this year when it really hit me. I remember hearing a lot about how young people were behind the Anti-Immigrant Alternative for Germany, or AfD party, winning a record percentage of the vote. But when you see the data broken down, the gender polarization is really stark. 27% of men aged 18 to 24 voted for the AfD, while young women went to the other side of the political spectrum, voting 35% for the far-left Die Linke party. 18-year-old Molly Lynch was one of them.
The topics that I'm interested in, or I think that need to be addressed, things like climate change and just like general economic inequality. But I think the left, for me, addresses those issues more.
So, Mark, in your reporting, did you find any common threads that begin to explain this gender divide across different cultures?
Yes, I mean, I'm obviously not Gen Z, but so it surprised me, actually. I've grown up my whole life as a white male, being in a fairly privileged position. Just if you look at the numbers in terms of the gender pay gap, for instance, it's been very clear. What surprised me is actually men aged from about 18 to their late 20s, they are very clearly in some countries going backwards. And let's leave aside the narrative and the blame game, but just look at the numbers. So if you look at the UK, men are more likely to be neither in employment nor education. University enrollments, women are outpacing men. That's pretty clear in the United States and many other countries. So these are numbers that you wouldn't associate with my age group. Like I'm 60, right? This is not something that I'm used to seeing. So when you get to the narrative, though, that's when it gets messy, because particularly in the West, so white men who have had that privilege, these young men are not seeing life in the same way that their fathers and fathers' fathers have seen it. That's very interesting to me. But of course, we're talking about relative outcomes for young men relative to their Father's Day. It's still the case, of course, when you look more broadly, that the gender pay gap is still well in favour of men. It's just within this age group, it's starting to look a little different.
Yeah, I don't know if you're exposing your generation when you say Gen Z rather than Gen Z, or if that's a regional variation. But
I think that's an Australian thing, maybe, rather than
a generational thing.
A generational thing.
But let's stick and talk about men a bit. How true is it then that what does the data show about Gen Z men around the world faring worse than previous generations economically? You talk about their fathers, or what's been their grievance in, say, South Korea, where they say they're faring worse than their present female peers.
Well, Gen Z men feel left behind, and the data shows that in some respects, particularly relative to their father's generation, they are indeed going backwards. As Daryl Bricker, an Ipsos executive based in Toronto, told me, there are some real numbers which show that young men are just not making this up. There are actually numbers which explain why there is such anger amongst this age group of young men.
Men are not doing particularly well in the Western world these days. If you look at their ability to get started in life, they're much less likely to complete basic education. They're much less likely to complete post-secondary education than women are. They, on terms of wages, are not doing as well as women are at the same stage of their lives.
In South Korea, young men, for example, if you look at the gender pay gap, which is a good proxy for a lot of things, then young men, I think, are still doing better than young women. But if you look more broadly, say in France, I think Belgium in particular, young women are doing better. Their average hourly earnings are more than young men in that 20-something age group. But certainly in other parts of the world as well, you'll see this, particularly young men from, say, non-urban, sort of rural areas, those traditional manufacturing areas that, as we all know, have been in decline in the West. Now, that's where young men are going backwards, relatively speaking, compared to their fathers. I've got to keep saying that, not compared to young women in broad, but they are also buying into this narrative that it's immigration is to blame, diversity programs are to blame. That's why you're not being able to get a decent job. There are real facts on the ground in terms of the data which show that young men are in place going back relative to their fathers, and in some cases, but a few cases, are actually at a disadvantage relative to their female peers.
What are right-wing political parties promising young men that they seem to be finding appealing, and what's not winning over young women?
Well, look at Donald Trump. I mean, that's pretty clear. He's not only promised, but he's executing that promise to dismantle diversity programs. That does, looking at the polling numbers, appeal to young men. Perception is reality in politics, so it is an issue. It needs to be dealt with. You're starting to see a divide that will trouble or challenge democracies for years to come.
So are we seeing this uniformly across all communities of men, including men of colour?
Actually, it's a great question, and the answer is no. So if you look at the United States, it's one of the few that will break it down by community, including community of colour. You see white men and Hispanics. They, more and more of them have voted for Donald Trump at the last election in November. But if you look at black men and black women in that young age group, they both overwhelmingly voted for Kamala Harris. Now, I think it's a reasonable interpretation from the data that essentially young black men haven't felt this position of privilege that perhaps young white men, both in the United States and in other parts of the West, have felt. So I think that's very interesting that you're seeing it particularly among young men who have, for generations perhaps, felt this relative privilege over young women.
And you say perception is reality in politics, and we heard from voter Molly in Berlin, who attributes right-wing success among young men to what she calls propaganda.
A lot of young men are sort of falling for sort of more like sort of right-wing propaganda as well, because they feel upset, and I think they feel upset about the fact that they're like losing power, or they have the feeling that they're losing power, but it's actually only losing power over women.
So how much of the appeal for young men is about rhetoric and messaging, and where are they getting this language from?
When you get into the social media, the kind of what's called the manosphere, that's when it starts to get a little bit murky. The blame game starts, and the figures don't necessarily support the blame game. Daryl Bricker made a good point at one point. It's that, these young men are investing huge amounts of time in social media and podcasts.
Social media definitely plays an amplification role. So people who are feeling certain things that felt like they were alone can now find people who are like-minded and get together and create their own little echo chamber of conversation.
It's an echo chamber for these kind of narratives, but it's also an accelerator or a consolidator of this kind of division, because men are buying into this narrative. As I say, it's part of the blame game. They do feel left behind, and they want to know why that is. So the answer readily comes in social media. Oh, it's diversity programs. Oh, it's immigration. And, I think another pollster mentioned that there are broader issues at play here as well, which are fundamental fiscal social welfare policies, which can be used to address some of these young male grievances to the extent that they're justified. But that requires a kind of a consensus to deal with that. But what we're dealing with is an electorate that's polarised and a young generation that, as it matures, it doesn't look like it's going to come together necessarily. And if it continues to be polarised, that's when you're going to really struggle to deal with these divisions.
And we talked a lot about young men. If we go back to Molly, she voted for the left German party called Die Linke. What is it appealing for them, for young women? Are there any global themes we can see from this divergence on their end?
Yeah, I think, the pollsters tell me that young women have the same concerns as young men. For instance, the ability to get a decent job, not just a contract work from month to month, but a permanent job, the ability to afford housing. There are the same issues for young women as for young men. It's actually, they believe, a lot of them believe that left-wing or left-of-centre parties, they've got the policies to deal with this. And they feel, broadly, according to the polls, better off than their mothers, let's say, but still unhappy with their lot when it comes to some of these basic economic expectations. So they believe the left of centre has the policies to fix that. The men, though, the young men, they're buying into a completely different narrative and therefore policy mix. That is, crack down on immigration, get rid of diversity, that'll solve your problems. So the women and the men are touching on similar issues and grievances. It's just that they really part ways when it comes to the blame game and the political narrative.
And our reporting focuses on voting age, Gen Z. But there's been a lot of focus on the gender divide at even younger ages, right? Here in the UK, the TV drama Adolescence was incredibly popular and depicts this toxic online world where male insecurities can warp into even violence against the opposite sex. Do we have any projections as to how this polarization might play out as the years go on, or is it just a Gen Z issue?
Well, I think a Gen Z issue could become, an issue for older age groups as they mature. And if the core grievances are not resolved, then you'll have new first-time voters coming in and presumably ripe for right-wing and left-wing politicians to appeal to the grievances that they may have. And it also touches on expectations in society, which is why South Korea is so polarized, because young men still have very, very traditional expectations on them to get a job, decent job, get married, secure a home, start a family. That's objectively quite difficult now. So policies need to address that. The same applies to women, of course, but as I say, it's when the narrative, we're talking about men who, relatively speaking, have been able to do that in the past, and women who have had a completely different role in society and now are competing, I don't know if I could say equally, but more equally, as our German first-time voter pointed out, for jobs.
So how does it end?
Well, does it end, I think, is the question. If it doesn't, and we don't see this division being healed, then I think we're actually going to see more of these right-wing politicians and left-wing politicians appeal to these different gender voting bases. That's going to create a lot of friction continually for democracies. And even after Donald Trump leaves office at the end of his second term, we're likely to see this playing out. It won't be the death of the far right or the far left, presumably because you've got these really fundamental forces at work. And that's one possibility. So we'll see polarized politics continue, but more along perhaps gender than blue collar, white collar. That's a point that a couple of pollsters made to me. So yeah, if it doesn't end, we've seen polarized politics. We might be in for more of it. It's put best, I think, by Su-Yun Lee when she talked about the problems that this division poses for consensus and getting things done on really big issues in the future.
If the future generation is ever so divided along the line of gender and then refuse to engage with each other to build social consensus, I do not think we can successfully tackle these huge issues through big reforms and in these rich democracies in the East and the West. And remember, democracy also needs to deliver economic prosperity and social security to a certain level for people to be satisfied with democracy.
Thank you so much to Mark, as well as Soo-Hyun Lee and Daryl Bricker for their insight. Our podcast team includes Jonah Green, Gail Issa, Sharon Reich Garson, Alex Summer, David Spencer, Kim Vanell, and Christopher Wall Jasper. Our senior producers are me, Tara Oakes, and Carmel Crimmins. Lila De Kretzer is our executive producer. Josh Summer composes all the
इस क्रूड ऑयल में देखो सेलिंग में जो लोग हैं प्रॉफिट बुक कर सकते हैं, ठीक है। क्रूड ऑयल में जो लोग सेलिंग में हैं, अगर प्रॉफिट बुक करके निकलना चाहो निकल जाओ। बुक द प्रॉफिट इन क्रूड ऑयल एंड एग्जिट। वैसे हो सकता है थोड़ा सा नीचे और आ जाए, बट यहाँ 50-50 ऐसा चांसेस है। मार्केट कल से जब वो कल सेलिंग आई थी ना, उसके बाद बिल्कुल एक रेंज के अंदर चला गया। डेली टाइम फ्रेम पे या फिर थोड़ा सा हायर टाइम फ्रेम पे देखोगे 1 आवर में, तो साइडवेज लग रहा है कल से। दो पॉसिबिलिटी मुझे लग रही है नेक्स्ट प्रॉपर ट्रेड की हो सकती हैं। या तो प्राइस ऊपर आ जाए, ऊपर वाले एग्जैक्ट रेजिस्टेंस पे 5000। अगर ऊपर आता है तो आपका 5440 से 5460 के बीच में कहीं पर भी एक सेलिंग का ट्रेड प्लान रहेगा वापस ऊपर से। एंड अगर नीचे आता है तो फिर थोड़ा सा, क्योंकि यहाँ पर ना प्राइस थोड़ा सा, ये हमारा MCX में गैप अप हुआ था, तो वहाँ पर ऐसा कुछ एग्जैक्टली सपोर्ट है नहीं। बट वो फॉरेक्स में देखोगे तो वहाँ पर आपको एक सपोर्ट दिख जाएगा, बट वो सपोर्ट मार्केट मल्टीपल टाइम अब टेस्ट कर चुका है। फिर थोड़ा सा अगर नीचे ही आ जाए रीटेस्ट करने, वैसे तो कर चुका है एक बार, बट मुझे लग रहा है शायद एक बार और रीटेस्ट कर सकता है वहाँ पे 5290 के अराउंड या फिर 5200 के अराउंड। वहाँ उस एरिया के आसपास फिर से नहीं तो बाइंग का प्लान कर लेंगे, तो हो सकता है थोड़ा और गिर जाए या फिर अपर लेवल पे आए। क्योंकि यहाँ पर मल्टीपल टाइम टेस्ट हो चुका है लेवल, तो वो थोड़ा सा फिर सही नहीं रहता ट्रेड करने के लिए। बाकी देखते हैं वॉल्यूम आता है या नहीं आता, या फिर मार्केट ऐसे ही साइडवे चला जाता है इस लेवल पे। इंडियन मार्केट भी क्लोज हो चुका है ऑलरेडी। अभी और कोई नया ट्रेड नहीं है, ध्यान रखना। मैं वही कह रहा हूँ फॉरेक्स में, क्योंकि अर्ली मॉर्निंग 3:30 पे मार्केट ओपन हुआ था, तो वहाँ पर बना हुआ है सपोर्ट। एमसीएक्स में नहीं है, एमसीएक्स में सीधा गैप है वहाँ पे, तो थोड़ा सा प्राइस एक्शन अलग अलग हो जाता है एक्चुअली। बट देख लेंगे, मैं फॉरेक्स का चार्ट भी लगा रखा है मैंने। अगर फॉरेक्स के अकॉर्डिंग आ गया तो फॉरेक्स के अकॉर्डिंग ही ले लेंगे, कोई इशू नहीं है। बाकी मुझे लगता है वो होगा सेम ही जो एमसीएक्स में मुझे लग रहा है। थोड़ा सा ज़्यादा गिर जाएगा एक चार्ट में थोड़ी कम सेलिंग या फिर बाइंग सेलिंग आएगी इक्वल करने के लिए। ये तो फॉरेक्स चार्ट के अकॉर्डिंग थोड़ा चलना पड़ेगा क्रूड में, तो उसके अकॉर्डिंग थोड़ा और अगर डाउन आता है तो मेरे अकॉर्डिंग ज़्यादा बेटर रहेगा ट्रेड प्लान करने के लिए फ्रेश, रेदर देन डायरेक्टली अभी यहाँ पर बाई करें। मुझे लग नहीं रहा क्रूड ऑयल अभी ऊपर जाने के मूड में भी है कुछ। एक ब्रॉडर रेंज अपर लेवल की ओर बनाने की कोशिश मुझे लग रही है करने वाला है मार्केट। क्योंकि फॉरेक्स में भी देखोगे, एमसीएक्स में भी देखोगे, दोनों पे मुझे थोड़ा सा प्राइस एक्शन जिस हिसाब से वॉल्यूम डिस्ट्रीब्यूशन हो रहा है, बायर पुश तो कर रहे हैं अपसाइड की ओर, बट ऐसा नहीं कि ऊपर के सेलर निकल गए हैं। फॉरेक्स में भी देखोगे तो 63.45 63.50 इसके ऊपर जाने के चांसेस बड़े कम ही लगते हैं। ऊपर जा जरूर सकता है बट ऊपर से वापस सेलिंग आने के ही चांसेस लग रहे हैं $63 के अराउंड स्पेशली। क्रूड में मान के चलो मतलब वही 5440 460 मेजर रेजिस्टेंस है अभी भी। बाकी फॉरेक्स चार्ट अच्छा लग रहा है। फॉरेक्स चार्ट में काफ़ी अच्छे लेवल बने हैं बाइंग और सेलिंग दोनों के। नॉर्मली सेलिंग के तो रेजिस्टेंस ही हैं, बाइंग के लिए जो रेजिस्टेंस थे जिनका ब्रेकआउट हो गया था, दोज एक्ट लाइक एज अ सपोर्ट। तो लेट्स सी किस लेवल पे ये आता है, उसके हिसाब से, नहीं तो वापस बाइंग सेलिंग वापस करेंगे क्रूड में। अभी कोई नया ट्रेड नहीं है, ध्यान रखना क्रूड में। बाकी सेलर निकलना चाहो निकल जाओ। कोई अगर ट्रेल करना चाह रहा है तो 70% प्रॉफिट बुक करके रिमेनिंग क्वांटिटी का एसएल कॉस्ट पर रख के छोड़ दो। थोड़ा और गिरता है तो फिर $61.60 के आसपास और भी आ सकता है। बाकी बीच में एंट्री नहीं। ये एमसीएक्स में तो नहीं है, फॉरेक्स में ही है। ओके तो अगर मैं ये देखूं तो ये हो गया आपका। ओके तो इसको अगर मैं देखूं तो ये तो टेस्ट कर चुका है एक ही बार। ओ, नेचुरल गैस में नेचुरल गैस भी साइडवेज ही लग रहा है कुछ। थोड़ा नीचे आ जाता तो बाई कर लेते, एग्जैक्टली आया नहीं है लेवल पे। तो एग्जैक्टली थोड़ा सा नीचे और आएगा तो बाइंग का देखेंगे। सेलिंग के लिए एक सेकंड वेट कर लो सेलिंग के लिए। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, डोंट फॉरगेट टू लाइक द स्ट्रीम, कम ऑन, एंड सब्सक्राइब द चैनल. थोड़ा सा ऊपर आ जाए नेचुरल गैस तो एक सेलिंग का प्लान रखेंगे. नीचे बहुत दूर है, डाउन आएगा तो तब देखा जाएगा. एग्जैक्टली अगर आ जाता है लेवल पे डाउन साइड पे. देखो अगर ये थोड़ा सा ऊपर आता है, अगर नेचुरल गैस थोड़ा सा रह गया है तो वहां पर एसएल थोड़ा सा बड़ा रहेगा, तो क्वांटिटी कम रख लेना. नीचे आता है तो एसएल थोड़ा छोटा है बाइंग के वक्त, सेलिंग करते वक्त थोड़ा सा एसएल बड़ा हो जाएगा. Indices tumble on Tuesday on foreign outflow fears Adani drag. अडानी की कौन सी रिपोर्ट आई है? कुछ न्यूज़ में तो आया नहीं अडानी रिपोर्ट्स. Baseless, Adani Group deny reports of US probe into Iranian LPG link. Adani Enterprises highlighted that the LPG segment amounted to barely 1.46% of its total consolidation revenue. In 1962, Gautam Adani born in Ahmedabad, Gujarat. 78 dropped out from Gujarat University. 1981 managed Brothers Plastic Unit in Ahmedabad. 85 importing primary polymers for industries. 1988 founded Adani Export, now Adani Enterprises. 1994 obtained contract to manage Mundra Port. 96 founded Adani Power, largest private thermal power producer. 2006 entered power generation business. 2020 won world's largest solar bid worth $6 billion. Wow. Announced $70 billion investment in green energy business. Become Asia's richest person and third globally by Fortune. 2022 acquire Ambuja Cement and SEC for $10.5 billion. ओके ईरानियन गैस के लिए कुछ प्रोब चल रहा है शायद यूएस का सैंक्शन जो लगा रखे हैं यूएस ने ठीक है नेचुरल गैस थोड़ा सा अपसाइड आता है तो एक सेलिंग का प्लान जरूर रखेंगे बट थोड़ा ध्यान रखना वहाँ पर एसएल थोड़ा सा बड़ा हो सकता है तो ज़्यादा रिस्क मत लेना क्वांटिटी कम रख लेना या फिर और ऊपर आने का वेट करना बाकी वो पूरा ही रेजिस्टेंस जोन है तो कहीं से भी सेलिंग आ सकती है कोई ऐसा एग्जैक्टली एक लेवल नहीं है बी अवेयर ओके ये तो हो गया ऑलरेडी वन टू थ्री
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you've built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
We think it's going to be technology. We think it's going to be more your growth companies. If you look at the AI trade, it is a very robust, secular, US-centric trade. And what is the S&P 500? S&P 500 is a growth index, right? I've been talking to people, recently people have been talking to me about mid caps and small caps and so on and so forth. And I think eventually they can work, but you need the Fed to get in motion. You need the Fed to start cutting rates. But if you look at the broader market is really driven by growth in technology, and growth in technology is okay right now. Actually, not bad.
So what's the risk event for you?
I don't like this whole taco thing that's being thrown about, and I don't think it's on deaf ears, right? So Trump doesn't want to be seen as weak. He wants to be seen as strong. So does he go out of his way to say, no, that's not happening? Right? That's a concern, and that's a concern to other people. The other concern is, hey, can rates go higher? Sure, rates can go higher. But I think the real concern is what we've been talking about or implying. If you don't know, you know. If at the end of June, we still don't know what's happening when trade and tariff, then you have to start making some of those hard decisions. And that's the big risk. Because if you don't know, then I know that I need to start tightening the belt. I know I need to start bringing down costs. I know I need to start looking at labor, and that will start to cascade.
It's in June, so is the range getting a lot wider given the fact that you could have both of these things, especially given the Reuters report overnight talking about how there was a memo drafted to send out to all the trade partners today by the U.S. saying, hey, we want your best deals and we want them today.
Yeah, I think time is of the essence. Obviously, we've all seen what's happened with the VIX and volatility in the equity markets this year. This will not be a calm market. The market is expecting some sort of resolution or some sort of progress. If they don't get that progress and we go the opposite way and we start putting in more and more tariffs and not making progress, we're going to have a problem. So is the range of outcomes large? Yes, it's large. How do you handicap that? That's a much different conversation or question.
Have we learned anything in the past couple of weeks that has changed your allocations in any material way?
Have we learned anything?
In the sense of anything concrete.
That's a loaded question. Well, I pose this to a bunch of people. If you knew today, if we roll the clock back to the beginning of the year, and you know what you know today, what would you think the market would look like? What would you think the economy would look like? And most people said, I would have thought the economy would be in much worse shape. The economy is much better shape than people think, given what we have right here, right now. So what we've learned is the U.S. economy is still robust. Some people think, and I think it's fair, right? There's a lag effect to trade and tariff, and maybe we'll see that. But ultimately, if we get that, not resolution, but if we get that progress, you can start looking through it. If you don't get that progress, really tough to look through it.
A really important month, and I'm so glad that you're going to be with us. Chris Harvey of Wells Fargo will be with us throughout the hour. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Shares of Constellation Energy are surging more than 14% in the pre-market after it agreed to sell power from an operating Illinois nuclear plant to Meta Platforms starting in mid-2027. The deal could spur construction of a new reactor at the site as AI sends power demand soaring. Meanwhile, new details are emerging about the suspect in this weekend's attack in Boulder, Colorado. The FBI identified him as Mohammed Sabri Solomon, who came to the U.S. in 2022. On Sunday, he brought flowers and disguised himself as a gardener in an orange vest so he could get as close as possible to members of the Jewish group before attacking them with incendiary devices. And Elon Musk is selling $5 billion in debt for his AI startup, xAI. It's the latest in a series of fundraising efforts across his business empire. Morgan Stanley is set to be shopping the debt. Musk has also raised $650 million for Neuralink and is selling $300 million in xAI stock through a secondary offering. So busy. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Maybe that's the good kind of deal making for a lot of these banks. A big question about whether it will pick back up in the second half of the year. Up next, pushing for a deal.
President Trump has talked about wanting to meet with President Xi. Has that call been scheduled?
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
Henrietta Trays of Veda Partners joining us next. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This market looks like it's going down, but it is not one that likes to end the day down. And what we're seeing right now is some of those losses getting clawed back as time goes on, which seems to be very much what we have been seeing over the past few trading sessions. The Nasdaq now down just 0.1%, the Russell 2000 almost flat, and S&P futures lower by 0.25%, which you can see in the bond space. And this is notable. Yields lower, and it is on the heels of Japan. It seems like Japan, Damien, is driving everything this morning.
Well, I wouldn't say everything, but if you look at the global ag, and most people don't realize this is the benchmark Bloomberg Global Aggregate Bond Index. It's up 5.5% this year, and the reason is most of those bonds are non-dollar denominated. So forget about the declining dollar and all the currency risk that's embedded within that index. Your bond portfolios, if you're diversified, are doing well.
Well, maybe not, though, if you're in the U.S., and that's a real question when it comes to some of the fiscal considerations. Under surveillance this morning, pushing for a deal.
President Trump has talked about wanting to meet with President Xi. Has that call been scheduled?
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls. The European Union came to the table thanks to President Trump's threat of tariffs. And now we are seeing that they are negotiating in good faith with our delegation. As you know, we are in discussions with many other countries around the world as well who understand the need to cut a good deal with this president and the administration.
Here's the latest. Reuters reporting that the Trump administration is urging countries to make their best trade offers by tomorrow. This comes after the White House says Trump will likely speak with Chinese President Xi Jinping later this week. Bloomberg's Tyler Kendall joins us from Washington. This as we hear about a trade deal with India potentially to be announced in the next few days. What do we know about the state of play about all these deals that are being made?
Yeah, hey, Lisa. Well, it does appear that the White House wants to show some sort of forward progress after we really haven't gotten any sort of update since that agreement framework that was reached with the United Kingdom. And perhaps we're getting some clues as to why. We heard from NEC Director Kevin Hassett, who has previously said that deals really are imminent, say that ultimately China has been the, quote, laser beam of this administration's focus. And perhaps that's taken away some of the momentum towards other deals. Now, amid this Reuters report, we should say that it has, according to the reporting, has asked these other countries to come forward and put up basically their best offer, which of course would include a lowering tariffs, but also boosting some U.S. goods. We know that U.S. LNG and agriculture has long been a priority of this White House, and then how they're going to address those non-tariff barriers, which this White House has really been pushing, needs to be at the forefront of any conversation going forward here. Now, at the moment, Lisa, we still aren't quite sure exactly what sort of concrete details we are going to get. Of course, the U.S. is under active negotiations with those countries that have been prioritized, that are geographically close to China, such as Japan and India, with Howard Lutnick saying that he's optimistic a deal could be reached before that 90-day pause is up. And then also the European Union, which we know has sort of had this fire lit under it to try to get some sort of deal soon.
Bloomberg's Tyler Kendall, thank you so much, as always. And we'll be tracking the progress throughout the morning. Joining us now, Henrietta Trace of Veda Partners. Henrietta, I'm wondering why the market isn't paying more attention to this. In particular, that Reuters story talking about how there could be a deadline, in the sense that maybe there's a level of impatience, as there aren't as many deals that have come to the fore as some had expected.
Right. We're at 0 deals in 60 days, and we need to get to 90 deals in 90 days. So I think the market is doing exactly what it did for the entirety of 2024. It's continuing to sort of trust in Trump. I hear it from crawfish boils to calls with clients. People are saying, well, it could happen. And that's precisely what the administration's comms team delivers. When Caroline Leavitt says, I will tell you with certainty that there might be a call, that obviously suggests that there may or may not be a call. The biggest problem really is that most nations don't know what President Trump wants. So the biggest news item, and as you point out from Reuters this morning, is that USTR is saying, hey, bring us your best offer. And that's because the president has told us he's going to be sending letters instructing roughly 100 nations as to what their go-forward tariff rate is, and he needs an excuse to bring those rates down. If you're going to put 50% tariffs on a nation that does $293 million worth of trade with the United States, that's nonsensical. You do need a reason to put them at a much lower rate. And I think that's what the White House is searching for, a reason to lower rates and avoid the July 9th Liberation Day implementation.
Henrietta, you're down in New Orleans. I'm up here in New York City, but up in Westchester County, the residential real estate market, we like to call that going to highest and best. Let me ask you something. Going to highest and best, all cash, no contingencies, is that the right way to run trade negotiations with your trade partners?
It's funny. I'm actually from Westchester, so this is great for me. The highest and best idea is, come to the White House with anything. So what we're going to see, I'll point to the EU because I think that's one of the most important ones, and it's one that I think has the most risk for higher tariff rates, all the way up to the 20% Liberation Day rate, for example, is that we want to do agriculture trade with the EU. We want to have genetically modified poultry go to the EU. If you go to the EU and ask them if that's acceptable to their population, they will tell you no. Those political operatives will pay a price in Brussels should they agree to those trade terms. And that's the same thing we're seeing in Japan and South Korea as they face voters. And so the biggest question we have is it a good thing for nations to negotiate with President Trump, or is it seen as weakness on the part of their leaders? Australia and Canada would suggest that the strategy of being tough with Trump and coming with an offer, but not something that capitulates and gives away your national protected resources like agriculture trade, is really where folks stand. And that is, of course, the story of trade going back to the beginning of humanity. Everybody wins or everybody loses.
I want to link what we're talking about to what Chris Harvey, who's here with us this morning, just was talking about, that he's worried about the taco stuff, which is the Trump always chickens out kind of framing. Whether that's irked the president enough to say, okay, I'm going to take a hard line and go through with some of this. Do you get the sense that that actually is something that's increasingly on the table with some of this demand for the best offers by the end of today?
I think the taco stuff, if we're going to play what's your emotional response in the White House, then, that's a question for a therapist, I think, not for an economist. But what I do think, and I lived through the first trade war, is that there are very emotional responses and reactions that happen in the blink of an eye in the Oval Office. I remember them viscerally, and I can tell you exactly where I was, sort of like people can say, where were you when JFK got shot? I can tell you where I was when the List 3 tariffs went on. Those are a very big sort of knee-jerk reaction. The impulsiveness of this administration is a holdover from the first term. So I don't see this as new. If he's bothered by, investors calling him taco, get used to it. That's what Wall Street's like.
Henrietta, I have a question, right? So it sounds like you're not so optimistic on deals getting done in the short term. Paint us a picture. What do you think is going to happen between now and the end of June?
Sure. I think that we're going to get increased Section 232 tariffs. Specifically, I'm most concerned about pharmaceuticals, lumber, which is obviously critical for the housing market, including up in Westchester. I'm expecting Section 301 tariffs to rise. I'm getting a lot of questions from clients right now about the actual process. How many days does it take to conduct an investigation? How many days does the president need to notify the Federal Register or Congress or collect comments? And it's specific, 270, 90, 15-day delineations. And all of those are optional. The president has the authority to escalate Section 232 tariffs on steel, aluminum, automobiles, and automobile parts as it stands today. In the works are about 7 other items that will all see tariffs as he sees fit. All that Commerce needs to do is publish those reports. And then we have the Section 301 tariffs, which are, of course, covering all of our trade, $550 billion worth of goods with China. So I think what I'm seeing from investors in Wall Street is a focus away from sort of the macro, what's the global tariff rate, which I think is not a relevant conversation in this sort of questioning IEEPA space, but what sectors are going to be targeted. And so that's where I'm spending my time. I think that's where folks need to concentrate. All of China is exposed, and then pharma, semiconductors, et cetera.
Henrietta Trey's of Veda Partners, thank you so much. We saw this not so long ago with the auto sector, right? I mean, Chris, at a certain point, we saw that with respect to is Ford and GM investable if they could potentially be in the crosshairs of all of these tariffs?
That's right. And the big concern is, does Lutnick come on and say, hey, we're going to roll out the electronic tariffs? Because that has big ramifications for a very important sector, the tech sector, be it the iPhone market, semiconductors, what have you. And so that has broad-reaching effects, and that's a concern.
I have to say with Henrietta, I know she's focused on the sectors, but I'm an emerging markets guy, and so I focus on the countries impacted. And I take your point, is India ready to do a deal? Is Japan ready to do a deal? If one is announced, just how quickly will the rest follow? Are they going to be like dominoes, or is this going to be a long, drawn-out experience?
And who feels like they have the actual leverage at a time where right now it had been that maybe the rest of the world would have the real pain. Now it seems like that's being turned on its head, at least so far in trading action. Coming up next, we'll find out about summer vacation and who's taking it. Marriott International CEO Tony Capuano on the outlook for summer travel, which should be happening. This is Bloomberg Surveillance.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jumana Versace at the Qatar Economic Forum in Doha, and this is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Does being a great poker player help you as an investor?
I think the investing helps me with the poker, but some of the skills overlap. I mean, you're dealing with what is the other person's behavior, and then you have the uncertainty of future outcomes.
Coming into the second day of the trading week, we have 2 hours to go before the opening bell, and we have that bit of softness across the board, but not much, especially given where we were earlier this morning. Futures lower by 0.2%. You can see it's actually turned positive on the Russell 2000. Yields a bit lower as people take a look at a successful Japanese bond auction overnight, 2 hours away from the opening bell. Here is your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with Dollar General. Those shares are surging up 10%. It just reported results. The retailer topped expectations in Q1 and boosted its full-year comparable sales forecast. That's because it's gaining ground not just with its core customers, but also with new shoppers that are trading down from more expensive stores. Obviously, that's a bit worrisome when it comes to the health of the consumer, but it's good for this company and good for the stock this morning. Next up, I mentioned this stock earlier, Bumble. Those shares are falling more than 5.5% after JP Morgan hit it with a downgrade. They say that the recent rally has gone too far and that with revenue and paying users expected to drop, they're now setting a $5 price target on the stock. And the problem, they say, is that Gen Z is just not feeling the love with this app. But I hope they do find love and maybe they go to Signet Jewelers, which is my next stock. Those shares are soaring up 13%. This is the parent company behind Kay and Zales, and it just reported better than expected earnings in Q1. It also raised its profit outlook for the full year and lifted the low end of its sales outlook. They have been making changes to their strategy, including offering more lab-grown diamonds and gold jewelry, and it looks like those changes are working for them. Lisa?
Yahira, it sounds like someone just got married. Congratulations. That was fabulous. I love it. On our radar this morning, President Trump working the phones and social media trying to sway GOP holdouts on his massive tax package as it works its way through the Senate. The bill passed the House last month, but now faces opposition from both moderates and ultra-conservatives in the Senate. The goal is, Damien, to get it to that July 4th deadline, which seems like it's going to be a pretty high task.
Yeah, no, I completely hear you. You know what's interesting? I just had somebody texting me about the carried interest and private equity, and I hadn't seen anything in that bill about any of that, about the impact on the uber wealthy tax bracket. But, you know, I guess we have to look a little bit deeper and see where these revenues are coming from and whether or not the market even cares.
Yeah, there's a real question here about what people care about more right now. Is it the tax bill with the potential ramifications for the deficit, or is it trade? And we'll get to trade in just 1 second. But Chris, from your perspective, which is more important?
I think trade is more important, but right now the narrative is all about the deficit. People are talking about the back end going up, back end yields going up. People are talking about the deficit and taxes. But the funny thing is, we've had a deficit this big for some time. The deficit looks like it's going to stabilize, yet people still talk about the deficit and how that's going to cause back end rates to go up. Not really sure what's changed, but there's a lot of narrative, a lot of talk just about why rates should go higher at the back end, and that's really the conversation of today.
On the trade front, the White White House saying it wants countries to provide their best trade offers by tomorrow. Reuters reporting a letter from the Office of the United States Trade Representative asking countries to list their best proposals in a number of key areas, including digital trade, non-tariff barriers, and more. A real question of trying to expedite a time frame, whereas Henrietta Trey said there have been 0 deals in 60 days. We have 90 days. We've got 30 more days to get 90 deals at a time when you have very tight deadlines.
Well, Lisa, as I mentioned, this is what we call going to highest and best in the residential real estate market. Our next guest can probably tell us a little bit about that. But truthfully, you know, these countries, the way their governments are structured, the way, you know, to get a deal done just because Donald Trump wants it immediately, it seems like a bygone conclusion that that's going to be a tough bridge to swallow.
Yeah.
Yeah, I think so. So to get a deal done, and you're seeing this with the EU, is there's a big bureaucracy there. You're really not sure who's leading the charge. And again, what you said earlier is what exactly does the U.S. want? So there's that uncertainty breeds more uncertainty. It makes it difficult. I think if we can get things done in spirit, then the market will accept that. If we don't need ink on a piece of paper at this point in time, but an agreement between parties, an announcement, a framework that people are talking about, then we can take that framework and then we can push that out to other countries. The market would really like that.
Meanwhile, in other news on the layoff space, Microsoft cutting hundreds of jobs.
This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. This week, we traveled to the depths of the world's oceans to explore the world of undersea cables carrying 99% of the world's communications, and where there may be investment opportunities to address the ever-increasing demand. And in the wake of the Trump administration's telling Harvard it could no longer have international students, we look at the costs and benefits of the government going to war with its universities. But we start with the continuing focus on the nation's air traffic control systems, with the Trump administration committing to fixing it. What does fixing it mean? How long will it take? And are we safe in the meantime?
There's always a challenge that has to come with whatever system they choose to do. But you're right in saying the FAA's air traffic control system is by far the busiest, most complex, but at the same time, the safest in the world. So as we approach this, it's got to be a unified approach, a collaborative approach with support of all the stakeholders.
Could just put them on a vector out.
Mike McCormick went to teach air traffic management at Embry-Riddle Aeronautical University after a career at the FAA as a control tower operator. He says that addressing the outages and making the necessary changes are going to take longer than we would like.
It's like changing the tire on a bus while the bus is rolling down the road. You can't shut down the air traffic control system to upgrade it or to fix it. You need to be able to keep the system up and running while you deploy new technology and you upgrade old equipment. Fixing the FAA's air traffic control system requires a very structured, very formalized approach to what is going to be done, when is it going to be done, how is it going to be integrated into the current system, and then how is it going to be waterfalled or to the rest of the air traffic control facilities across the country. So it's not going to be an overnight, and it's not going to be simple.
We hear various stories about the system now using floppy disks and using copper wires and things. At the same time, I also understand there's been some modernization going on over time. Are we going in the right direction right now, or do we need to change direction?
Absolutely, the Federal Aviation Administration is going in the right direction. They have been engaged in a multi-decade improvement program of the air traffic control system, and they have updated all the controller-facing technology on the displays for the controllers to state-of-the-art to be able to handle not just today's air traffic, but tomorrow's air traffic. What needs to happen now is the support systems. A lot of the backroom equipment that supports the larger system has a definite need for an upgrade. And that's where you hear things like still using floppy disks, still using CDs, because that equipment over time has not been able to be upgraded due to lack of funding. So with improvements to the system, a critical component of it, there has to be reliable, multi-year funding available in order to strategically plan and implement any improvement to the air traffic control system.
Reliable multi-year funding you talk about. That's one of the issues that we've heard about. Congress doesn't necessarily do things in a regular way over a long period of time. Is that a fundamental problem, the way we fund it?
The Federal Aviation Administration is generally funded on an annual basis. They have an operations budget, and then they have a facilities and equipment budget. And that budget is generally only good for one fiscal year, so from October 1st to September 30th. After that, the money disappears.
The need to reform air traffic control is becoming more urgent as outages in the system and the resulting delays become more frequent. The government agency responsible for reporting on government programs and policies has taken a hard look at the existing air traffic control system and found it to be unsustainable.
FAA did this risk assessment to understand of the existing systems, which ones are unsustainable, which ones might be potentially unsustainable, and need investments to modernize them. Many of these systems are aging and face longstanding challenges.
Heather Krause is the managing director of physical infrastructure at the GAO, which produced a report on the overall state of the air traffic control system in the United States. In March, she testified before Congress about its findings.
So around 17 we found to be somewhat concerning in terms of the timelines that they have, as well as 4 of those systems not having baselines, so not knowing when those systems will be delivered. So important that FAA focuses on, what are the most critical systems, how are they going to mitigate risks in the meantime as they are working through the modernization efforts, and then delivering on those modernization plans.
Modernization is part of the problem, but far from the only part. What about the controllers who run the system? There's general consensus about their being outstanding professionals.
The United States Federal Aviation Administration is short over 3,000 air traffic controllers across the entire system. And that came about not just overnight, but it took decades to reach that level of shortfall. And essentially what happens whenever there is a government shutdown, the FAA cannot hire or train air traffic controllers. This was exacerbated by the pandemic, when over a year the FAA could not hire a single controller and could not train new controllers. That has led to where the system is today, with over 3,000 controllers short across the country. The only way out of that is to hire and train new controllers, and Embry-Riddle Aeronautical University is proud to be a part of that initiative. As we enter into agreement with the FAA, we are authorized and certified by the FAA to test our students to the same level that the FAA Academy does, enabling them to be hired directly to FAA traffic control facilities upon graduation. Previously, it would take 1 to 2 years post-graduation for one of our students to enter the controller workforce. Now it can happen within days.
By the time that the air traffic controllers can get a new piece of equipment, it's about 7 or 8 years old. It's not as modern as it should be. It took forever for the air traffic control system to have a GPS system.
Elaine Chao was the transportation secretary under President Trump during his first term.
It's a tribute to the men and women of the air traffic control that they can keep the system kind of safe and maintained, with their expertise.
Secretary Chao agrees that the path to overhauling air traffic control in the United States is long, but the problem may be in the very structure of the system.
In 2017, there was an effort under the first Trump administration to reorganize the structure of the air traffic control. And basically, it would take the air traffic control. It's not privatizing it because it's being put into a nonprofit organization, but rather I call it liberating the FAA and the air traffic control, basically liberating the air traffic control from FAA and even more succinctly, the federal government. So that air traffic control, like many others structured like this around the world, would be their own entity. They would have their own nonprofit status. They would have their own board of directors. But more importantly, they would use their own funding of resources and be able to use it for long-term planning.
As you look around the world, has anyone done this? Can we go to school on any other country in the way they've handled this?
Well, Canada is a primary example, Great Britain, Australia. There are many other countries who have taken air traffic control out of the government process and put it separately in its own nonprofit organization. And by doing that, it allows this nonprofit air traffic control system to plan ahead, have control over 100% of its budget, and be able to purchase equipment at a very timely rate and very efficiently as well.
There's been discussion for over 20 years now on what to do about the United States air traffic control system. The U.S. is the only Western nation that still has an air traffic control system fully operated by the central government. All the other Western nations, including our neighbors to the north and the south, and across the Pacific and Atlantic, have transitioned to either a privatized or corporatized air traffic control system. In general, that has worked out very well for those. They ran into a bit of a problem during the pandemic because it's based upon user fees, and that is a portion generally of a ticket tax that would fund it. The FAA's air traffic control system is by far the busiest, most complex, but at the same time, the safest in the world. So as we approach this, it's got to be a unified approach, a collaborative approach with support of all the stakeholders. So you have to have support of passengers, support of aircraft manufacturers, support of airlines, support of the general aviation community, and of course, support of the whole government in order to make a decision on which way to go. Unfortunately, to this point, that has not existed.
Coming up, connecting the world from Rio to Tuvalu. This is a story about connection.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
No matter what the distance, no matter what the conditions, whether it's air traffic controllers connecting with airplanes landing at Newark Airport,
Check lost, we lost our radar.
or President Trump connecting with British Prime Minister Keir Starmer for a joint transatlantic news conference.
This looks like the kind of a hookup that's not going to be causing any problems. And your voice comes through beautifully here. So I just want to...
When it comes to connecting, there is no substitute for undersea cables. Thousands of satellites may orbit the Earth, but more than 99% of global internet traffic still flows through fiber optic cables laying on the ocean floor. A single high-capacity cable installed today can transmit half a petabit, over 1 million home high-speed internet connections.
Private networks for the largest of the companies rely upon subsea cables for their logistical planning, their transport, their just-in-time deliveries, logistics, finance, health, education, science, technology, sharing. It all goes over subsea cables, the loss of which would mean life as we know it would be gone.
If you think about that, you will start to understand how incredibly important undersea cables are, both in terms of our connectivity, our ability to communicate across the world, our ability to run digital technology, but also essentially the national security risk.
Some 1.3 million kilometers of those cables snake across the world's ocean floor. Eduardo Mateo is head of strategy for NEC's submarine division.
The basic anatomy of subsea cables are very long-distance pipes that have optical fibers inside, certain amount of optical fibers, and every certain amount of kilometers, 90, 100 kilometers, these signals that travel along the fibers need to be re-energized, amplified, energized from the sea, from the landing stations. So it's a very unique network. That amplifier that sits in the middle of the ocean receives power from thousands of kilometers away.
As important as undersea cables are to all global communications, most of us don't hear about them until there's an interruption, which happens about 200 times a year, sometimes because of wear and tear, but sometimes in suspicious circumstances. That's why experts like NJFX CEO Gil Santalis and Norwegian infrastructure builder Petter Narbo have a system to reroute traffic and keep the data moving.
So when we get to shallow water, we bury it underneath the seabed to protect the cable so it's not hit by some trawler vessel or an anchor by chance. But you can wonder, like northern parts of Norway in Svalbard, we had an incident like 2.5 years ago where one vessel had traveled across the cable 130 times. And then it was able to ram the cable and make a power outage on the cables. And you can question whether that was intentional or not, but it was a Russian vessel. If there's an outage, that's why we come to places like the New Jersey Fiber Exchange that interconnects with 6 or 7 of these different subsea cables.
So our facility is prepared to support subsea cables, and these cables need redundancy on land as well. It's no longer possible to have a single point of failure. We've got 26 terrestrial cables that leave NJFX in 4 directions, aerial, underground, which allow diversity for these subsea cables. Now they have options. Something happens on land, whether it's a highway or railroad, we can redivert that traffic in a different path.
The first undersea cable was laid in the 1850s, stretching from Ireland to Newfoundland, with Queen Victoria christening it by sending a telegram to President Buchanan. In the 20th century, telegrams gave way to telephone calls. And then the U.S. deregulated the telephone companies just as the internet arrived on the scene, opening up the market to new players and fueling a boom in competitive investment in submarine cables.
We have always been focused on being the best in the world at moving optical bits.
Gary Smith runs Sienna, whose technology powers the modern global internet, providing the networking systems and software that increase each cable's capacity even as more and more are installed.
Basically, down each end of a piece of fiber, you put different colors of light and pull them out at the ends into, virtual fibers. And the first technology we had in this space, we think we can make, 4 fibers out of this single fiber. And they said, that's fantastic. We don't think we'll ever need 4. By the time we got to deploy it, it was 8. And they said, we're never going to use 8 fibers. And now we're putting literally, thousands of virtual fibers down a single fiber.
In the boom years of the 1990s and early 2000s, building transoceanic cables seemed like a great business to be in.
It was like, where do we build the next one? How do we leverage the debt and equity markets to get the capital? And then let's deploy it very, very quickly.
Mike Constable was at Global Crossing during that time, a company that pre-sold capacity to telecom carriers before cables even hit the water. But then the music stopped.
And at that stage, all the speculation about how much data the world was going to need was not being accurately analysed and forecast. So suddenly the debt levels were super high and they couldn't pay off that debt. So ultimately there was a collapse. Investment pretty much stopped. Around 2002, investment in subsea cables effectively stopped. And it took a long time to see investment come back.
Everybody built so much capacity with this kind of technology because all of a sudden we could scale up the fibers. The challenge was no one knew what to do with that capacity, right? And no one would pay for it.
For years, nothing new was built. But the 21st century brought new demands, this time for financial transactions measured not in milliseconds, but in microseconds. Michael Lewis captured it in Flash Boys, a world where speed meant profit. Joe Hilt, now with Anova Financial Networks, led the commercial team behind a bold new cable called the Hibernia Express. You were particularly involved, as you say, in the financial part of the business, and obviously people really want to be able to trade fast.
Yeah, and I think we saw there was a cable system that was built between New Jersey and the Chicago Mercantile Exchange that was built as a straight line, right? And we said, wow, we're a cable system provider in the Atlantic. Somebody must need between the two financial pillars of the world in New York and London. 2011, we'd begun signing clients that would become financial customers on the system. And when we did that, we started to do subsea surveys.
Wall Street helped finance it, alongside Chinese partner Huawei. But that set off alarm bells in Washington, and as the pressure mounted, the message was clear. The project wouldn't get approved if it relied on Chinese technology.
We originally had started out with Huawei Global Marine. We had decided to move away from Huawei Global Marine about mid-project, right? And most of that was based on the United States and feelings towards companies like Huawei and H3C at that time.
Huawei was out, along with its technology, and in came TE Subcom and Ciena.
So we did need to make a change in our equipment, and we chose to have a bigger relationship with Ciena. You know, so much like we laid the cable systems with TE Subcom, we decided to make Ciena at that point in time our de facto standard for wavelength services.
Frankly, the whole Huawei piece was really a wake-up call for the West, you know, in general, around the criticality of this infrastructure. By deploying this infrastructure, letting someone, you know, else have that infrastructure was a real challenge.
Unlike others, Ciena hadn't partnered with Chinese firms. For years, that was seen as a mistake, until it wasn't.
And we decided really to be sort of in some ways the sort of our main competitor around the world was Huawei. So we decided to be, you know, the antithesis of that. We had no manufacturing in China. We were very unusual in that regard, but that was a strategic decision on our part. You know, you look at the marketplace now and you see a very bifurcated market between those that utilize Huawei and those that don't want to, which is really a proxy for geopolitical divide that you're seeing in the world. Governments are very conscious of it now. It's not just left to normal commercial decision making, for sure.
Mike Constable was tapped to lead Huawei Marine as the Chinese giant sought to push past U.S. resistance. But as geopolitical tensions continued to rise, the U.S. stood firm.
So that was really quite damaging at that time. Slowly, our access to, or our invitations to bid on a number of projects started to dry up. We, Huawei Marine, weren't able to build cables into the US. We were not able to build cables into Europe and to other nations such as Australia. In fact, at the time, we had won a contract to build a cable from the Solomon Islands to Australia, and that was subsequently terminated.
The U.S. intervened in several planned trans-Pacific cables, including the Pacific Light Cable Network linking Hong Kong and California. According to Jennifer Bacchus, acting head of the State Department's Bureau of Cyberspace and Digital Policy, it came down to one word: trust.
What started to become apparent to us is that we do not see the world in the same way that China sees the world. And that ultimately, while we view this as a positive way to work together, to bring people together, I think the Chinese view it as a way to control, surveil, and steal. And so as a result, I think it's been a gradual realization that we don't have the same worldview, we don't share the same values.
Pacific Light Cable was one that was going to go to Hong Kong, got shut down. Is that why you decide not to allow them to have a land station in Hong Kong?
So on the Pacific Light Cable, yes, what it would do is if it landed in Hong Kong, the Chinese government could very easily access that landing station and both take any information they wanted to, exfiltrate it, steal it, call it what you want. They also could potentially use that access to interrupt the data flows, to reroute the data flows. There's no way to tear apart espionage, from intellectual property theft, from essentially having the dagger poised at your neck that you're going to cut off somebody's communications network.
Is there a cost here in protecting some of the data that you suggest to potentially U.S. businesses competing with their Chinese counterparts in third parts of the world?
What we have found in going around the world is that there's enthusiasm for trusted connectivity, especially when you're talking about subsea cables. And when you talk about how do you attract investment into a country, whether you are a small island state or a large country, they want advanced Western technology, they want AI, they want data centers, they want hyperscale cloud. If you look at sort of the share of the market that HMN Tech, which is the Huawei company, has had worldwide, where they were 5 years ago versus where they are today, they're on a downward trajectory. As countries, economies, and people embrace the idea that they want to have sovereignty and control over their information and over their future success and prosperity.
And that's where we turn next, to the investment prospects for the boom and bust business of undersea cable. Who's doing the investing? What are the economics? And what are the opportunities?
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
गैस नेचुरल गैस में यहाँ पर हाफ प्रॉफिट बुक करना, थोड़ा नीचे आएगा तो एक बाइंग का देखते हैं। क्रूड ऑयल में भी लेट्स सी कोई ट्रेड बनता है तो 5:30 हो चुका है, न्यूयॉर्क सेशन की ओपनिंग है, कोई नया ट्रेड नहीं है अभी, ठीक है। थोड़ा और नीचे आता तो बेटर रहता है, यहाँ से बाइंग और करते हैं, बट ठीक है, कोई सुनिए। MCX में सपोर्ट नहीं था, फॉरेक्स में सपोर्ट था, वहाँ से सपोर्ट लिया है क्रूड में। लेट्स सी वापस सेलिंग बनती है तो देखते हैं ऊपर से, ठीक है। बाकी कोई न्यूज़ वगैरह तो आई नहीं है।
Costs and benefits of the government going to war with its universities. But we start with the continuing focus on the nation's air traffic control systems, with the Trump administration committing to fixing it. What does fixing it mean? How long will it take? And are we safe in the meantime?
There's always a challenge that has to come with whatever system they choose to do. But you're right in saying the FAA's air traffic control system is by far the busiest, most complex, but at the same time, the safest in the world. So as we approach this, it's got to be a unified approach, a collaborative approach with support of all the stakeholders.
Could just put them on a vector out.
Mike McCormick went to teach air traffic management at Embry-Riddle Aeronautical University after a career at the FAA as a control tower operator. He says that addressing the outages and making the necessary changes are going to take longer than we would like.
It's like changing the tire on a bus while the bus is rolling down the road. You can't shut down the air traffic control system to upgrade it or to fix it. You need to be able to keep the system up and running while you deploy new technology and you upgrade old equipment. Fixing the FAA's air traffic control system requires a very structured, very formalized approach to what is going to be done, when is it going to be done, how is it going to be integrated into the current system, and then how is it going to be waterfalled or to the rest of the air traffic control facilities across the country. So it's not going to be an overnight, and it's not going to be simple.
We hear various stories about the system now using floppy disks and using copper wires and things. At the same time, I also understand there's been some modernization going on over time. Are we going in the right direction right now, or do we need to change direction?
Absolutely, the Federal Aviation Administration is going in the right direction. They have been engaged in a multi-decade improvement program of the air traffic control system, and they have updated all the controller-facing technology on the displays for the controllers to state-of-the-art to be able to handle not just today's air traffic, but tomorrow's air traffic. What needs to happen now is the support systems. A lot of the backroom equipment that supports the larger system has a definite need for an upgrade. And that's where you hear things like still using floppy disks, still using CDs, because that equipment over time has not been able to be upgraded due to lack of funding. So with improvements to the system, a critical component of it, there has to be reliable, multi-year funding available in order to strategically plan and implement any improvement to the air traffic control system.
Reliable multi-year funding you talk about. That's one of the issues that we've heard about. Congress doesn't necessarily do things in a regular way over a long period of time. Is that a fundamental problem, the way we fund it?
The Federal Aviation Administration is generally funded on an annual basis. They have an operations budget, and then they have a facilities and equipment budget. And that budget is generally only good for one fiscal year, so from October 1st to September 30th. After that, the money disappears.
The need to reform air traffic control is becoming more urgent as outages in the system and the resulting delays become more frequent. The government agency responsible for reporting on government programs and policies has taken a hard look at the existing air traffic control system and found it to be unsustainable.
FAA did this risk assessment to understand of the existing systems, which ones are unsustainable, which ones might be potentially unsustainable, and need investments to modernize them. Many of these systems are aging and face longstanding challenges.
Heather Krause is the managing director of physical infrastructure at the GAO, which produced a report on the overall state of the air traffic control system in the United States. In March, she testified before Congress about its findings.
So around 17 we found to be somewhat concerning in terms of the timelines that they have, as well as 4 of those systems not having baselines, so not knowing when those systems will be delivered. So important that FAA focuses on, what are the most critical systems, how are they going to mitigate risks in the meantime as they are working through the modernization efforts, and then delivering on those modernization plans.
Modernization is part of the problem, but far from the only part. What about the controllers who run the system? There's general consensus about their being outstanding professionals.
The United States Federal Aviation Administration is short over 3,000 air traffic controllers across the entire system. And that came about not just overnight, but it took decades to reach that level of shortfall. And essentially what happens whenever there is a government shutdown, the FAA cannot hire or train air traffic controllers. This was exacerbated by the pandemic, when over a year the FAA could not hire a single controller and could not train new controllers. That has led to where the system is today, with over 3,000 controllers short across the country. The only way out of that is to hire and train new controllers, and Embry-Riddle Aeronautical University is proud to be a part of that initiative. As we enter into agreement with the FAA, we are authorized and certified by the FAA to test our students to the same level that the FAA Academy does, enabling them to be hired directly to FAA traffic control facilities upon graduation. Previously, it would take 1 to 2 years post-graduation for one of our students to enter the controller workforce. Now it can happen within days.
By the time that the air traffic controllers can get a new piece of equipment, it's about 7 or 8 years old. It's not as modern as it should be. It took forever for the air traffic control system to have a GPS system.
Elaine Chao was the transportation secretary under President Trump during his first term.
It's a tribute to the men and women of the air traffic control that they can keep the system kind of safe and maintained, with their expertise.
Secretary Chao agrees that the path to overhauling air traffic control in the United States is long, but the problem may be in the very structure of the system.
In 2017, there was an effort under the first Trump administration to reorganize the structure of the air traffic control. And basically, it would take the air traffic control. It's not privatizing it because it's being put into a nonprofit organization, but rather I call it liberating the FAA and the air traffic control, basically liberating the air traffic control from FAA and even more succinctly, the federal government. So that air traffic control, like many others structured like this around the world, would be their own entity. They would have their own nonprofit status. They would have their own board of directors. But more importantly, they would use their own funding of resources and be able to use it for long-term planning.
As you look around the world, has anyone done this? Can we go to school on any other country in the way they've handled this?
Well, Canada is a primary example, Great Britain, Australia. There are many other countries who have taken air traffic control out of the government process and put it separately in its own nonprofit organization. And by doing that, it allows this nonprofit air traffic control system to plan ahead, have control over 100% of its budget, and be able to purchase equipment at a very timely rate and very efficiently as well.
There's been discussion for over 20 years now on what to do about the United States air traffic control system. The U.S. is the only Western nation that still has an air traffic control system fully operated by the central government. All the other Western nations, including our neighbors to the north and the south, and across the Pacific and Atlantic, have transitioned to either a privatized or corporatized air traffic control system. In general, that has worked out very well for those. They ran into a bit of a problem during the pandemic because it's based upon user fees, and that is a portion generally of a ticket tax that would fund it. The FAA's air traffic control system is by far the busiest, most complex, but at the same time, the safest in the world. So as we approach this, it's got to be a unified approach, a collaborative approach with support of all the stakeholders. So you have to have support of passengers, support of aircraft manufacturers, support of airlines, support of the general aviation community, and of course, support of the whole government in order to make a decision on which way to go. Unfortunately, to this point, that has not existed.
Coming up, connecting the world from Rio to Tuvalu. This is a story about connection, no matter what the distance, no matter what the conditions. Whether it's air traffic controllers connecting with airplanes landing at Newark Airport,
we lost our radar,
or President Trump connecting with British Prime Minister Keir Starmer for a joint transatlantic news conference.
This looks like the kind of a hookup that's not going to be causing any problems. And your voice comes through beautifully, Keir. So I just want to...
When it comes to connecting, there is no substitute for undersea cables. Thousands of satellites may orbit the Earth, but more than 99% of global internet traffic still flows through fiber optic cables laying on the ocean floor. A single high-capacity cable installed today can transmit half a petabit, over 1 million home high-speed internet connections.
Private networks for the largest of the companies rely upon subsea cables for their logistical planning, their transport, their just-in-time deliveries. Logistics, finance, health, education, science, technology, sharing, it all goes over subsea cables, the loss of which would mean life as we know it would be gone.
If you think about that, you will start to understand how incredibly important undersea cables are, both in terms of our connectivity, our ability to communicate across the world, our ability to run digital technology, but also essentially the national security risk.
Some 1.3 million kilometers of those cables
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next. With the expertise and
driver's seat, outperforming the S&P 500 for 8 consecutive weeks. But Tesla, it's under pressure, with sales falling aggressively in France to a 3-year low. Can Musk's return from Doge turn it around? But first, let's check in on these markets, which whipsaw on the day. We were in risk aversion mode a little bit earlier, and now we tread back water to flat. Remember, May was a stellar month for the Nasdaq, up 9%, for the S&P 500 having one of its best Mays in years. But we are up just 1/10% as we try and shake off what is anxiety around trade tensions, and we get a dose of manufacturing reality as manufacturing numbers come in weak. I'm looking at the Golden Dragon Index. This is, of course, the Nasdaq Golden Dragon, looking at some of the tech giants in China. That too recovers, up 1/10%. Move on to individual movers, because look, there are some laggards out there, and notably Tesla has been off today more broadly, and we are going to keep a keen eye on what's happening with 2.7% to the lower as we worry about sales in France. We'll dig into that later in the show. BYD, this is the wrong ticker. We'll bring you what BYD shares have been doing. Their depository receipts have been basically trading flat, but here we have it off by about 0.2%. It was lower in Chinese trading. That as the competition, fierce competition, is getting some criticism from the government itself and government-related entities. But focusing more broadly on China, not just the EV sector, we're going to look at what it has been happening with the Golden Dragon Index. Look, as we say, just recovering, but after the last 3 days, it has been having, let's call it a plummet. Following remarks, now we know, of President Trump saying that Beijing has violated trade talks. More pain could be in store, of course, as China issues its own claims that the US has breached recent deal itself. Bloomberg's Mike Shepard joins us. Look, the tentative agreements of Switzerland are unwinding themselves somewhat.
Well, they really are, Kara. We are seeing this détente that had been achieved in Geneva just a few weeks ago rapidly fade away. On Friday, we saw President Donald Trump accuse Beijing of violating the spirit of that understanding without offering too many specifics, but his trade advisor, Jameson Greer, helped fill in the blanks. And the U.S. concerns seem to center on what they see as Beijing's failure to lift barriers on exports of rare earth minerals to the U.S. quickly enough, per whatever was discussed in Switzerland. On the flip side, though, we are seeing China come back very strong today, accusing the U.S. of violating its promises under that agreement with some recent steps. And we saw those with the American move to unveil new guidelines that are coming on AI chip export controls. And that included a warning to U.S. allies against using Huawei's Ascend chip, which is a challenge, of course, to NVIDIA. The U.S. has also moved to restrict exports and sales of chip design software to China, which is a big deal for China's own AI and tech ambitions. And then finally, the icing on the cake, of course, the revocation of Chinese student visas. All of those things in China's bill of goods against the U.S. this morning. And this raises questions about whether Xi Jinping and Donald Trump will actually speak by phone, as Donald Trump has said he would like to.
And Mike, what's so notable is that 2 of those moves, of the 3 that you outline, are completely tech-focused. Is it going to be technology that remains the eye of the storm when this tit for tat?
Well, it's either the eye of the storm, Carol, or the thing that is driving the direction of the storm. Because remember, this comes on top of years of escalating restrictions on exports to China imposed by the U.S. and really also twisting allies' arms to take part in those as well. Remember, this is not just semiconductor exports, it's also sales of chip-making machinery to Beijing. All of this is designed to curb China's ambitions in areas like artificial intelligence. And this is really starting to take a toll, in a way, politically between Washington and Beijing. And we're seeing tech emerge as this flashpoint and could be what unravels whatever understanding may have emerged in Geneva. Now, there is a lot of time before the 90-day pause expires, and the 2 sides still could find a way back to the bargaining table and to maybe have that call between the 2 leaders. But right now, the direction of travel is not heading in that way, at least from what we are seeing, Cara.
Mike Shepard breaking it down. We thank you. And look, let's stick with how markets are reacting, but more broadly, how they should be thinking about this trade uncertainty. An expert is Liza Tobin, Managing Director at Garno Global. We turn to your years of advising government, the CIA, and of course, more broadly, the field of enterprise. How bad is this looking? How much are we returning to escalation now?
Hi, Caroline. Great to be on with you. And I agree with Michael Shepard that the honeymoon we saw coming out of Geneva a few weeks ago is now shattered. And we're back in this cycle of escalation between the U.S. and China. And I agree with you that at the center of this is technology. What's interesting about China's very strenuous reaction to the U.S. export controls on the Huawei Ascend chip is their propaganda apparatus has long been arguing that the U.S. export controls are ineffective and that China can work around them. But I think the level of emphasis they're putting on this, the volume at which they're really screaming for these things to be removed indicates just how effective and how painful they are on China. So we're going to be watch to see how the U.S. reacts going forward. China is trying to press the U.S. very hard to make more concessions. After Geneva, the tariffs came down significantly, but really at the heart of those tensions were China's export control on rare earths and then the U.S. export controls on AI chips and related tooling.
Let's go to AI chips first before we get to rare earths, because there's not only the criticism coming from China, but some U.S. companies. I just think of what Jensen Huang was telling our own Ed Ludlow last week, how much basically we're forcing China to innovate and how he longs to be able to access that market. Do you ever see that happening?
I think it's all about the scale of compute that's needed. China can always find workarounds through smuggling, through making some of their own chips, but it's really all about scaling. And as you talk about on your show a lot, really being able to make enough chips to supply the rapidly escalating demands of compute in this age of AI is at issue. And that's where the U.S. still has this very large lead, just being able to scale up. So if China is able to extract any additional concessions from the U.S. so that they can get more chips legally, that's going to help them kind of shrink the gap faster. However, if the U.S. keeps these export controls in place and enforces them strictly and gets allies and partners on board on some of the tooling, some of the aspects where countries like Japan and the Netherlands and Germany are strong, then this gap between the U.S. and China in compute stands to lengthen over the coming months and years.
But both sides have chips on the table here that they can play and play hard. I was just at the Reagan National Economic Forum on Friday, where there was a lot of anxiety just how confident Chinese leadership is at the moment, that they too can fight back. Liza, what about the rare earths signals? How much pain could that levy on U.S. industry itself as well?
We know that the auto manufacturers and the defense manufacturers they came crying to the U.S. government before the Geneva talks and said that these things are starting to impose pain and starting to impose work stoppages. And that's something that it's a gray rhino. I mean, the U.S. national security establishment has known about this dependency on China for rare earth processing for years, but they haven't come up with a solution at scale. But I think what was interesting over the last month is that China has broken the glass on actually using this coercive instrument. It's actually now ratcheting up pressure. Xi Jinping has an appetite for leverage, and now that he knows he has this leverage over the U.S., you're going to see him pushing again and again to kind of recycle this leverage and try to extract more concessions from the U.S. But rather than bending over and giving China more concessions over the last couple of weeks, you've seen them doubling down with this empowered Commerce Department strengthening and broadening the export controls.
So you don't expect the U.S. to blink in this moment. What advice do you give to the private sector right now as to how tough this could get for access to rare earths and indeed, in the flip side, if you're a Chinese company, access to U.S. chips?
Well, I think that the private sector needs to remember that this isn't just a competition about tech and trade. I mean, tariffs and technology export controls, of course, are incredibly important to markets, but perhaps even more important is to watch the geopolitical tensions that are unfolding in the Indo-Pacific, around Taiwan, in the South China Sea. Secretary of Defense Pete Hegseth, just on Saturday at the Shangri-La Forum, was warning that a Taiwan crisis could be imminent. And we know know that China frequently has military drills, kind of these practice exercises around Taiwan and in the South China Sea. And it's had the habit lately of not announcing these in advance. So it's not giving markets a heads up that these are going to happen. Why does it do that? It wants to preserve ambiguity. If outside observers aren't sure if this is just a drill or if it's something more, an actual rehearsal for something like a blockade. That's very worrisome because it shrinks the window of warning. And that's something that we're watching very closely at Garno Global, kind of the links between these technology export controls, tariffs, and the potential for some kind of supply chain disrupting crisis around Taiwan that could prevent the chips from getting out of Taiwan, perhaps for a couple of weeks or longer.
Well, that's crucial to our audience, so thanks for making that link. Lisa Tobin, of course, Managing Director at Garno Global. Great to have some time with you. Coming up, let's talk about chips more, but Broadcom's results. This week, they're likely to actually show AI demand is still booming. We're going to talk about what's expected, how it could impact the wider market. This is Bloomberg Technology.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you've built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Let's talk about how the same tech giants that contributed to the S&P 500's decline in April, they are now driving the recovery in US equities. Just take NVIDIA. It put a bow on a better-than-expected earnings season for big tech last week by delivering a strong outlook for revenue, despite US restrictions on sales of its chips to China. This is as we expect earnings from Broadcom this week. You'll see the shares are also trading higher. Bloomberg's Ryan Vlastelica has been writing about how the Magnificent Seven in particular have helped bounce back of our lows. Some phenomenal recovery numbers.
Hey, thanks for having me. So this earnings season was a real test for big tech, especially given just how uncertain the backdrop has become, given tariffs, given all sorts of geopolitical tensions, given concerns about AI spending and the ROI from AI. And I would say that, broadly speaking, this group passed with flying colors. I'd say the notable exception was Apple, which is dealing with a number of its own sort of idiosyncratic issues. But the major companies like Microsoft, NVIDIA, Meta, Alphabet, quite strong across the board, showing pretty positive trends. And these are all companies that have allowed the market to really recover off the low that we saw early in April.
It's interesting that we're not back to our record highs. We're actually inching in on them, Ryan. Meanwhile, looking at the S&P 500, the valuation story, that's starting to get a little dicey, right, when you're looking at Magnificent Seven names.
Yeah, so I'd say these names got pretty cheap by a lot of metrics in the whole tariff sell-off in early April. They have come back quite dramatically. I think NVIDIA is up something like 45% or so since that low. So these are pretty remarkable gains, and that has come back in the valuation. But I would say sort of the countering argument to this is growth is expected to remain pretty strong for a lot of these companies. And if you look at something like the PEG ratio, they are all trading at fairly modest ratios on that metric. So the valuations have come back some, but the growth that was just affirmed in these most recent reports also pretty positive.
We're looking at the moment of how pricey perhaps they are from a price to forward-looking earnings perspective, at least. Bloomberg's Ryan Vlastelica. It's great to have you on, as always. Look, let's get you even more of a take here, and particularly on AI demand, what it means for certain companies about to give us their numbers. Angelo Zeno is with us, VP and Senior Equity Analyst over at CFRA Research. Look, we think about how NVIDIA helped the market recover. We saw the numbers looking good. What about Broadcom as well? We're still going to get AI optimism there?
Yeah, so thanks for having me, Caroline. And I think, yeah, to your point, I think it's going to be very strong. We're looking for top-line growth of about 20% here for the April quarter. And listen, I think when you kind of look overall, the trends that we've seen here over the last couple of weeks, or since Q1 earnings season, really starting with Alphabet and Microsoft at the start of earnings season up until NVIDIA last week, the trend on the compute side of things is, I think, much stronger than anybody had anticipated, and really something that Jensen Huang last week really pounded the table on. So when you kind of think about the drivers here, specifically for the AI semi names here over the next couple of years, it really is going to be tied to compute, and the higher demand for compute is going to drive higher capital spending plans, right?
Yeah.
Which is what we saw during Q1 earnings season. So we think those trends remain intact here for Broadcom specifically. They've got about a 60-40 split in semis versus software. So the semi side will continue to drive that demand, but software shouldn't be ignored because the profitability there and growth continues to be very good.
I mean, we're expecting strong things from Broadcom. You too. Look, your top semiconductor names are NVIDIA and Broadcom, AMD, Marvell. I'm looking at how much some of those names have already driven the S&P 500 recovery. A great chart from Ryan Story shows that NVIDIA makes up 12%, basically the S&P 500's rebound since April. But swiftly after them was Microsoft, that you named as being a winner of late. Broadcom, some 5%. But is the valuation getting a little too rich now, given the amount of geopolitical anxiety we're just talking about with Liza Tobin?
Yeah, I mean, I think as far as the valuation is concerned, it's not as attractive as it was 4 to 6 weeks ago. But I will tell you this: the valuations just got just hit basement level values. I mean, you were talking about NVIDIA at one point trading about 17, 18 times on our 2026 estimate. They're now closer to about 24, 25 times on 2026 expectations. And I will tell you this, the visibility, again, is improving here. It has improved over the last couple of weeks, whether it be on the trade side of things, improving commentary on trade, or whether it be, just from the reiteration in terms of CapEx spends, plans for some of these hyperscalers. Now, I will say, as far as what to look out for here on the geopolitical side of things, there are a lot of moving parts here over the next couple of weeks. Obviously, we want to hear about the US-China discussions, but as far as semis are concerned, there's a 232 semiconductor investigation that is ongoing right now. We expect to get more clarity in terms of what that's going to look like as far as tariffs are concerned here over the next 2 months or so. So it's wait and see mode, but our view is you're going to see a permanent tariff on the semiconductor industry when that gets unveiled. Our base case right now is about a 25% tariff.
What about the smartphone industry? Because actually Apple has contributed to the reprieve in the S&P 500. It's one of your top names for hardware. But boy, we're wondering whether it's going to get individual tariffs of 25% landed on it. Not to mention maybe Samsung gets the same though.
Yeah, so we're not looking for an individual tariff on that side of things, but our view here is they fall under the national security umbrella of the 232 semiconductor investigation, similar to many other hardware names that are right now exempt from a lot of the tariffs. But that said, if we're assuming something along the lines of a 25% base tariff for the 232. That would imply that Apple probably has to increase the price of its iPhone 17 this fall. Our view is probably along the lines of at least $50 or so. So again, we have to wait and see how all this stuff really plays itself out on the geopolitical side of things. But our view is there's going to be some sort of permanent tariff that goes into effect for the hardware companies, and specifically Apple. And Apple, we think, is best positioned to offset some of those higher tariffs because of their brand recognition and because of their pricing power.
So, Angelo, if an investor doesn't have the exposure they'd like in these names, should they buy at this point?
I mean, I think that's a good question. We look at it right now in the sense that we're looking more for a near-term, digestion period. The dangerous thing with that is you just don't know what you're going to get on a day-in, day-out basis because of the geopolitical environment right now. So if you don't own any of these names right now, our view is you do want to buy some of these AI semi-oriented names because they are going to really drive the earnings potential for the tech sector here over the next 2 to 3 years, specifically NVIDIA and Broadcom, as well as some of the other smaller names. But NVIDIA and Broadcom would kind of be two of the top names with the best visibility out there. And even if you see some of these negative headwinds, whether it be tied to the 232 semiconductor investigation or something on the trade side of things, ultimately, we think this stuff works itself out, and the earnings potential is so great that 2 to 3 years down the road, these stocks should be significantly higher than where they are now.
And we get those earnings for Broadcom on Thursday after the bell. Angelo Zeno, a busy week ahead, CFRA Research, we thank you. Now coming up, Samsung It's teaming up with Perplexity AI to beef up its own artificial intelligence offerings on some upcoming devices. More on that next. This is Bloomberg Technology. Samsung, well, it's nearing a wide-ranging deal to invest in Perplexity AI and put search technology from the AI startup at the very forefront of the South Korean company's devices. It's according to people familiar. The two companies are already in talks to preload Perplexity's app and assistant on upcoming Samsung devices. Bloomberg's Seth Fiegerman joins us for more on the story. And we knew that they'd struck this deal with Motorola. Samsung ongoing conversations. How deeply intertwined will they become?
Yeah, I think this is even more expansive than Motorola. With Motorola, it's about them being preloaded on devices, which matters a lot. But with Samsung, it's also integrating into its assistant product, into its browser, and of course, just preloading on Samsung devices. Generally, if you're Google right now, I think you have to be sitting up a little bit straighter right now. There's a big difference between being preloaded and the default service, which is what Google has paid for years and quite expensively. But this is a step in that direction. And given the antitrust scrutiny on Google, I would be a little bit concerned.
I mean, of course, that antitrust discussion of what ultimately might be the policies they have to enact to appease the judge. I mean, that wrapped up on Friday. Yeah. Analysts are deeply concerned about what all of this means for Alphabet. How much does this also depend on Perplexity getting some money from Samsung?
Yeah, I think that's part of the broader tie-up here. So we have previously reported that Perplexity is close to raising about $500 million, like a $14 billion valuation. Samsung could be one of the larger investors in that deal, and that strikes as part of a much larger tie-up between these two companies.
How does that $14 billion stack up? Because we become some numb to these figures because it's so enormous over at OpenAI.
It's one of the largest AI players out there right now, but this is a really competitive environment. Not only are they going up against Google, but going up against OpenAI and others who are moving into real-time search. But being more deeply integrated into devices that millions of people use, that is a really big leg up in that race. So.
And people have loved Perplexity in many ways because it was one of the first that offered you where the information was coming from. But they've had their own copyright issues as well, right?
That's true. I think Perplexity's main thing, though, is that they have great design. Yeah. You know, it's not so much that they've built a better model than OpenAI or Google, but they figure out how to package it in a really compelling way that seems to be drawing fans, not just from consumers, but from the hardware companies. So.
How soon could this all be announced?
As soon as this year, for devices maybe into next year.
Okay, we'll keep an eye out for all the unfolding events. Seth Fiegerman, we appreciate it. Meanwhile, coming up, Tesla, well, its sales fall to an almost 3-year low in France. How much can Musk's return from Doge steady the ship here a little bit? This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets because, boy, May was a stellar month for the Nasdaq. Today, we bounce off of our lows, but the anxiety remains. What about the pulling back from China and the US in terms of those tentative agreements made in Switzerland? The progress seems to be on the line. Many are worrying about that at the moment. Dig into some of the names. Look, I want to shine a light on one Chinese EV player, of course. We've got to keep an eye on BYD. Depository receipts doing better than they did trade in Hong Kong, at least. But under pressure is indeed the Chinese government tries to hint at BYD that you're competing too hard in our country. You're racing to the bottom in terms of price, all to boost your numbers. Will they pull back a little bit from that? But Tesla off by 3%. This is the numbers are woeful for sales in May in France. They're down 67%, just 721 cars in the whole of France. All of this comes, though, as Elon Musk officially departs the White House after running Doge over there, at least as many would say he was running it. Wedbush Securities Managing Director Dan Ives writing this weekend that this is, quote, music to the ears of Tesla shareholders with a crucial few months ahead. Dan Ives joins us now. And boy, those French numbers really show what the crucial few months mean. Can Elon steer this the other way?
Look, I mean, obviously the leader's back, right? I mean, Musk is Tesla, Tesla is Musk, but I believe it's really about autonomous. I mean, I think as we go into Austin in June, you go into the robotics future, that's going to be a key part of the value of Tesla. It's how we get to a $2 trillion valuation. But when you look at Europe, you look at US, you look at China, and I think Musk is going to start to turn that around. And I think that's where investors are starting to factor in, not necessarily what's happening next month or two, but a rebound second half of the year.
Okay, so stomach for the near term, these probably remaining poor numbers. The new refreshed Model Y isn't cutting it, it seems. It is more the political backlash. But you think ultimately the technology is going to outweigh a brand issue that they've had?
Yeah, I mean, look, me and you've talked about it before. I believe 90% of the future value is autonomous and robotics. Now, look, in terms of margins, delivery, growth, that's obviously very important to near-term numbers. But I do believe Street's factoring in. You start to see a rebound second half of the year. You have a recommitted Musk, clearly. And I think when you look to the future, I mean, this along with NVIDIA, I believe the most disruptive technology companies in the world. And then who's driving the software piece? Of course, it's Palantir.
But why is Tesla clearly going to be such a leadership in autonomous when Waymo's already busy doing it? And there is a difference in the technology here, with Waymo going all in on LiDAR and a very different tactic coming from Elon Musk and Tesla.
Yeah, look, Waymo clearly a head start, but I think Waymo, they're going to be at the kids' table relative to where I view Tesla in the coming years because of the scale and scope. Waymo's in 4 cities, $230,000 cars. Like, in other words, when I look out over the coming years, I think this is going to be dominated by Tesla in terms of cybercabs. It all starts obviously in the next few weeks in Austin, but no one will match the global scale and scope of Musk and Tesla.
So what milestones in Austin, for example, do they need to meet? Ed Ludlow with that great reporting out last week that June 12th is going to be the date we're anticipating for it to already make actionable what they've been trialing on the roads thus far. What do they need to meet? How do they need to show off in the technology to work?
Look, the interventions, right? I mean, just showing that this is something that is ready for prime time, because this is just the beginning of ultimately going to be 15, 20, 25 cities over the next year. And I think this is just really kind of laying the groundwork from a technology perspective, showing where Tesla's going to get to. And what I believe, look, Waymo is going to be successful, and that's going to be a key sort of player. But in terms of the global vision, who's really going to dominate, I believe it's Tesla and autonomous.
And is it the cybercab that dominates? Is it the fact that the Teslas are already out on the road and they become the autonomous vehicles? They are the ones that we don't use ourselves but lend out to the ecosystem?
Well, yeah, I mean, first of all, it's data-driven. I mean, by next year, you have 10 million vehicles, in terms of Teslas that have been sold. Data-driven. But I do believe cybercabs, when you think about the autonomous piece, that's going to be so important. But then also it's about FSD. I mean, FSD penetration could go from 15% to 50%. Think about the margin, the software, the uplift that's going to lead to Tesla. And that's why I believe they're going into their biggest chapter of growth. And that's why also it's just so important that Musk laser focus on Tesla in those days in Trump White House and now rearview mirror.
And you think he will be laser focused on Tesla, because he's also saying, I've got to be laser focused on X. He's also remaining very committed and focused on SpaceX as well, and not to mention XAI getting woven into X at the moment.
Look, it's all part of obviously the broader Musk ecosystem, but the hearts and lungs, the golden goose continues to be Tesla. And I think Musk recognizes now is the time, especially given autonomous and robotics with Optimus.
Tell us the $2 trillion valuation and how you actually got there from a numbers perspective.
Look, when I look at autonomous, and you start to model out what could ultimately be 20% of vehicles being autonomous, you're essentially looking $3-4 of earnings. Eventually, is going to be $13 to $15 earnings. So the whole math of the Tesla valuation is going to drastically change, and that's all about, like, I believe from an AI perspective, one of probably the most undervalued pure plays in the market is Tesla. Now, of course, NVIDIA, Palantir, the hyperscalers, Microsoft, and others continue to be front and center. But, Tesla more and more is going to prove that when you, especially in the physical AI play in terms of autonomous and robotics, they're going to be front and center.
At the moment, it's a $1 trillion market capitalization. How quickly does this $2 trillion become a reality?
I think next 12 to 18 months. And I think that
it's going to double in that amount of time?
That's our view. And I think it could be conservative relative to as this all plays out. Because I think, again, Musk and Tesla underestimated. Next week, probably, call it, late next week, when this actually, the vision starts, it's going to kick off, I think it's a golden age at Tesla.
You are the highest price target, 500. Few bond securities below you, 470. But the price targets go all the way down to just, JP Morgan at 115. So what is it that others aren't getting here? Is it just the scale of the ambition? Is it the execution? What is it when you sit around the table with other analysts that they're like, no, Dan, and you're like, no, yes?
Well, yeah, to that point, if you go back over the last 5, 7, 8 years, they've underestimated Tesla and Musk every time, right? So, many thought that the chance of them actually coming out with an EV was unrealistic. The chance of them scaling to over 1 million vehicles. And it was just again. I think they continue to view this as an automobile company. It's a disruptive technology player, one of the best in the world, along with NVIDIA and, of course, Palantir.
Therefore, we're looking forward to the global story here. Does this have to be executed in the US? What about over in China at the moment, where we're just seeing the level of price competition and indeed the commitment that we're starting to see from BYD also into autonomous?
Look, China's a key market. You're talking about over 40% of deliveries that come out of China to keep up from a supply perspective. But it's also why, too, it's important more and more Musk that he distance himself in terms of from Trump White House. Now start to play that 10% politician, 90% CEO, what we see from Apple. China's key. And I think we're going to continue to see now a rebound in China. And autonomous, Tesla's going to be a major player in that market along with BYD and others.
And then let's talk robotics, because I'm hearing more and more about how robotics is going to be the next area of key growth. How quickly does the Optimus become the $2 trillion driver?
And remember, we're not even really factoring that in. So it speaks to our view, like when you look at Optimus and as that plays out, robotics potentially could even be bigger than autonomous. And I think when it comes to physical AI, it's Tesla and NVIDIA that are leading that. And I think as that all this is going to get, in the next 12, 18, 24 months, it's the reality, right? The scale and scope is something that Tesla has a huge advantage of. And that's why I think Optimus is something that, again, I think investors, Wall Street, massively underestimating, but they will be proven wrong, I think, as this all plays out.
How much is supply chain going to be a bottleneck here? Because we keep talking time and time again about the rare earth control that China has. The fact that Tesla is so present in China from a supply side perspective, is that a winning formula?
Oh, you just nailed it. I think that's the key, right? Like having such a big presence. And of course, Musk has very good relationship in Beijing, in terms of their footprint. That is very important. It gives them a huge advantage. And also, I think it speaks to the timing, especially in this U.S.-China negotiations. The further and further Musk distance himself from Trump in the White House, I think is important, especially when it plays to what's happening in China.
I'm going to end on Apple, because you were just talking about other companies that have been owning this space, Palantir, of course, being one that you keep mentioning within software. But what about the future of Apple right now from a supply chain perspective, from a geopolitical perspective? Because it seems as though, Tim Cook needs to be a little bit more politician right now, too.
Yeah, but I think there's no better CEO in the world that can navigate it.
He's not done very well so far.
I would disagree to the point that he's been able to navigate to India, which is actually a huge part of the poker move, puts him in a lot better negotiation position. And also, look, the chances of iPhones coming to the U.S. we continue to view as unrealistic, unless you want a $3,500 iPhone. And Cook's another one. There's an understanding, okay, they might have been late to the game, but the consumer AI revolution comes through Cupertino. You'll start to see that next week, WWDC. I view that as a very important event that starts this next chapter.
Dan Ives of Wedbush. Some of the biggest price targets out there for Tesla and for Apple. It's always great to have you on the show. Thank you very much. Coming up, tech has become a major economic driver for New York's economy. And a new campaign is celebrating just that. We'll have more on the industry's impact and what's expected from New York Tech Week as a Bloomberg Technology.
Exhausted investors digesting the latest tariff talk out of Washington.
The only thing you can do is prepare.
Time now for Talking Tech. First up, Byron Allen. Well, he's hired Moelis to find buyers for 28 local TV stations his company owns. Now, this comes as an effort to reduce debt is coming on while taking advantage of potential deregulation in the broadcast business. In a statement, Allen said, "We have received numerous inquiries. We are going to use this opportunity to take a serious look at the offers." Plus, Meta is betting on automation for the future of ads. The social media company aims to enable brands to fully create and target ads using AI by the end of next year. Now, that's according to the Wall Street Journal, citing sources. Meta's ad platform already offers some AI tools that can generate variations of existing ads. And Abridge AI, a startup that uses artificial intelligence to transcribe medical conversations, is raising $300 million in a new funding round led by Andreessen Horowitz. It's all according to sources who say that the round values the Pittsburgh-based company at $5.3 billion, including the investment. But now let's bring it to New York. New York Tech Week kicks off today. The city is known for fashion and finance, and it's seen a tech boom, though, over the past decade. The sector actually made 41% of the city's net job growth since 2019. Julie Samuels is president and CEO of Tech NYC. It's a non-profit. You promote the sector in the city, and you have got a rather cool new campaign.
We do. We're so excited about it. We're launching today with support from New York City and in partnership with Red Antler, a campaign called Obviously New York. And it's really just a moment to celebrate the amazing growth of the tech industry here, to really highlight all the things that we think are just going so well in New York right now.
Give us the obvious statistics. Give us the obvious statements of fact that make New York #2 tech sector in the world. Basically.
I mean, listen, I have so many, but just some that I'd highlight. I think that really underscore what makes New York so amazing. New York is the #1 destination for college graduates. The tech sector here in New York, you talked about the 41% figure, is responsible for, creates 10 times the amount of new jobs in our local economy than 10 times more than other industries, I should say.
Than finance, than fashion?
That's right, since the pandemic, since in the past 5 years. But that speaks to the growth. That speaks to the J-curve that we're on here that I think is so important. You know, it's a $700 billion industry, 25,000 startups. It's booming here. And it's because, of course, you know, that New York City is home to every industry, and increasingly technology is just powering every other industry. And the thing that we think is happening here that is unique to New York is that as the technology, especially in this moment where AI is just booming, you know, your entire intro is about all these companies just growing AI, building AI. As the new technology evolves, what happens uniquely here in New York is companies figure out how to use it, who's going to pay for it, what it's going to actually do in practice. And that is the New York story.
So give us some pinups. When you think of the icons of the New York startup scene, I think Cognition AI in many ways from the underlying really leaps and bounds driving forward the technology when it comes to coding. But where else are we seeing success stories?
In the AI space in particular, of course, we've got Runway, which is just an amazing New York story because it marries the creativity that is inherent to so much that happens in New York City and the AI side. It's beyond AI, of course. You've got Ramp, which is probably the fastest growing startup in New York. That's in the fintech space. We have a ton happening in digital health companies like Maven and I mean, the list goes on and on. But I would underscore that all of those companies are, for the most part, building in uniquely New York industries.
I love that you keep trying to do this tongue twister again and again, and you're like nailing it, and I don't want to.
I have a little bit of practice.
But what about sort of why the campaign around it? Why this moment a need to celebrate?
I think that, listen, there's a couple things happening here. And, well, first of all, I just think people love to have fun. People love to celebrate. And right now, New York is just ascendant when it comes to tech. And we wanted to kind of put a stamp on that. We wanted to call it out. We wanted people to feel excited. And then we want to go on the road and remind people just how great the New York tech ecosystem is. Because here's the thing. When you meet young people of all ages, but especially young people, they always want to live in New York. And we need to remind them that you can come here and build a really dynamic tech career doing that.
But when I think of the resurgence in San Francisco. Yes. Basically, generative AI, Cerebral Valley, we've covered it time and time again. Do we need to be either or? Is it mutually beneficial? Are you seeing companies building talent systems in both places?
Well, I think you want to see tech building and growing the economy all over the country. I think that's incredibly important. I like the way we do it here in New York. That speaks to me. That's why I'm here doing this job here. But I think to your point, we want this to happen on both coasts. We want this to happen in the middle of the country as well. I think that's really important. And you know, we talked about a lot of homegrown New York tech companies, but OpenAI is also growing like crazy here in a really iconic New York building downtown. They're taking more and more space. So it's going to take all of these pieces, all of this input.
You are like the quintessential public-private partnership because you're as a non-profit in the middle of bringing leaders within some of the iconic New York tech sector in to help give advice to the public sector, and it goes both ways. Yeah. What is it that the public sector is doing that helps drive?
That's a really good question. So in this instance, the city is putting a significant amount of money. It's, I think, $4 million in total behind helping to bolster the AI ecosystem. Part of that is helping support our campaign, but that's just a small part. They're doing a lot more. They have an AI Nexus program. The city is putting its money where its mouth is, and we think that's really important. The state is also doing its fair share. We've got a great program here called Empire AI, where we're really empowering academic institutions, giving them access to just the amazing quantity of compute that's incredibly hard for anyone outside of the private sector to get. So the state, the city especially in this instance, are really doubling down to ensure that New York is a place where people want to come to build and grow tech companies, but also where people want to live.
I'm excited to see the statistics coming out for 2025. AI job postings surging 25,000 in 2024 in New York. Julie Samuels, CEO, President of Tech NYC. Go enjoy Tech Week. Meanwhile, let's talk about China, because Tom Cruise's film is back on top there. Mission Impossible: The Final Reckoning posted the biggest opening for a US film in the country this year. It earned $25.2 million during its opening weekend, defying trade geopolitical tensions between Washington and Beijing. Now coming up, action in the tech IPO market. Chime, Circle, they're on deck. This is Bloomberg Technology. IPO activity in the tech space, it is heating up. Digital banking startup Chime, crypto firm Circle, both targeting strong offerings. Anthony Hughes is here to break it all down. And the way in which we see that there's strength is Circle being able to sell more shares at a higher price point, it seems.
Yes, Circle seems to be going very well. The IPO is pricing in the middle of this week, so it actually launched last week. Since that happened, Bitcoin did come off a bit, but there is certainly a lot more enthusiasm towards cryptocurrency, of course, because particularly in the last month or so. We also saw Coinbase come into the S&P 500 last month, so that has contributed to a lot of enthusiasm for that company in particular, which is behind stable coins, and it's a business that some people are wondering where it fits into the scheme of things, whether it's more of like a payments company, and maybe it might deserve a bit of a discount to a company like Coinbase, which has become sort of the premier sort of stock in the crypto space, one of the premier stocks anyway.
Well, what's interesting is that Chime, being very much sort of a retail-focused offering in the fintech space, is it going to tap into retail demand? Is it institutional demand that makes that also a success story when it finally comes to the market?
Well, I think Chime has a really interesting retail story because it's obviously appealed very much. It's got 8 million customers, and it sells a debit card and a credit card, and it's been very popular with a certain sort of demographic, a younger demographic. It actually reminds me a little bit of the Robinhood IPO from years ago, from a few years back, where there's this idea that perhaps you have attracted a lot of customers, and maybe it might not necessarily be easy to attract millions and millions and more really quickly like you have in the past, but when you have these younger customers, you can grow with them and add on products and stuff like that. So that'll be one of the real sort of selling points, I guess, with the Chime IPO. But the company does come at a significant down round or lower valuation than it was able to attract in 2021, when we had very high valuations for all sorts of tech companies, including fintech and like this company, but also software companies and the like. So we are in a very different environment from 2021, and we have to take that into account.
Hinge Health had that as well. Of course, I need to disclose that my husband does indeed work over at Coinbase as well. Anthony Hughes, thank you very much indeed for joining us. Now that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Karen Moscow. The Organization for Economic Cooperation.
वॉइस नहीं आ रही अनीता जी, वॉइस अब आ रही है, वॉइस आ रही है, मैं बोल नहीं रहा हूँ बस। फिलहाल देखो, ये क्रूड ऑयल को एक सेलिंग ट्रेड बना था, उसके बाद से ये फॉरेक्स में सपोर्ट था, वहाँ से बाइंग आई, ऊपर से रेजिस्टेंस से वापस सेल कर सकते हैं। नेचुरल गैस में देखोगे एक रेजिस्टेंस पे आया था, वहाँ से एक सेलिंग का प्लान था, वो सेलिंग आई, फिर यहाँ पर एक छोटा सा एफईजी है, वहाँ से लगा रखा है, देखते हैं जाता है तो ऊपर, नहीं तो छोटा सा एसएलआई जाएगा तो निकल जाएंगे, फिर नीचे एग्जैक्ट सपोर्ट पे आएगा तो वहाँ ट्राई करना। बाकी अभी डेटा का भी ध्यान रखना, 7 PM पे यूएस मार्केट ओपन होने वाला है, नेक्स्ट 15 मिनट की कैंडल बहुत इंपॉर्टेंट है। 7 PM के बाद 7:30 पे जॉब ओपनिंग का डेटा गोल्ड और सिल्वर को इम्पैक्ट करेगा। बाकी एक दो न्यूज़ आ रही है, थोड़ा सा हो सकता है उनका इम्पैक्ट पड़े, स्पेशली ये जो न्यूज़ है थोड़ी देर पहले वाली, क्योंकि कुछ दिनों से जो यूके है वो भी ऐसा लग रहा है कि वॉर की प्रिपरेशन कर रहा है। आई डोंट नो क्या चल रहा है यूके में। NATO is pushing for 5-fold boost to ground-based air defense. तो कोई अगर न्यूज़ इन डेवलपमेंट होती है तो विल सी दैट। साउथ कोरिया काउंट्स वोट्स आफ्टर हाईएस्ट टर्नआउट सिंस 1997। साउथ कोरिया में भी आई थिंक इलेक्शन हुए थे। फिर से बन जाएगा, उसमें कोई ऐसा इशू नहीं है। अच्छा, वो रीटेस्ट है। यहाँ पर अगर नेचुरल गैस नहीं रुका तो फिर नीचे 305 के आसपास का बाइंग का लेवल है ये। दैट इज अ एग्जैक्ट सपोर्ट। थोड़ा बहुत रुकने की कोशिश जरूर करी थी एफईजी पर, बट नाउ लुक्स लाइक नॉट होल्डिंग। लेट्स सी और नीचे गिरता है या फिर नहीं। लाइक करते रहो गाइस, कम ऑन।
Cooperation and Development is cutting its global growth forecast for a second time this year. This is due to the impact of President Trump's tariff policies. It said the combination of trade barriers and uncertainty are hitting confidence and holding back investment. It also warned that protectionism is adding to inflationary pressures. The OECD now forecasts global economic growth to slow to just under 3% this year from 3.3% in 2024. It expects the rate of expansion in the U.S. will tumble further to 1.6% from 2.8%. Meanwhile, the White House is pressing for a call this week with Chinese President Xi Jinping. This is the world's two largest economies remain locked in trade turmoil. But Bloomberg News global trade editor Brendan Murray says there's no evidence any call is likely to happen.
there appears to be a key difference in strategy from both countries. Trump wants the leaders to talk first to sort of set the tone for negotiations. China, on the other hand, wants some back channeling to go on between lower level officials so the leaders can have a call to announce some progress.
And that's Bloomberg's Brendan Murray. President Trump has been working the phones in an attempt to sway Republican holdouts to support his multi-trillion-dollar tax bill. The legislation, which passed the House by one vote, faces opposition from both moderates and ultra-conservatives in the Senate. We get more with Bloomberg's Bill Ferries.
There's a concern about the Medicaid impacts from this. There's estimates that maybe 7 to 7.5 million people might find themselves without Medicaid coverage if this legislation passes as it is. That's something that some Republican senators are saying is going too far. And then on the other hand, you have people who are, you have Kevin Cramer from North Carolina, who's looking at the SALT deductions that passed the House. That's the state and local tax deductions, and saying, it was at $10,000. It's now in the House bill $40,000. Maybe there's some room for negotiation in between there.
And that's Bloomberg's Bill Ferries. President Trump is pushing for the bill to reach his desk by the 4th of July, but any changes in the Senate would mean the House would have to take up the bill again. In Europe, the government in the Netherlands has collapsed after far-right lawmaker Geert Wilders pulled his Freedom Party out of the ruling coalition. He posted on social media that he had no choice because the three other ruling parties refused to agree to his plan to curb migration. We get more with Bloomberg's Oliver Crook.
Once again, the perennial issue in Dutch politics is this issue of migration. It's what triggered an election not too long ago that ousted Mark Rutte and then put the Freedom Party by Geert Wilders party into government after many months of coalition building. And this is a government that has stood now for less than 1 year, 11 months, before it's collapsed to be brought down again once more by this issue of immigration.
And that's Bloomberg's Oliver Crook, who reports today's move forces a snap election in the Netherlands 2 years ahead of schedule. In South Korea, the main opposition Democratic Party nominee Lee Jae-myung is on track to win the presidential election. This is according to an exit poll released soon after the voting ended today. Lee is projected to secure 51.7% of the vote, according to a joint exit poll by South Korea's three broadcasters. His main rival, the ruling People Power Party's candidate Kim Moon-soo, is estimated to get 39.3%. Authorities say a man who wounded 12 people in an attack on a group holding their weekly demonstration for the release of Israeli hostages in Gaza had planned to kill them all, but appeared to have had second thoughts. They say Mohammed Sabri Solomon had 18 Molotov cocktails, but threw just 2 during Sunday's attack, in which he yelled, "Free Palestine." Solomon is facing federal and state charges. Constellation Energy agreeing to sell power from an operating Illinois nuclear plant to Meta Platforms. It's a deal that could spur construction of a new reactor at the site as artificial intelligence sends power demand soaring. And Dollar General slightly increased its annual guidance after the first quarter top projections. The discount chain also said it expects to mitigate a significant amount of the tariffs currently in place. And futures, they are now little changed to lower this morning. S&P futures down about 0.1%. Dow futures down 0.2%. NASDAQ futures little changed. 10-year Treasury yield at 4.41%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
सीखने गए गिटार
टून 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 हमको टून टून बोला
अरे शांति हम बोले गुरुजी, एक हाथ से गिटार बजाना सिखा पाएंगे? फिर दूसरे हाथ से हम फ्रीली खुजा पाएंगे।
बढ़िया।
गुरुजी बोले, खुजली का प्रॉब्लम सुना सुना सा लगता है, एक हाथ से तो बेटा झुनझुना बजता है।
लाइफ के सुरताल से दोनों हाथ मिलाइए, कैंडिड लगाइए। खुजली की परेशानी में ऑलवेज वैलिड। हटा खुजली, लगा कैंडिड।
This is an iHeart podcast.
Progress never stops. Neither should you. At PwC,
you are transforming this airline. You are bringing in huge numbers of aircraft into a market that is absolutely booming. But you're being throttled by the availability of the airplanes that you can get. Airbus, Boeing, problems with supply chains, problems with engines, all kinds of issues that have affected the OEMs and their suppliers. How big a problem is this now? Is it getting better? Are you beginning to get to the end of this? Are you seeing light at the end of the tunnel?
Well, over the last 3 years of our transformation, we've gone from less than 100 aircraft to 300 aircraft. Some of that's been through merger, some of it has been through the delivery of aircraft, and more than 100 aircraft have been added to the fleet, so one a week. So there has been availability, albeit most of that had been produced during the pandemic and not delivered to the customers originally intended. But the new deliveries for us start in earnest towards the end of this year. It is later than we'd hoped, slower than we'd hoped. It is constraining our ambitions a little bit in the short term, but the long-term opportunity for this market is massive, and so we're very, very confident.
And the message is that Airbus and Boeing and the engine suppliers, they're fixing it, yeah?
I think there's a greater sense of confidence this time at the AGM than there was this time last year. People seem to be getting ahead of a problem, and there's a lot more optimism about the future.
More airplanes coming? More orders coming? Are you done yet? Is there a greater opportunity?
Well, goodness, we've ordered 570.
It's quite a lot.
There's some digestion that will need to happen for those, but this is a growing market, a hugely growing market. The upside is really significant, and so we will probably continue.
The rumour doing the rounds in the halls here is you're about to place another big order.
We never comment on speculation.
All right, so we're not going to see you at the Paris Air Show.
Only if I'm on vacation.
He chuckles. Okay, so let's see what happens there, only if he's on vacation. Mr. Modi's going to be here a little bit later on. What do you need to hear from him? What do you want to hear in terms of the aviation story? The government here clearly gets the fact that aviation is quite important. They're building lots of new airports. What needs to happen now to make the market really deliver on the potential that it offers?
I think it's really the synchronization of the ecosystem. The government privatized Air India for a purpose. There's a lot of private capital and expansion going into that. It's offered private concessions for most of the big airports. There's been a huge expansion in the number of airports in India continuing to be built. There's changes in taxation law with respect to the Cape Town Convention for aviation lessors, but there's a few changes with respect to tax, ease of doing business, customer experience going through the airport, the adoption of more technology, perhaps simplification of visa requirements. Right. All of these things coming together to make in India a equally competitive transit.
Have they come
experience.
together yet? Are we
there is certainly awareness of what needs to come together. There is dialogue between the stakeholders, but it's still got a little way to go before we're fully comfortable with where
One
it
of
is.
the other things I suspect that you'd probably like to know is what is going to happen with the trade story? What's going to happen with the tariff story? You import a lot of stuff in from Europe and, more importantly, the United States. What do you want to hear? What are you hoping to hear? Is it that there's going to be a continued carve-out for aviation equipment, that you're not going to be affected by any kind of a tariff war? What do you want?
Well, of course we wouldn't want to be affected by any tariffs. Of course we would want trade to be as free as possible. Of course we'd want airspace to be as open as possible. We're a business after all. But I think as much as anything else we want certainty. The uncertainty is difficult when you're making investment decisions, where you're making basing decisions, and I think that's a common theme around the AGM this weekend is we all want a little bit of certainty.
And when do you think you're going to get that?
Well, I don't know. That's uncertain.
Yeah, okay, fair enough. Is it affecting the consumer? Is it affecting business demand? Is it affecting what you see in terms of the numbers that you're getting
So from what we see so far, no. There are always impacts of one sort or the other on travel flows, but we don't see anything in particular, at least for our business, for our geography, for our market segment, just yet.
Are you seeing any impact in terms of America becoming a tougher place to visit? Are you seeing any impact from what's happening with students? Are you seeing any impact from what's happening, maybe not at immigration, but just in terms of the overall tone of what is happening in America right now? Is that impacting demand in and out of the US? Are you seeing that again in your numbers?
So we're not seeing any numbers to that effect. But of course, there's all anecdotal stories, particularly the student market. There's a very large student population in India, of Indians in the US. I think they've contributed hugely to the US economy. And just you hear people thinking about alternatives now.
So not immediate plans, but longer term plans potentially?
Well, obviously, it's a relatively new development, so people are digesting it. But it does seem that people are more willing to look at alternative locations than perhaps they were before.
In terms of which way people are looking, how are you, when you think about fleet plans, when you think about how the network is going to develop going forward from here, where are you looking? Where do you think the biggest opportunity exists for the company?
For India, really, the opportunity is everywhere. This is already the third largest domestic air travel market in the world. It's growing at 8 to 10% a year, yet it has a propensity to travel by air 1/5 that of China. So if it normalizes to China's level, it's going to be massively larger. Internationally, it's depending on how you measure it, the 8th or 6th largest international air travel market in the world. But Indian airlines have had a relatively small share, less than 20%. So the upside of providing Indian carriers offering service non-stop from India to the places people want to fly.
But is the opportunity, Indigo's here as well, obviously they are looking to capture the domestic market. Obviously they've got an international aspect to it as well. But is the bigger market internal or external? Is it going east? Is it going west?
So for us, we've always been a predominantly international carrier. 65% of our capacity is deployed internationally. We see our biggest opportunity being long-haul international. We've more than doubled the flights into the UK, double flights into North America. There's a 35 million diaspora spread around the world that we want to serve. So we actually see opportunity in both domestic, short-haul international and long-haul international, but our focus thus far has predominantly been long-haul international.
Let me ask you the slightly tricky question. Pakistani airspace is currently closed. I'm assuming that has a fairly big and meaningful impact in terms of how long it takes to fly to various key destinations. You're not going to put a number on what that's costing you right now, but it is significant, I would imagine.
It is significant, but we've been able to sustain a non-stop operation to our North American cities with a couple of exceptions where we do an en route refueling stop. We'll continue to offer non-stop service to North America. The European flights continue to be non-stop, albeit an hour or so longer flying time, but it's still much more convenient to fly non-stop from India than transit somewhere in between, notwithstanding a slightly longer flight time.
And is there a conversation with the government about how maybe you are compensated for that? Is that something that you think will ultimately hit your bottom line or another bottom line?
Well, no, something will certainly hit our bottom line. Discussions we're having with other stakeholders we'll keep behind closed doors.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and
to Russia as Moscow launched a heavy attack of its own on Kyiv. The escalation comes ahead of a second round of peace talks scheduled today in Istanbul. Let's bring in our senior editor, Bill Ferries, with the latest. The timing of it is quite interesting, but just tell a bit more, Bill, of how significant this latest attack is.
Yeah, it's a pretty audacious attack by Ukrainian officials here. President Zelensky saying it's been 18 months of planning to carry this off. 117 drones were launched from after being hidden inside homes, little wooden homes that were being transported on trucks. They hit targets from the very far east to just around Moscow, all the way up north near the border with Finland. Multiple sites. They believe that perhaps more than 40 aircraft were severely damaged, including a lot of Russia's strategic long-range bombers. These are the kind of planes that can carry conventional or nuclear weapons. So the head of Ukraine's security services estimating at least $2 billion in damage from this. And one of those kind of longer-term, longer-planned attacks that were probably in place ahead of these peace talks scheduled today in Turkey. But certainly the timing is very interesting and will set the tone. Russia, of course, has been unleashing multiple barrages of drone attacks and bombardments against Ukraine, including some of the biggest of the entire 3-year war. So both sides really ramping up their strikes on each other and showing what they can do, what they're capable of heading into these talks.
Yeah, so Bill, let's get into the talks in more detail then. What exactly are we expecting to come from these discussions that kick off, as you said, later today?
Yeah, it's hard to know. I mean, this is the second round of talks. We had a first round last month that resulted in prisoner release. But, in terms of making progress towards a ceasefire, we haven't seen a lot of that so far. It's hard to know if some of this is more performative. It's very important for Ukrainian President Zelensky to show the United States that he's serious about these talks. The delegations from Ukraine have been higher level than from Russia. It may be a situation where we see more talk about prisoner releases. Ukraine has said they would like to see more progress made on the release of children hostages that have been taken from occupied areas. And they'd also like to see what Russia's specific plans are, what its memorandum is to reach a ceasefire. That's something that they say Moscow has been holding back on so far. That's another detail we may get from this. But in terms of a major breakthrough, I don't think either side is expecting that quite at this point.
That was our Bloomberg senior editor, Bill Ferries, there. Thanks so much for your time. And of course, really interesting that you had those moves at the weekend as we had the Shangri-La dialogue taking place as well over in Singapore. And the U.S. Defense Secretary Pete Hegseth has reassured allies in Asia that Washington does remain committed to countering China in the region. For more on his message at that event, as we said, in Singapore over the weekend, let's get more with Avril Hong joining us now. So, Avril, the message that Hegseth, or Pete Hegseth, has delivered at this event has been tracked very closely, particularly as you had J.D. Vance sending sort of a different tone over in Europe several weeks back. But what exactly did he share?
Yeah, absolutely. I mean, to your point about J.D. Vance, I think there were some concerns coming into this forum that we could see a repeat of that sort of messaging from the U.S. Vice President towards European allies on how they needed to up their military spending, really ripping into these European counterparts and also criticizing them for the war in Ukraine. And, of course, this is also coming against the context of the concern that perhaps Pete Hegseth would engage in some grandstanding, this former TV personality. But it turns out that they needn't have worried that much. From this forum, he actually managed to garner some praise, the U.S. Defense Secretary. And it was really this idea of, being able to engage with these allies without the Chinese defense minister at the forum. Of course, this is for the first time since 2019, so able to set the tone, set the pace as well. And he even demonstrated how he kind of was able to grasp the nuances because when he engaged and communicated with some of these allies, he couched the idea of upping military spending as a requirement to prepare for a potential Chinese invasion of Taiwan. That being said, even though I think his trip has been largely received as a positive or a success. That's not to say that it was enough to offset some of these allies' concerns of erratic policymaking out of the US, especially from Trump.
And it seems like he was praised for also, I guess, capitalizing on this moment of China not being there to actually talk about China in some ways, right? And maybe a good opportunity for everyone there to talk about what's going on there. Let's take a listen to what Hexa had to say about the mainland in particular.
We do not seek conflict with Communist China. We will not instigate nor seek to subjugate or humiliate. President Trump and the American people have an immense respect for the Chinese people and their civilization. But we will not be pushed out of this critical region. And we will not let our allies and partners be subordinated and intimidated.
In April, China didn't send a defense minister for the first time in a few years or so. What was the response from Beijing on this?
Yeah, even though the defense minister was not present at this year's forum, China still rejected these comments from Pete Hegseth, not just his comments about Taiwan, but also about not sending a defense minister to the event. And China also rejected some other comments from European leader, the French president Emmanuel Macron, who basically suggested that you can see from the global response to Russia's invasion of Ukraine that in some way informs how the world would react if we, in the event of seeing a potential Chinese invasion of Taiwan. Again, this is something that China strongly rejected. But overall, the takeaway from this event and China not being present in the capacity of the defense minister is pretty much that it was a missed opportunity, because you think about how this forum is typically a platform for really high-level military communication. And all this is coming at a time when China has been trying to position itself as a more reliable partner to Southeast Asian countries, right? What does it say that they were not even in the room? And the Singapore Defense Minister, Chan Chun Sing, actually went as far as to say, kind of encapsulate this sentiment that if China thinks the world doesn't understand it, then it's really incumbent on China to seize every opportunity to make their voice heard. So as I say, this event really seen as a sort of missed opportunity for the Chinese side.
Avril, thank you. Avril Hong there joining us out of Singapore. Coming up, we're going to be live from the World Air Transport Summit in New Delhi, where we'll get the aviation sector and the CEOs of Hong Kong Express, Air India, and Air New Zealand all speaking with our very own Guy Johnson on the field there. And we're also counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Mainland markets are shut. Hong Kong futures, though, seeing a bit of pressure here this morning. You're watching the China Show. Happy Monday.
You're watching the China Show this morning, taking a look at some of the big events on the agenda in Asia this week. Standing out is the South Korea presidential election that's taking place on Tuesday, ahead of course, inflation figures that are due on Wednesday as well. Inflation's sort of a theme of the week. You've got that in Thailand, Taiwan, Philippines on Thursday, but also some rate decisions. For instance, the ECB, the RBI as well, going to be very closely tracked, expected to extend its easing cycle with a third straight one. And PMI readings, of course, that's sort of the main one from China this week. Jobs data, I mean, actually, it's quite busy this week. But, you know, what else is going to be really just front and centre is trade. And you really can't go past the headlines over the weekend as well. Steel, aluminium duties being hiked, plus, you know, all of the tensions around Eastern Europe.
I think, yeah, what we heard last week from Trump about what this truce with China is looking like, right? The fact that they're saying that they're violating some of the terms or whatnot. We're not getting too many details on what they're talking about, but that's enough as just goes to show. If things don't go well in trade negotiations, you start to hear from the president once again. And we're starting to see these headlines come through. Let's bring in Harold Vanderland, head of Asia Pacific Equity Strategy at HSBC. Harold, always great to have you. Seems like trade frictions are re-emerging once again.
Yeah.
Is this still going to be an overhang on markets?
Basically, take a look at the bigger picture, right? So we started with this about 10 years ago. We had trade frictions that we had talk about, can Chinese companies be listed on American exchanges? That was a big topic for the time. Education is now coming into that fold. All of these issues will, I presume, will continue to unfold over the next couple of years. Now it is tariffs on steel and aluminum and these sort of products. That in itself actually is more of a problem probably for the auto industry in the US. So that doesn't necessarily hit Chinese companies directly or so, I think. That will remain with us for quite some time.
The bigger theme that is emerging is that Asian equities are seen as some sort of structural alternative to the U.S. Now, do you think that remains intact?
Yeah, so we talk a lot about tariffs because that's in the news, right? But what is not in the news is something that has not been announced because it is not there. If they would have set the tariffs on, what was it, the 2nd of April, so we're going to put these tariffs in place, good. If on the 3rd of April, the 4th of April, they would have said, okay, now we want, what are the leading technologies for the remainder of our life? AI, robotics, EVs, renewables. If the US would have said, we're going to make it really attractive for you to invest in the US in those particular industries, and I don't know, for example, say anybody who graduates in any of these topics, your tuition fee is for free. Yeah, then you attract people, and then people want to invest there, right?
Yeah.
That hasn't happened. And actually, in a lot of these industries, China is either leading or not far behind. AI, it's probably, 9 months behind. EVs, it's probably 9 months ahead. So that means that actually it allows these companies to flourish, to export. And that's good for Chinese equities and Asian equities. That's right.
So that's the reality then, that sort of end of, or the question marks over US exceptionalism, whether it could sustain, you still see that continuing to erode and that money continues to be going into, say, Chinese markets.
Yeah. There is good prospects for these companies to flourish. They're not being hampered as much as the tariffs would suggest, I think. They're exporting their products. EVs is the classical example, but we're going to see very similar sort of patterns emerge. And in, for example, let's say in healthcare products, we see this already. We see this in AI, in robotics, industrial robotics. So China is technologically behind on certain areas, but in a lot of areas it's getting pretty close. Yeah. So they can...
Something that we haven't talked about is China's relevance in some of these EM funds, right? We've basically seen that deteriorate since the pandemic.
Yeah.
Things are starting to rise again, though. I mean, can we see this weight continue to recover?
Yeah. So I think 2 years ago, something you and I would have talked about, hey, there's this rise of Asia, ex-Japan, ex-China funds. That is still rising because there's a group of people who would like to do that. If you sell, let's say, Asian pension funds or mutual funds into the US, selling China is still, marketing-wise, maybe a difficulty. But yet China has recovered, of course. The market has recovered. There's new interest. It feels like the dynamic is differently. Property is looking a little bit better. So people are flocking back to that particular market. That's right.
Why then, if there's that level of optimism around the health of at least China's innovation outlook, why do you think then that there's so much wealth that's sitting on the sidelines and households that are just really have these major cash stockpiles?
Yeah, so the biggest cash pile on the planet that ever existed actually is $22 trillion US dollars. It's not a US dollars, it's the RMB equivalent. But it's about $22 trillion US dollars. We calculated how many containers of used 100 US dollar bills it is, and we found it's about 7,000 containers. So it's a lot of money, right?
Yeah.
Why are they sitting on that cash pile? Because, well, you didn't want to invest in equities over the last 3 or 4 years. You were unsure if you would lose your job during COVID. The property market didn't look really interesting either. So what have Chinese households done? They've done what everybody does. You don't do anything, and you hoard cash. Now, that $22 trillion, a lot of that is, of course, money that people need in order to finance their own sort of retirement over the next couple of years. But you do a bit of financial wizardry and you try to filter that out. We think there's at least $6.5 trillion US dollars that can actually throw rather freely into markets. Could be property, could be, it's already in bonds to a certain extent, but could be bonds, but could be equities as well. And that explains that very strong southbound flow that we've seen since the beginning of the year. And my suspicion is that that could well continue for at least the remainder of this year, maybe the year thereafter.
So where can you still chase in this Chinese market then?
Where can you still chase in this Chinese market? I think there's a couple of areas to go. So you can look, for example, at banks. Banks give you 6, 7, 8% yield. And to be honest, the
Still
share
a
prices,
defensive play, is it? Or?
Yeah, but exactly. The share prices might not go anywhere for the next 10 years, but if you get 6-7%, you'll double your money in about 10 years' time. That's not bad.
Yeah.
So that's an area to go to. I still think in those areas what I highlighted, companies that will become global leaders in their respective industries. And that could be in healthcare, that could be in industrial robotics. We see companies emerging, of course, EVs. Those places I would go for as well. And you have now these domestic Chinese brands like, bubble tea, milk tea, and these sort of things. I was in Central Java, what was it, about 3 weeks ago, and there you go. You see Chinese bubble tea companies emerging. I was wondering if it was a fake one or not, because it looks a bit fake. You have that sometimes with Starbucks as well. But so they're expanding in the region as well. So there's an area to look at as well.
But you say bubble tea, and it also makes me think about the amount of listings that we had, not just for bubble tea, but for other tea chains as well.
Yeah.
The Hong Kong IPO market, what's your sort of... Oh, you did the dollar sign.
Yeah, no, actually, I was clearly, it's coming back to life. That's what I meant, actually. That's right. Yeah. No, but you're absolutely right. So you have a story now whereby there's an enormous amount of cash in China. There's companies who could not IPO or list their stock in the last 3 or 4 years. Some of them, I suspect, would be quite eager to do. So they're coming to the market, and you see that money starts to flow around again. So the IPO market is coming back to life. I wouldn't be surprised if the Hong Kong market is going to be number 2 or maybe 3 in the global ranking list by the end of this year, and it's going to be back where it used to be in the last couple of years. Yeah.
We're almost done with the earnings season in China. Your take so far?
Yeah.
I mean, tech earnings have been pretty mixed overall. But,
yeah, tech earnings have been a little bit missed, but overall okay-ish, I would say. There was 1 or 2 companies that missed a little bit. I think the earnings in China, this is the interesting thing, it doesn't seem like it's really a big story, in the sense that over the last couple of years we had earnings downgrades. We don't see that anymore. Net, we see actually a little bit of upgrades, but let's be very careful with that. Yeah. It's really earnings in the rest of the region, India in particular, where we're looking at. But for the moment, for China, earnings just above, say, 10% seems to be a very reasonable assumption to make.
I want to broaden out a little bit, but you just wrote a new report about Hong Kong equities and how to take advantage of this low HIBOR more. Yeah. How do I do
so? What do we do? Yes? Yeah, no, that's right. So HIBOR is at the moment very low. I suspect if the Hong Kong dollar would weaken, that we actually see the HIBOR goes up. Now that would be, if that were to happen, maybe a little bit negative for the markets in the very near term. But I think what we work on, we got to look through this. HIBOR in Hong Kong will be lower than it was over the last 5 years. So it will be structurally lower. And that's because liquidity is coming back into the region. That is what we just mentioned, right? Yeah. For example, US money being reallocated to Asian equities, but also the Chinese southbound flow. All of that flows over into Hong Kong. So HIBOR will be lower, and that's supportive for equities. It's good for property. Yeah. It's not so good if you're a company and you're sitting in a lot of cash and you have it in HIBOR because you don't get as much interest income. But for, in particular for property in some of these sectors, that's good news. Yeah.
All right, Harold, thanks very much for your time. That was Harold van der Linden, there, head of APAC equity strategy at HSBC, and having a look at futures just as we await the market open here, 7 minutes to go. But looking for a little bit of a drop ahead, and that's really just reflecting what we're seeing across Asia today. Trade tensions in the fore, really. President Trump vowing to double aluminium and steel duties imminently, 25 to 50%. But that's it there. We'll have plenty more ahead. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
You're watching The China Show, taking a look at Hong Kong in pre-market, and we're guiding for more than a percentage drop at the open.
Yeah, mainland markets are closed. I hope you're getting your rice dumplings in, but certainly we're seeing some pressure here across stocks. We're watching the EV sector in particular here. There was some good news, though. BYD reported May sales that were the best this year. Xiaomi talking about preparing for mass production of its SUV model, but there you go. We're all falling here at this moment. And casino shares also in focus. We saw an influx of tourists during that Golden Week holiday, so we saw that in the gaming revenue for May, but we're seeing a mixed picture when it comes to some of these casinos here right now. But yes, it's going to be a pretty volatile day. It's going to be all about tariffs. We'll get you through most of it here. That open is coming up next. You're watching the China Show. This is Bloomberg. Happy Monday to you. You're watching the China Show. We're counting down the open of markets here in Hong Kong. Keep in mind, mainland markets are still shut for the Dragon Boat Festival, but we are seeing a bit of pressure here when it comes to Hong Kong equities at the pre-market. You're already seeing signs of weakness there, just given the headlines that we're seeing when it comes to President Trump. Once again, with these trade frictions re-emerging, they're talking about this trade truce with China being violated, and a lot of dialogue that happened during that Shangri-La dialogue in Singapore on China as well. So that is certainly front and focus here this morning, Bill.
Yeah, well, of course, China not sending a high-level dignitary to the talks and also kind of leaving a vacuum for the US to step into and to pledge to have greater cooperation with some of China's neighbors in the region, Philippines, for instance, really standing out. But you've got Hong Kong just coming online this morning, and as you said, it's really that focus on trade tensions, also around semiconductor and tech, because they're looking at expanding the restrictions on Chinese semiconductor names.
Let's not forget the doubling of tariffs on steel and aluminum. That was something that was a headline over the weekend as well, so we'll watch the commodity space in particular on that as well. But here's how Hong Kong's faring. We're down about 1%. HS Tech seems to be weighing on the benchmark overall. MSCI China also down about 0.9%. It seems like most of the big tech names are also in the red here, particularly take a look at Alibaba. We're down close to 2%. Same goes for Xiaomi. So despite some good news that we heard on the EV sector, right? BYD sales were the best this year. Xiaomi also talking about mass production of that SUV. Those headlines, not enough to go with this current of bad news that we're seeing when it comes to tariffs here this morning. The renminbi is pretty stable, though. We're still having around the 720 level, but there you go. That's what we're seeing when it comes to the EV sector. The big news last week was about BYD and these price cuts. We had this auto body did talk about it, slamming the vicious competition that we're seeing domestically from these EV makers, and BYD is down another close to 4% this morning. We're watching oil stocks given what we've been seeing. So OPEC Plus did raise production as expected, but then again, we're seeing oil prices rise despite that. There's a lot of geopolitical tensions there. Talks about sanctions on Russia, talks about what's going on in Ukraine and the like here. But then again, the oil names are actually falling this morning. Sinopec is down some 1%. New World, that's the big one. So the big news is that they weren't able to pay their creditors here and delaying these bond payments. There you go. We're down some 9% for the stock in particular, and certainly that's going to be a key thing to watch here and what comes next for the company, though.
Yeah, it's certainly not a headline that sounds good, and I guess in the market reaction today, it's being reflected, the investor concerns around this too. But let's get more on this latest development, bring in our China credit reporter, Pearl Liu, joining us. So, Pearl, what exactly happened? I mean, I think you can see the market reaction. Investors are a little bit spooked by this.
Yeah, I think investors are basically a little bit surprised. So basically, New World delayed, basically it deferred the distribution of for perpetual bonds, which basically is not a default. But still, like usually when you buy perpetual bonds, that's the steady income you get. So when you don't get it, you got surprised and wondering what happened to the company.
Yeah, I mean, obviously, why defer now? In other words, what does it tell you about its liquidity position at the moment?
Basically, I think the market believe that sent a very serious signal that the company is not having a lot of cash. So basically, it's going through some liquidity crunch. But there are good things and bad things. Basically, if you don't pay, you save some cash. And also, it's going through some loan talks. And I think basically, according to our reports, it's going quite smoothly. And as of last week, out of 80-something billion Hong Kong dollar, it has already secured 35 billion. And I think we're expecting is getting more security from the banks. So there are good news about New World as well.
So do you think then this is sort of short-term pain for long-term gain? Do you think that this actually fundamentally changes the prospects for the business, delaying these payments?
I think basically people are just curious about whether fundamentally the company has the willingness and also the company has enough cash to pay all its debt. But the thing to us, according to the deferral and the talks with banks, apparently the company is now prioritizing the loan talks, which is also reasonable because the deadline is by June. So we are expecting after the refi talks, we will see more new financing through banks. And also we are going to see whether the company is going to call or to pay the distribution of perpetual bonds and also pay the coupon of its bullet corporate bonds.
Yeah, a lot of questions still, I think, when it comes to the story. Pearl, thank you for helping us answer some of them. Pearl Liu joining us there with the latest when it comes to New World. Let's get to some of the data that we got over the weekend when it came to the factory activity that actually did improve in May. That's thanks to that trade war truce with the U.S. But of course, a lot has been up in the air right now. But output remained in contraction amid those lingering uncertainties. Let's bring in our China correspondent, Min Min Lo, to break down those numbers for us.
Yeah, so the PMI saw a bit of relief thanks to the trade truce. So the manufacturing PMI came in at 49.5, which was in line with expectations, but as you said, still below the 50 threshold. And it's thanks to some of the sub-indexes. You look at the production output sub-index that expanded, new exports order in particular, a big bounce there, reflecting how importers are perhaps stockpiling more products from China. And we might continue to get that tailwind in the next 2-3 months. Plus, you have the PBOC cutting rates as well in May. And then you look at the non-manufacturing sub-index that's slightly undershot expectations. There was the May Day holiday that gave a bit of a lift to the services sector, especially some of the catering, accommodation, tourism-related sectors. Construction and slight.
इथेरियम का स्विंग ट्रेड या स्विंग वगैरह तो मैं ज़्यादा लेता नहीं हूँ, बताऊँ भी क्या, देख लेता हूँ फिर भी एक बार चार्ट में कुछ अगर है तो। स्विंग ट्रेड इथेरियम में क्रूड ऑयल में हाफ प्रॉफिट बुक कर लेना, बार बार रिपीट कर रहा हूँ। क्रूड ऑयल में हाफ प्रॉफिट बुक करके ट्रेल करना, एंड नेचुरल गैस में देखते हैं यहाँ से अगर एक सेलिंग का ट्रेड और बनता है तो। बाकी क्रूड ऑयल में हाफ प्रॉफिट बुक कर लेना, सेलर देन ट्रेल। इथेरियम को देखोगे बाइनेंस में, अगर मैं देखूं स्पॉट का चार्ट देख रहा हूं मैं फिलहाल के लिए बाइनेंस में, वीकली देखना पड़ेगा या डेली स्विंग का कुछ है। यार ये तो कुछ ज़्यादा ही साइडवेज गया हुआ है, बहुत ही ज़्यादा साइडवेज है स्विंग ट्रेड, मुझे तो नहीं लग रहा अभी है। कोई ब्रेकआउट होगा तो या फिर ब्रेकडाउन होगा तभी कुछ कह सकते हैं। इट इज़ साइडवेज, ये तो पूरा महीने से साइडवेज है, एक महीने से पूरा ही साइडवेज है। मई मंथ में आया था इस लेवल पे, मई मंथ पूरा ही कंप्लीट हो गया तो साइडवेज ही है। तो डेली टाइम फ्रेम पे तो कुछ स्विंग दिख नहीं रहा है, रेजिस्टेंस पर जरूर है बट एक महीने से साइडवेज है डेली टाइम फ्रेम पे। नॉर्मली इतना टाइम लगना नहीं चाहिए प्राइस को। एक रेजिस्टेंस जरूर है बट अब इतना टाइम हो गया कि अब मैं भी नहीं कह सकता कि अब ऊपर वापस करना चाहिए। 2800 के अराउंड एक रेजिस्टेंस था डेली टाइम फ्रेम पे, वहां से अभी ये 29 ऑफ मई को एक सेलिंग स्टार्ट हुई थी, बट है वो रेंज के अंदर ही, बट वो सेलिंग स्टार्ट हुई थी तो वहां पर आए तो वापस सेलिंग का प्लान कर सकते हो। 11% गिरा था वहां से, फिर नीचे सपोर्ट ले लिया वापस, तो इट इज साइडवेज ऑन रेजिस्टेंस। ऊपर 2800 एज अ रेजिस्टेंस है डेली टाइम फ्रेम पे, जहाँ से एक सेलिंग एक्सपेक्ट करी जा सकती थी जो कि आ चुकी है। अब अगर आपको फिर से कुछ स्विंग ट्रेड लेना है सेलिंग का तो एक ऊपर लेवल रहेगा 3275-76, वहाँ से एक सेलिंग का प्लान करना। एंड बाइंग का अगर प्लान कर रहे हो तो इतना रिस्की हो जाएगा अभी बहुत। कितना है इसका लो? ठीक है, नीचे देखो एक सपोर्ट, डेली टाइम फ्रेम पे बता रहा हूँ, नीचे एक सपोर्ट भी था मार्केट के पास 2473 के आसपास, डेली टाइम फ्रेम पे रही है ये। जैसे ऊपर एक रेजिस्टेंस है 2800 पे, नीचे एक सपोर्ट था 2475। तो ऊपर रेजिस्टेंस है अभी, ये डेली टाइम फ्रेम पे 29 ऑफ मई को रेजिस्टेंस लिया है। और नीचे अगर मैं सपोर्ट की बात करूं तो 19 मई को एक सपोर्ट लिया था, उसके बाद 25 ऑफ मई को सपोर्ट लिया था, और फिर एक कल और परसों भी सपोर्ट लिया था 2476। तो इसमें ऑलरेडी बाइंग चल रही है। अब कोई रनिंग ट्रेड यहाँ पर तो नहीं है स्विंग ट्रेड का। ये रेंज मुझे लग रहा है कहीं ब्रेकआउट कर जाए तो बेटर रहेगा। नीचे सपोर्ट 2475, ऊपर 2800 रेजिस्टेंस। एक महीने से इसी रेंज पर है, किसी साइड अब निकलता है तभी कुछ हो पाएगा, अदरवाइज यहाँ पर मेरे अकॉर्डिंग तो अब ट्रेड बनता नहीं है। ऊपर से सेल किया या फिर नीचे से अगर बाई किया हुआ है तो बढ़िया है। वैसे बीच में ट्रेड मत लेना, बीच में कोई एंट्री नहीं है। ये डेली टाइम फ्रेम पे बता रहा हूँ, क्योंकि स्विंग ट्रेड डेली या फिर वीकली में बनेगा। तो अभी तो कुछ नहीं है। मैं ये कहूँगा कि ऊपर से अगर ट्राई करना चाह रहे हो 2800 के अराउंड, एक सेलिंग वहाँ पर प्लान कर सकते हो। बाकी ये बहुत रिस्की ट्रेड होंगे सारे, क्योंकि इसमें एक महीने से साइडवेज मोमेंटम है। तो ये रेंज कहीं ब्रेक हो जाए तो बेटर रहेगा। अब किसी ना किसी साइड के तो एसएल जाएंगे, या बायर के या सेलर के, तो अगर ट्राई कर सकते हो 2800 पे सेलिंग या फिर 2475 के अराउंड बाइंग स्विंग ट्रेड के लिए। बट याद रखना, अब एक महीने से साइडवेज है तो कहीं ना कहीं अब मार्केट एक ना एक साइड के एसएल जरूर हिट करेगा। लॉन्ग टर्म के लिए यार लॉन्ग टर्म के लिए लॉन्ग टर्म के लिए 1430 का लेवल है एक, उसको देख सकते हो अभी के लिए, फिलहाल के लिए 1430। प्राइस ने यहाँ पर ऑलरेडी कि प्राइस ने अभी यहाँ पर 1 अप्रैल को सपोर्ट लिया था, तो लॉन्ग टर्म का सपोर्ट वहीं पर बन रहा है एक अभी फिलहाल के लिए 1430। हाँ मतलब 1430 से 1230, 1430 से 1230 के बीच में ट्राई कर सकते हो। बाकी अगर सेल करना चाह रहे हो लॉन्ग टर्म के लिए तो $4470 के अराउंड सेल कर सकते हो। ठीक है, 4470 60 के आसपास सेल कर सकते हो लॉन्ग टर्म के लिए। तो ये दो लेवल है जहाँ पर अगर लॉन्ग टर्म देखना चाह रहे हो तो। Let's back to the natural gas. नेचुरल गैस में भी प्रॉफिट बुक करना चाहो तो कर सकते हो, छोटा सा ही टारगेट था, डन।
Excluding China. And China definitely is one of the largest population destination. And not only the outbound market, we also see a strong inbound demand into these two regions. So for HK Express, last year we launched 9 new destinations. This year, in just 6 months alone, we launched 9 new destinations. And later this month, we will have 3 new destinations coming. So, and these including some promising destinations in China, in mainland China, as well as in Southeast Asia. For example, in April, we launched Nha Trang, our 4th destination in Vietnam, and we doubled our capacity in Vietnam. And demand from Vietnam actually outpaced the capacity growth.
So there's no... Okay, let's talk about the capacity growth. You're putting a lot of aircraft to work very, very quickly. There's no kind of indigestion. There's no problem with the market absorbing all that capacity that you're putting in quite so quickly.
Yes, so last year, I think Japan definitely is the start destination. But this year we see actually Vietnam, South Korea are the emerging leisure market for the region. So as I mentioned, in Vietnam we double the capacity, but the passenger demand outgrow the capacity growth. And in Korea we also have more than 60% growth capacity, but with our load factor consistently exceeding 90%. So I think these are the emerging leisure destination for HK Express.
Okay, so talk to me therefore about what I'm learning about consumer demand. It sounds strong. Is that your read as well at the moment? And can you give me a bit of a new, sort of more nuanced sector by sort of or country by country kind of view of what is happening? Where is the consumer strong? Where is the consumer struggling? What is happening?
Sure. I think the demand still holds on, but I would say the competition also being very intensified in the last 12 months. Okay. Taking Hong Kong as example, last year between Hong Kong and the regional destination, the capacity surged by almost 40%, adding 7.6 million seats into the market. Okay. That's more than the entire population of Hong Kong, right? So many of the carriers, including us, HK Express, we are building the capacity, capturing the opportunity of Hong Kong, the third runway system. But also this aggressive supply growth also put pressure on the air yield. So some area definitely, as I mentioned, showed a strong growth, but airfare, the yield is still very, the pressure very big, and showing the accelerating of the airfare normalization.
Are you able to keep, what is happening with the fuel price? What do you do with hedging? Are you able to take advantage of some of the fuel price drop that we're seeing at the moment? Does lower fuel prices mean lower fares, and does that drive demand with those lower fares?
Yeah, definitely. I think we have seen the jet fuel price trending downwards recently, and fuel is one of the largest cost item for airline, and we are benefiting because it's reduced our operating cost. But also, as you mentioned, because lower fuel surcharge, lower fuel cost, lower fuel surcharge, that means lower ticket price, and it will stimulate some demand for those price-sensitive passengers. But I think for the airline, the overall cost also influenced by inflation, supply chain, rising labor costs. So fuel is just one component of this. So there are still lots of the economic uncertainty that will impact the airline cost.
One of the questions that I talk about all the time is what is happening with the Chinese consumer. The government wants to stimulate the Chinese consumer. Everybody wants to see the Chinese consumer back and strong. Do you get a sense that that is the case right now? Just give me a temperature check on what is happening with the Chinese consumer.
Yeah, I think China remains the most promising and exciting, growth for the aviation market. I'll give you one example. I just back from inaugural flight of Yiwu, our 5th destination in China. Yiwu is world-known trading center, and on the street, I saw so many people from India, Middle East, Southeast Asia going there to trading, to purchasing the goods and bring back to their country. These third-tier cities actually very emerging market. There's no international flights there, so we are the first carrier.
So that's a business demand. Sorry, that's not a consumer demand. So you're seeing business demand quite strong as well.
Yeah.
And that's picking up. Is the dynamic changing as maybe actually tariffs start to have an impact, and you're seeing maybe patterns of trade changing? Are you seeing that being reflected in the network?
I think a tariff definitely brings some risk and uncertainty for the airline industry, but I I think so far I see China consumer outbound is still strong. The young demographics still looking for new destinations in Southeast Asia to explore. For example, our Greater Bay Area is our very important home market. 1 in 4 of our passengers coming from the Greater Bay Area region. So I still see there is a strong demand from the young consumers looking forward to exploring.
Are they getting stronger? Is that demand getting stronger?
Yeah, I'll give you one number. Our point of sales, Greater Bay Area, this first five months grew to 60%. So I think.
In terms of how you run the airline, are you concerned about any issues about the availability of parts, about the availability of engines? These are areas that are kind of coming under the spotlight as a result of the tariff story. Are you able to absorb some of those costs? Are you worried about the availability of engines coming in for your Airbus fleet? How are you managing that story?
Yeah.
And how are you planning for that?
Yeah, definitely. We have the ongoing dialogue with Airbus regarding our future aircraft delivery schedule. So far, the impact to us relatively small, but I think we also made a proactive approach in managing this. We made a provision to ensure continued alignment with our long-term fleet plan and also the growth plan. And I think talking about the engines, right? You know, half of our A320neo aircraft, totaling 5 aircraft, remained on ground because of the ongoing GTF issue. So I think this definitely impact our overall aircraft utilization because the material supply chain is still the bottleneck that's why the engine turnaround short time is quite long. So we would like to see more clarity on this part. It's important for our flight restoration operation. So yeah, this is the part of the challenge we see, yeah.
Jeanette, great to see you. Thank you very much indeed for stopping by to kick off our AGM coverage here this morning at the IATA conference. Thank you very much indeed.
Thank you, Guy.
Jeanette Mao, the CEO of HK Express. Yvonne, thank you very much indeed. We will leave you for now from the AGM here in New Delhi. We've got some great guests coming up. Looking forward to speaking to all of them throughout the day. But for now, back to you.
All right. We'll come back to you soon, Guy. Thanks. Guy Johnson there with the latest from Hong Kong Express. And we're going to have more, as Guy mentioned, from the World Air Transport Summit in the next hour. We're going to hear from the CEOs of Air India and Air New Zealand. Plenty more ahead. This is Bloomberg. All right, some movers that we're watching here this morning. Obviously, Hong Kong Exchange is one, with Goldman lifting that target here and talking really about the pipeline, right? So more A-share listings, that certainly is one thing. Products as well. The stock is doing the opposite direction or going the opposite direction here, just given the trade headlines and the like here today, Belle.
Yeah, it's certainly risk off across the board, and adding to that, it's not just trade around steel, aluminum duties, but you've also got semi-names in focus too, because the Trump administration is looking to broaden their restrictions on sanctions on Chinese semiconductor companies to the subsidiaries. So you can see they're pretty much under pressure. Oil stocks, though, reacting, and this is a different story. It's geopolitical tensions in Eastern Europe, Ukraine striking deep into Russian territory. That's offsetting the moves around the OPEC Plus supply hike for a third straight month. But these names under pressure, and then broadly in the session too. I mean, yeah, we said it's risk off, and that's very much reflected in the offshore benchmarks today.
Yep, and we're watching that here. Continue to see session lows for the Hang Seng and HS Tech. We're down more than 2.5% for the tech gauge there. 8 shares also down by 210 points as well. We'll have more coming up the next hour. You're watching The China Show. Welcome back to the China Show. Not a good start to your Monday. Take a look at how these regional benchmarks are doing here this morning, and Hong Kong seems to be leading that drag lower. We're seeing now the Hang Seng down more than 2%, 2.5% lower for the 8 shares here this morning. And really it comes down to what we've been seeing with the trade frictions that seem to reemerge, the doubling of steel and aluminum tariffs from President Trump over the weekend, plus what they've been saying about this trade truce between China certainly is roiling markets here. So you are seeing, when it comes to your GMM function, it's basically stock stocks are being sold off, the dollar's being sold off, and we're watching very closely what happens with gold, right? So that's catching a bid after actually falling last week as well. And we're watching commodity markets very closely, just given the geopolitics with WTI and Brent crude up some 2%, Belle.
Well, it's been a very big weekend as well. Beyond the trade tensions, it's also what's going on in Eastern Europe. And you saw Ukraine striking very deep into Russian territory. Moscow did retaliate. You've got the peace talks, the second round that are kicking off in Istanbul today. That certainly clouds the outlook for these discussions, what exactly could be hoped to be achieved. But yes, I mean, it's very much risk off across the board, at least in the equities picture as well, because every single sector is in the red today so far.
Right, and I think it came from a lot of uncertainty about what's going to happen in this trade truce, right? This 90-day window, which we're pretty much past the halfway mark, I want to say. But it sounds like something is not working. And the fact that something has been, according to the U.S., that China has violated, it really goes to show where these trade negotiations are going at the moment. And when things look bad, President Trump starts to talk, right? And that's why we're seeing a bit of reaction as well here over the weekend. So certainly that's one to watch very closely. And that is a big theme for markets here today.
Yeah, that's right. It definitely plays into it. And are you going to see any sort of rapprochement? Will you see that call between Presidents Trump and Xi, for instance, taking place? What else is also getting a lot of attention today is a call from Morgan Stanley around the dollar.
Oh, yes. 9%, right? Downside.
Huge downside potential. So they're saying that the dollar index could fall to 91 by next year. That is, as you said, a 9% drop. But again, it's that slower growth story that could be playing into the picture as well. And you've got interest rate cuts also part of the picture.
Yeah, so rate cuts and slowing growth, they're expecting a yield curve that's much steeper as well, just given those concerns. But really, when you talk about the beneficiaries, it's really in the G10 space, they say, right? The euro, the yen, Swiss franc. They're thinking a 130 handle for yen, 125 for euro. So certainly that U.S. exceptionalism in doubt story remains intact for now.
Yeah, and maybe yen a little bit bid today, of course, on, again, that more of the flight to safety. It's back on these trade tensions, of course, flaring once again. As you said, Yvonne, China is accusing the U.S. of violating their recent trade truce, promising to take measures as well to defend its interests. That follows similar accusations from President Trump, as well as his decision to double tariffs on steel and aluminum to 50%. Bloomberg editor John Herskovitz joins us now, along with our China correspondent Min Min Lo. So, John, we can kick off with you. We had, of course, the big announcement going into Friday, and it's being very much reflected in trading sentiment this morning, but this hike on steel, aluminum tariffs as well.
Exactly. And last week was a really tumultuous week for the Trump trade policy, and we're getting off to a very difficult week with the China friction today. But the 50% tariffs on steel and aluminum came as Trump was announcing a deal between Nippon Steel and U.S. Steel concerning investment in the company. This has been in the works for some time. It was blocked during the Biden administration. It was blocked during the Trump administration for national security grounds. And this allowing of the investment to go forward is kind of a reversal for the Trump administration policy. What Trump has tried to do is show that Nippon Steel made concessions that will benefit workers, that will lead to greater investment in infrastructure, and say that U.S. Steel will remain U.S. owned and U.S. operated. Now, the details of the actual deal are yet to be seen, but this was something that Trump did in Pennsylvania. He did it with steelworkers. He tried to show it as a victory for his administration, a bit of good news for very difficult trade times. So how this works out remains to be seen, but this is how the administration has framed the deal, and using this with the backdrop of the increase in tariffs on steel and aluminum, which would benefit companies like U.S. Steel.
Min, obviously there's been a lot of back and forth on the U.S.-China discussions. What's the latest now?
Yeah, so the Chinese Commerce Ministry this morning hit back really strongly, even though it was a holiday for them, but we got a series of headlines. The Chinese Commerce Ministry essentially saying that the U.S. has been the one that is violating the agreements that were reached at the Geneva trade talks, and essentially saying that the U.S. has been the ones that are taking all these discriminatory actions against China, including revoking the students' visa, Chinese students' visa, expanding curbs on these export of chip design licenses to China, and also expanding chip hiccups as well. You were saying earlier, Annabelle, about these rules that are now being expanded to the subsidiaries of companies that are already sanctioned. And China is saying the U.S. has been the one that is provoking these trade tensions. It's urging the U.S. to really fulfill and honor the commitments made in Geneva. But the U.S. is saying the same thing of China. President Trump didn't elaborate on how China hasn't fulfilled the agreements there. But Jamieson Greer mentioned in a separate interview that he is concerned about the slow pace of the rollback of some of these countermeasures against the U.S., in particular when it comes to the flow of critical minerals to the U.S.
So that possible talk or discussion between President Xi and Trump, is that likely to proceed, do you think?
Well, it's hard to say because you have the U.S. economic advisor saying that it could happen this week, but we haven't gotten any confirmation from China. And granted, when it comes to China, oftentimes these announcements come really late, could be even as late as the day before. But at the same time, we have Trump previously signaling before, after the Geneva trade talks, he said he was going to speak with President Xi at the end of that week. That didn't happen. So how much weight can we put behind the words of Kevin Hassett this time? That's still a big question. And of course, we still have maybe a couple of months until early August when the trade truce is going to expire. So we'll have to see whether President Xi will be willing to pick up the phone this time.
All right. Minmin, thank you. Minmin Lo there, our China correspondent. Also, our thanks to our editor, John Herskovitz, joining us there as well. Still ahead on the China Show, we're going to head to the World Air Transport Summit in New Delhi to speak with Air India's CEO about supply chain pain as the trade war threatens to heat up again. We got much more ahead with Campbell Wilson. This is Bloomberg. We're still checking New World shares here this morning. Continue to see them plunge some 10% here right now. This on top of the news that they jolted bondholders on Friday with that surprise decision to defer those interest payments on some bonds. We're hearing from our sources, according to our credit team, that New World has gotten bank commitments for 60% of its loan refinancing now. So that equates to about $11.2 billion in this deal, according to people familiar with the matter. Over 20 banks have sent their commitments in writing, they added here. So certainly there is some at least progress on the refinancing talks, but not really helping in terms of sentiment here today, Belle.
No, I think it's actually the biggest drop we've seen for the stock in around 2 months, so going back to early April. But let's get back to New Delhi because the International Air Transport Association's AGM and the World Air Transport Summit begins today. And Bloomberg's Guy Johnson is standing by there with us. Guy, really great lineup of guests, including who you're joined by this morning.
We have, well, I've got sitting opposite me now, Campbell Wilson, who is the CEO of Air India. Fantastic to be with you.
Good morning.
Thanks for stopping by. You are transforming this airline. You are bringing in huge numbers of aircraft into a market that is absolutely booming. But you're being throttled by the availability of the airplanes that you can get. Airbus, Boeing, problems with supply chains, problems with engines, all kinds of issues that have affected the OEMs and their suppliers. How big a problem is this now? Is it getting better? Are you beginning to get to the end of this? Are you seeing light at the end of the tunnel?
Well, over the last 3 years of our transformation, we've gone from less than 100 aircraft to 300 aircraft. Some of that's been through merger, some of it has been through the delivery of aircraft, and more than 100 aircraft have been added to the fleet, so one a week. So there has been availability, albeit most of that had been produced during the pandemic and not delivered to the customers originally intended. But the new deliveries for us start in earnest towards the end of this year. It is later than we'd hoped, slower than we'd hoped. It is constraining our ambitions a little bit in the short term, but the long-term opportunity for this market is massive, and so we're very, very confident.
And the message is that Airbus and Boeing and the engine suppliers, they're fixing it, yeah?
I think there's a greater sense of confidence this time at the AGM than there was this time last year. People seem to be getting ahead of a problem, and there's a lot more optimism about the future.
More airplanes coming? More orders coming? Are you done yet? Is there a greater opportunity?
Well, goodness, we've ordered 570.
It's quite a lot.
There's some digestion that will need to happen for those, but this is a growing market, a hugely growing market. The upside is really significant, and so we will probably continue.
The rumour doing the rounds in the halls here is you're about to place another big order.
We never comment on speculation.
All right, so we're not going to see you at the Paris Air Show.
Only if I'm on vacation.
He chuckles. Okay, so let's see what happens there, only if he's on vacation. Mr. Modi's going to be here a little bit later on. What do you need to hear from him? What do you want to hear in terms of the aviation story? The government here clearly gets the fact that aviation is quite important. They're building lots of new airports. What needs to happen now to make the market really deliver on the potential that it offers?
Well, I think it's really the synchronization of the ecosystem. The government privatized Air India for a purpose. There's a lot of private capital and expansion going into that. It's offered private concessions for most of the big airports. There's been a huge expansion in the number of airports in India continuing to be built. There's changes in taxation law with respect to the Cape Town Convention for aviation lessors, but there's a few changes with respect to tax, ease of doing business, customer experience going through the airport, the adoption of more technology, perhaps simplification of visa requirements.
Right.
All of these things coming together to make in India a equally competitive transit
Have they come
experience.
together yet? Are we
There is certainly awareness of what needs to come together. There is dialogue between the stakeholders, but it's still got a little way to go before we're fully comfortable with where
One
it
of
is.
the other things I suspect you probably like to know is what is going to happen with the trade story, what's going to happen with the tariff story. You import a lot of stuff in from Europe and, more importantly, the United States. What do you want to hear? What are you hoping to hear? Is it that there's going to be a continued carve-out for aviation equipment, that you're not going to be affected by any kind of a tariff war? What do you want?
Well, of course, we wouldn't want to be affected by any tariffs. Of course, we would want trade to be as free as possible. Of course, we'd want airspace to be as open as possible. We're a business after all. But I think, as much as anything else, we want certainty. The uncertainty is difficult when you're making investment decisions, where you're making basing decisions, and I think that's a common theme around the AGM this weekend is we all want a little bit of certainty.
And when do you think you're going to get that?
Well, I don't know. That's uncertain.
Yeah, okay, fair enough. Is it affecting the consumer? Is it affecting business demand? Is it affecting what you see in terms of the numbers that you're getting
So from what we see so far, no. There are always impacts of one sort or the other on travel flows, but we don't see anything in particular, at least for our business, for our geography, for our market segment, just yet.
Are you seeing any impact in terms of America becoming a tougher place to visit? Are you seeing any impact from what's happening with students? Are you seeing any impact from what's happening, maybe not at immigration, but just in terms of the overall tone of what is happening in America right now? Is that impacting demand in and out of the US? Are you seeing that again in your numbers?
So we're not seeing any numbers to that effect. But of course, there's all anecdotal stories, particularly the student market. There's a very large student population in India, of Indians in the US. I think they've contributed hugely to the US economy. And just you hear people thinking about alternatives now.
So not immediate plans, but longer term plans potentially.
Well, obviously, it's a relatively new development, so people are digesting it. But it does seem that people are more willing to look at alternative locations than perhaps they were before.
In terms of which way people are looking, how are you? When you think about fleet plans, when you think about how the network is going to develop going forward from here, where are you looking? Where do you think the biggest opportunity exists for the company?
For India, really, the opportunity is everywhere. This is already the third largest domestic air travel market in the world. It's growing at 8 to 10% a year, yet it has a propensity to travel by air 1/5 that of China. So if it normalizes to China's level, it's going to be massively larger. Internationally, it's depending on how you measure it, the 8th or 6th largest international air travel market in the world. But Indian Airlines have had a relatively small share, less than 20%. So the upside of providing Indian carriers offering service non-stop from India to the places people want to fly.
But is the opportunity? Indigo's here as well. Obviously, they are looking to capture the domestic market. Obviously, they've got an international aspect to it as well. But is the bigger market internal or external? Is it going east? Is it going west?
So for us, we've always been a predominantly international carrier. 65% of our capacity is deployed internationally. We see our biggest opportunity being long-haul international. We've more than doubled the flights into the UK, double flights into North America. There's a 35 million diaspora spread around the world that we want to serve. So we actually see opportunity in both domestic, short-haul international and long-haul international, but our focus thus far has predominantly been long-haul international.
Let me ask you the slightly tricky question. Pakistani airspace is currently closed. I'm assuming that has a fairly big and meaningful impact in terms of how long it takes to fly to various key destinations. you're not going to put a number on what that's costing you right now, but it is significant, I would imagine.
It is significant, but we've been able to sustain a non-stop operation to our North American cities with a couple of exceptions where we do an en route refueling stop. We'll continue to offer non-stop service to North America. The European flights continue to be non-stop, albeit an hour or so longer flying time, but it's still much, much more convenient to fly non-stop from India than transit somewhere in between, notwithstanding a slightly longer flight time.
And is there a conversation with the government about how maybe you are compensated for that? Is that something that you think will ultimately hit your bottom line or another bottom line?
Well, no, something will certainly hit our bottom line. Discussions we're having with other stakeholders we'll keep behind closed doors.
Okay, great to see you. Thanks for stopping by to come and see us. Campbell Wilson, the CEO of Air India. A fantastic conversation, many more still to come. Guys, back to you.
That's Bloomberg's Guy Johnson there in New Delhi. As we said, really great coverage of IATA's AGM and the World Air Transport Summit for us. And subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about. Plus, become part of the conversation by sending us instant messages. Check it out at TV Go. We've got plenty more ahead. And this is Bloomberg. Some of the global headlines that we're following this morning: in Iran has rejected a UN nuclear watchdog report accusing it of nuclear violations, claiming the agency is motivated by politics. The report says Iran has expanded its stockpiles of near weapons-grade uranium and failed to report nuclear material and activities at 3 locations. Iran says the findings are based on fabricated data and repeated that it's not seeking atomic weapons. OPEC Plus has agreed to increase oil output for the 3rd month in a row, despite reservations from key member Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July. That matches increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share, and satisfy President Trump's desire for cheaper oil.
All right, checking markets here right now. It continues to be a down arrow story across Asian markets here, with Korea as the exception, of course, as they count down to their election. Their markets will be shut there on Tuesday. But then again, the broader picture is still risk off. Look at Nikkei. We're down 1.4%. Hang Seng continues to be the loser on the board. They're the biggest one. We're down more than 2% here right now. U.S. futures are also seeing a bit of pressure here this morning. Let's bring in our managing editor for Asia Equities, Lanting Tu, joining us now with what really is driving this broad sell-off here right now, Lanting.
Yeah, I think the rising trade tensions is really weighing on investors, because right now there is just a vacuum of news. China is off, mainland China that is, and over the weekend I think trade tension headlines are really occupying all of our top pages. And also there's also home sales data that was quite negative from the weekend. So overall I think people are just expecting some kind of further negative headlines from Trump. And of course, this morning, China side also rebuked Trump's accusation that China violated Geneva talks. So all of that is just really just not not helping the Hong Kong stocks. But by all means, if you look at year-to-date performance, Hong Kong stock market is still ranking at the top of the global equities worldwide this year. So overall, I think there is probably a little bit more downside just because Hong Kong has done quite well year to date.
It's really difficult for individual corporate news to break through, but one that has done it this morning is New World, and we're really seeing those shares under pressure after they deferred some perpetual coupon payments. But just talk us through the details, because we also had some headlines around bonds, or a loan rather, and the commitments made from banks so far.
Yeah, so there's some bad news, a lot of bad news, I should say. There is also some positive news. On the bad news front, of course, it's a shocker to global investors that they skipped a coupon payment on a perpetual bond. And yeah, in the in the bond contract, they can choose to skip the coupon payment, and that is not a default. But to a lot of investors, that is sending a signal that the company is struggling with liquidity. And given that the company is also in the middle of getting this big jumbo loan deal done. This is really relatively negative. I think right now, even with the positive news on how the company is securing more loan commitment for that deal, I think the next thing people are really watching out for is whether they can actually finalize the refinancing of that loan deal.
All right, that was our managing editor for Asia Equities, Lian Ting Tu there. Thanks very much for joining us. And of course, as we've been discussing, it's really that risk-off tone across markets today. Pretty much every sector, I think actually every sector for APAC at least is in the red so far. But these are some of the steel makers or aluminium names we're watching too today. And this is after President Trump pushed through with increasing levies or plans to increase levies on imports of steel, aluminum into the US. So going from 25 to 55 or 50% rather. So that, again, having some bearing on these names in this region.
Yeah, certainly this is in some ways to aid the sort of U.S. steel and Nippon steel deal that was reached between U.S. and Japan. And Trump says that there's still a ways to make it so that it is U.S. owned. But yes, this is what we're seeing in the fallout from that here this morning. And obviously we're watching things oil, just given what we heard from OPEC Plus. So yes, raising production as expected. But then again, the price of crude is actually up this morning. So it doesn't seem like the supply concerns and the like is really weighing on the oil price in particular because of the geopolitics and the like here. That certainly seems to see why we're seeing that pop in oil. But oil majors, at least in China, are actually heading lower. It might not be a news story, but really just the downdrift that we're seeing across risk assets here this morning.
Yeah, I think oil is interesting because, as you said, we are seeing Brent crude and WTI, both of those advancing. But that's also the story around what's happened in Ukraine and Russia over the weekend, because we saw Ukraine carrying out a series of drone strikes really far into Russian territory. Moscow has pushed back on this, but it really complicates, of course, the outlook for peace talks, because the second round is kicking off in Istanbul later Monday. So anyway, that's the state of play for oil. Let's take a look at what's happening in the EV space as well, because you are seeing, again, some interesting moves. We had a lot of the delivery numbers for vehicles, and they were pretty strong across the board, but you've got to wonder how much this line from the auto body is playing into the picture as well.
I mean, the price cut certainly was something that was a big concern last week, and certainly they're talking about this vicious competition and really what's the end goal, right? We had a guest just last week say there is no winner, really. But you take a look at what's really going on. It's interesting, though, because there was talks about this Xiaomi SUV, basically saying that they could do some mass production of that. There was also this talk about, really how interesting the whole sector is right now. But then again, right now it's all about trade headlines that's really dominating risk sentiment here this morning. You take a look at your GMM function, and there's a clear trend here where equities are being sold off. Dollar is also being sold off. And you're seeing that bid across most Asian currencies. Look at the Kiwi, look at the Aussie dollar. We're watching the British pound as well. That certainly was one of the key ones that Morgan Stanley noted, that under that dollar weakness, the pound could actually benefit. And commodity markets are still catching a bid here this morning, and bonds, in particular in Japan, continue to see that sell-off here, of course, after that auction last week as well. We got plenty more ahead. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading into that lunch break, and it looks like we could use a bit of a breather here this morning, just given the sell-off that we're seeing across equities here in the region. We're down close to 1.5% on the Nikkei as well. The yen is actually catching a bid here amidst this dollar weakness that continues here once again. And your Japanese JGB yields are ticking slightly higher here right now. We're above 1.5% for your 10-year JGB this morning. So, yes, it is risk-off overall. And, yeah, I mean, we're seeing it basically across the board.
Yeah, I think every sector for the MSCI Asia Pacific Index is in the red today, and you can see it down 0.8%. Really, of course, as you said, it's that story around trade and tariffs that are playing into it. Also, some interesting lines around the dollar, for instance. Morgan Stanley is saying that the dollar gauge could drop a further 9%. So, yes, but we can also take a look at the headlines from a conference, because there was a Sohn conference in Hong Kong on Friday, and this is really a chance to hear investment picks from a range of different hedge funds who can essentially make the case for why they're really backing or shorting a stock as well. But let's bring in our guest who was there for that. Sean Ho is joining us this morning. He is the founder and CEO of Trader Capital, and your pick was PDD, which is an interesting one, especially because this stock has been really pressured by trade and tariffs and the end of the de minimis and concerns around the cost for export from China. Why exactly did you choose it?
Yeah, so I try to capital a very long-run focus, right? So like Warren Buffett said, you know, in terms of picking a company, we like to find the company that can compound through time. So I try to capital. We're really focusing on three things that's generating a great company. First, the TAM has to be big enough. Second, it has to need to have a strong competitive moat. Third, this competitive moat has to be long-run sustainable. Right, so back in PDD, I think a lot of people know the domestic story quite well. Yeah. It's the second e-commerce player, 21% market share, etc. But really, we think what's not well understood is this TMU business, which is their overseas e-commerce part. Right, so first of all, in terms of the TAM, it's huge. Right, if you look at their MAU right now, overseas, they're actually more than Amazon. Right, so a lot of people probably don't know that. Second, if you look at their competitive advantage, we actually did a lot of analysis in terms of using alternate data, comparing price versus Amazon Haul, etc. They're still trading around, say, 20 to 60% cheaper on each of these items on goods, even after a tariff, after in April with a lot of price hike, etc. After 13%, they're still like around 10 to 30% cheaper on each of these items. So we do think they have that strong competitive edge. And is it sustainable or not? We actually did a lot of like channel check, network check within Shenzhen with a lot of overseas e-commerce player.
It's a pretty challenging environment, though, as Bella kind of highlighted, right? Domestic competition is quite intense. You have rising merchant costs, and then you have the tariff threats as well. Mm-hmm. Are you concerned at all about the profitability challenges?
Yeah, so far, if you look at the valuation, it's actually very much asymmetric on the upside. That's really the area where we like. So if you look at it, it's trading around 9.7x PE, around 36% of their market cap are in cash. Right, so basically, you're buying the domestic business for cheap already, but you're getting the overseas e-commerce business for free. Right, so. Yeah.
You talk about that moat, and you think the moat is secure, but the business model that Temu has, connecting factories direct to customers, is something that can be replicated, is being replicated by Alibaba.com, for instance. Do you think that moat can actually withstand those moves?
Yeah, so that's actually the biggest debate around these stocks when people look at it, et cetera. So I think it's really down to their execution, their management team, et cetera. So when PDD called them when they're going IPO, I actually met the founder, et cetera. He's a very focused, highly efficient, and a younger team. Right, so we think that makes a big difference in terms of the way they execute. For example, Amazon actually outsourced more than half of their goods from China as well, and they launched the Amazon Haul, which is a direct competitor of Temu on overseas. But we channel check a lot of the overseas e-commerce guys. The different execution is still very different. So very much, if you look at all the e-commerce players within China, they actually, like Temu, they'll send people within the company working there 24/7 to help them on logistics, help them on execution, to really increase a better ROI.
It's interesting, your target, right? The stock's at, what, sub 100 right now, and you're saying this could fly to $261. Tell us how we're going to get there.
So that's really our bull case. So we run various DCF analysis because as a value investor, at the end of the day, we value the company really on the free discounted cash flow of all the futures. So on the bearish case, we have around like $146, so around 50% upside, to the bullish case around 2.6x upside.
Another headwind that I could see is also from China regulators, and there is concern about this race to the bottom in China and this extreme pressure and cost cutting that you see from Chinese businesses. Even, for instance, last week it was the story around platforms like PDD needing to give more support to merchants that are on the platform. So how do you factor that into your case as well? And do you see that impacting margins, for instance?
Yeah, so we track a lot of these data quite closely, and it impacts the stock very much, especially in the shorter term. But as a long-term investor, we think it's a little bit less sensitive to a lot of these. For example, right now in China, there's a lot of subsidies towards a lot of the white goods, electronic, et cetera. And PDD, they might need to use their own bucket to subsidize a lot of this. But a lot of these, they'll be more one-off fashion. Same on the merchant side, right? They need to pump up and support some of these merchants, which we think is a good thing in terms of their brand in the longer run. But their competitive edge is still there, right? It's about the brand image towards consumer side, where you get the traffic and you're able to sustain that in your algorithm and continue to have that flywheel effect.
Do you see PDD shifting its listing back to Hong Kong or doing a secondary listing here? And do you as well see any impact from the reporting that we had that Shein is looking at listing here instead of London?
Yeah, so for that, we don't have any more insight than whatever the company disclosed.
I was going to get your take on just overall AI. I mean, your fund has done quite well earlier this year because of the whole DeepSeek moment. The market sentiment and narrative seems to have shifted since then to more trade. But I'm just wondering, well, have you made any changes in the last few months or so? And is AI still the best way to kind of ride the volatility now?
Yeah, so at Triada Capital, we're very China-focused. We're focused on the TMT and consumer segment. And within these, we actually wrote a lot in our quarterly newsletter around, I would say the portfolio-wise, 1/3 is very much AI-focused, 1/3 is AI-related. So what that means is if you take a step back, look at China AI segment, we still think there's tons of opportunity, even versus the US, et cetera. So within AI, there's 3 segments. One is the AI brain, so sort of any of the LLM model like DeepSeek, like OpenAI. You have the data that be able to train a lot of these brain. And then third, you have these potential super app that connects to all the consumer and be able to revamp and monetize these effort, right? I think in China, on the brain side, there could be some restrictions. It might be harder because a lot of the GPU, et cetera. But on the second and third part, we think China could be really in the lead, right? Because it has 1.4 billion population size, collecting various amount of data, et cetera. So that gives them the lead. And also on super app, generally from the consumer side, China is very willing to adapt, right? So you can see the like of Tencent, they launched like Yuanbao. It was a very quick adapter, et cetera. So we think the second and third part is where we spend a lot of our effort, trying to understand the different potential businesses, where it could be the long-run compounder, et cetera.
What's your methodology? What's your path to understanding exactly the opportunities that there are?
Yeah, so for us, first, we're based in China. So myself, the investment team, their team, we're in Shenzhen. So on-the-ground research is very important for us. Second, we use a lot of big data, alternate data within our research. So anything that's digitally, so you can think about anything that's digitally, publicly, engagement data, social media, et cetera, to understand the competition landscape, the unit economics, et cetera.
What is that data telling you in particular? I mean, how is it different from what you're seeing from traditional data, for example?
I think a lot of them, it comes down to the new ounces and how you do the research, right? So for example, on PDD, right, it's quite a widely debatable stock. The stock been down quite a bit after the earnings, right? Because the management, in effect, probably didn't provide a lot of transparency. But within the data, for example, for us on TMU side, we're able to break it down country by country, product by product, their competition versus Amazon. Are they cheaper? Are they more expensive? After the tariff hike, what is the exact impact? The GMV drop, et cetera, et cetera. What is the dollar advertising dollar in? So you're able to see the business in a much more clear picture.
Very interesting. Sean, thank you so much. Sean Ho there, founder and CIO at Triada Capital.
Thank you.
Of course, talking about PDD and the rest of the AI trend in China. We got plenty more ahead. This is Bloomberg. We're heading back now to New Delhi and the IATA annual meeting. Guy Johnson is there and standing by with our next guest. Guy.
Absolutely. The CEO of Air New Zealand, the outgoing CEO of Air New Zealand, Greg Foran. Nice to see you again, Greg.
Good morning.
So you surprised us all with your decision to step down. I don't think anybody saw that one coming. Still feels like the right decision?
Oh, yes. Something that I had been, thinking about for a period of time. Actually, when I took the job, it'll be about 6 years by the time I do step down.
Yep.
I had in my mind that would be about the right time. I've got other things that I want to do, haven't decided what they are. But, by then succession starts to come into play. You've done a couple of good 3-year terms.
Yep.
And, I know I leave the airline in a good spot.
Okay, so you leave the airline in a good spot. Do you have any idea when we're going to see your replacement being announced? Do we have any news coming?
Look, I'm guessing probably about 3 months away.
Right.
Something the board does. They go through a process.
Yeah.
They look around the world. It's a great gig. It's one of the best businesses that you can run in New Zealand. It's interwoven into the fabric of the country. So there's going to be some great candidates. The board will have a look internally and externally. probably about 3 months.
What challenges do you leave behind? You haven't fixed everything. We've still got issues surrounding aircraft availability. The challenges that I seem to speak to every CEO about at the moment are definitely represented at Air New Zealand. So what are the big fixes that still need to happen? You're leaving the business in good shape, but...
Yeah, well, you actually hit the first one on the head in terms of aircraft availability. And, you know, we're a reasonably small airline. We've got just a tad over 100 aircraft, and we unfortunately on our wide bodies run the Trent 1000, and that's full of challenges.
It's the Rolls-Royce engine.
Yeah. And then on our A321s, we got the Pratt & Whitney 1100. So we sort of got the duo of two of the most difficult engines. We're still working through those. Pratt & Whitney, I had a great discussion yesterday with the team there, and we're starting to see some light at the end of the tunnel there. In fact, we're putting some services on as we speak, getting some more seats out there as those engines become available. And the good news is we're making some great progress with Boeing on new planes. So beginning of next year, we'll get the first 2 of what will be 8 new 787s.
You just put a reconditioned aircraft into the market as well, haven't you?
We have.
So things are improving. Just give me a sense of what's happening in terms of the market. You made a big push into the west coast of the United States, North America. How's that working out? Does the Trump administration make that maybe look like a less wise decision? How's that market in particular working out?
Yeah, look, the US actually continues to be really good for us. We're up about 103% on passenger numbers from where we were in 2019, and it's gaining momentum. I'm not seeing anything at the moment that would indicate any concerns I've got, you know, that I read about. Anecdotally, I hear that a number of people in the US are very keen to come to New Zealand.
What about New Zealanders going the other way?
Yeah, no real issues with that that we're seeing. So it remains good, remains strong. And of course, New Zealand not only is clean and green and all the things that we know about, but it's pretty stable and safe too. So I think that heralds well.
Okay, but that's fine if you're an American going to New Zealand, but the caution at the moment seems to be New Zealanders or the rest of the world going to the United States. You say you've heard that anecdotally. Do you expect that to show up in the numbers at some point?
No, I'm not seeing anything at this point. Now, you know, I can't predict exactly what will happen, but Kiwis are pretty good at travelling. They work out how to navigate. They're used to travelling. It's 2,000 kilometres to the next nearest landmass. So we're used to getting out there, and, you know, as I said, I'm not seeing anything at the moment.
In terms of the cost that you're seeing in the business right now, what I'm beginning to hear around here is that, particularly for the OEMs, particularly for the engine guys, they're talking about passing on tariff costs, just costs that are going up at the moment, onto the airlines, which ultimately I suspect will be passed on to the customers. Is that the conversation you're having as well? Are your costs going up? Is it going to be more expensive to buy kit, buy spares, all of that kind of stuff?
The simple answer is yes, and we are seeing that, and frankly we've been seeing it for the last 12 to 18 months, and we're not seeing any sign of it abating. And it's actually not just things like spare parts or aircraft. You're seeing it in the entire ecosystem. You're seeing it in airport charges. You're seeing it in aviation and security. Absolutely. And, you know, you got sort of 3 options here. You can mitigate it, which everyone should do. How do you get better at running your business? How do you use AI, digital innovation? You can end up absorbing some of it. You don't like doing that for too long because that's an impact on shareholders. Or the third thing is you have to pass it on, unfortunately. But that is what we're seeing.
Are lower fuel prices going to compensate?
They help. They help. And thank goodness we've got them. Otherwise, I think we would really see an impact at some point on demand. So those lower fuel prices absolutely do assist us.
Do you get a sense that the global economy is slowing down right now, just in terms of the kind of demand picture that you are seeing? What are you seeing in China? What are you seeing around the world more broadly? What does the demand picture look like?
Yeah, look, I think it depends, like a lot of things, on where you stand. So New Zealand, a bit slow out of the blocks post-COVID. You know, we were one of the last countries to get open. Tourism, for example, into our country just a few months ago was running at 83% of pre-COVID. Today it's running closer to 90%. So we've got momentum because we've come from a lower base to begin with. I would say to you that one of the things I sense sort of, I guess, more around the world is more of a 2-speed economy. So I think as, you know, incomes bifurcate even further, I think what you're seeing is a lot of people with potentially more wealth premiumisation of airlines. You know, we're adding 23% more seats in our retrofitted aircraft up the front. But at the same time, you've got a reasonably long tail of people that probably have less disposable income. So it's an interesting market. You know, discounters continue to do well because you've got that long tail. At the front end, you've got people doing really well as some other people are actually generating more wealth. So it's if you like, a tale of two halves.
Greg, great to see you.
Good to see you.
Thanks for stopping by. We'll look forward to hearing what you do next and the announcements on that fairly soon. Greg Foran, the CEO of Air New Zealand. Back to you in the studio.
Great interview there, Guy, and that was Guy Johnson in New Delhi for us. We've got plenty more ahead. This is Bloomberg.
Well, India's military has confirmed it lost an unspecified number of fighter jets in last month's clashes with Pakistan. Chief of Defense Staff General Anil Chauhan also told us the conflict never came close to nuclear war.
What is important is that not the jet being down, but why they were being down.
But a jet?
Why? Why? Yeah, why they were. So the good part is that we are able to understand the tactical mistake which we made, remedy it, rectify it, and then implement it again after 2 days, and flew all our jets, again targeting at long range, which I said.
Pakistan claims 6 Indian jets were downed. Is it correct in that estimate?
Absolutely incorrect, and that is not information which I said is important. What is important is why they were down. That is more important for us. And what did we do after that? That's more important.
I guess the world is asking for clarity because these are words that came from Pakistan, whether it was 6 or whether it was fewer. So just to get clarity, Indian jets were downed, but the number 6
As I said,
is not
numbers
inaccurate.
are not important. Why they were down, what mistakes were made, that are important.
What's the state of relations between Pakistan and India at this point in time?
We are back to a normalization of relationship in the sense that we have an agreement. We can't call it ceasefire. Cessation of hostilities is there. And we are seeing that on the borders, whatever forces had come into place, they go back. So it's hopefully it will remain like this. The state of a relationship depends exactly on how Pakistan will behave in future. What India has done is we have laid clear red lines, the limit to our tolerance against terror. So the state of relationship is purely dependent upon how Pakistan is behave in future.
The world was watching developments really closely because both Pakistan and India are nuclear powers. What was the risk of a nuclear war erupting?
I think none whatsoever, because I personally feel that there's a lot of space between conduct of conventional operations and the nuclear threshold. And we have demonstrated it not once, now thrice. So it was during Uri, then it was your Pulwama, post-Pulwama, Balakot strikes, and now. And what I personally feel, one of the experiences from this particular conflict is not only in this escalation ladder, which we continued with Pakistan, in each of these ladders there are much more sub-ladders which can be exploited for settling out our issues without actually raising that nuclear bogey. That's too far-fetched.
That question was asked because the US, in fact, President Trump said that the US managed to stop a possible nuclear war.
I can't comment upon that, but there was nothing like that between us and Pakistan. And our channels of communication with them were always open. And that's one way to control escalation. That I think was never on the cards.
That was India's Chief of Defence Staff with Bloomberg's Haslinder Amin on the sidelines of the Shangri-La dialogue in Singapore. And taking a look at market action now, because we are firmly in the red across the board today. But some of the sectors that are standing out in particular, one of those are the semiconductor names. And again, it's really just all revolves around trade. It revolves around tariffs. What we understand is that the US is looking to widen sanctions on certain Chinese semiconductor companies that are already sanctioned to the subsidiaries, so extending that crackdown. And you see these names under pressure so far today.
Yeah, I mean, what's really fueling all this, as we've been talking about, is both sides, right? The U.S. and China are accusing each other of walking away from the terms of this 90-day trade truce last month, right? So Trump saying that China violated a big part of that agreement as well, it made in Geneva. And we heard from the response from Beijing here this morning. So that in itself is enough for risk sentiment to really just sour. And you're seeing it, despite the good news that we're seeing with BYD sales, for example, we're seeing the EV sector as one of the biggest sectors that are at a loss here this morning and falling. And if you wanted to look for any green shoots, there's only one-ish, two-ish stocks that are doing quite well.
1.5, maybe we could say.
NetEase is pretty much flat now. But PopMart, I guess Labubus are always a safe haven.
Labubus keep on giving. That's what I'm really learning here. The PopMart craze, there's really no end in sight to it.
Yeah, if you want to look for an alternative, it is maybe the whole Labubu story. It continues to talk. We're talking 225 for the stock here right now.
But also just on that sort of the Gen Z embrace, well, it's certainly also been for NetEase, and we've seen that stock trading around an all-time high for the first time in 4 years. So a lot of demand for game stocks, essentially, and you can see that there. But as we said, PopMart rather continues to stand out. That's it for the China show. Insight is next.
Internet traffic still flows through fiber optic cables laying on the ocean floor. A single high-capacity cable installed today can transmit half a petabit, over 1 million home high-speed internet connections.
Private networks for the largest of the companies rely upon subsea cables for their logistical planning, their transport, their just-in-time deliveries, logistics, finance, health, education, science, technology, sharing. It all goes over subsea cables, the loss of which would mean life as we know it would be gone.
If you think about that, you will start to understand how incredibly important undersea cables are, both in terms of our connectivity, our ability to communicate across the world, our ability to run digital technology, but also essentially the national security risk.
Some 1.3 million kilometers of those cables snake across the world's ocean floor. Eduardo Mateo is head of strategy for NEC's submarine division.
The basic anatomy of subsea cables are very long-distance pipes that have optical fibers inside, certain amount of optical fibers, and every certain amount of kilometers, 90, 100 kilometers, these signals that travel along the fibers need to be re-energized, amplified, energized from the sea, from the landing stations. So it's a very unique network. That amplifier that sits in the middle of the ocean receives power from thousands of kilometers away.
As important as undersea cables are to all global communications, most of us don't hear about them until there's an interruption, which happens about 200 times a year, sometimes because of wear and tear, but sometimes in suspicious circumstances. That's why experts like NJFX CEO Gil Santalis and Norwegian infrastructure builder Petter Narbo have a system to reroute traffic and keep the data moving.
So when we get to shallow water, we bury it underneath the seabed to protect the cable so it's not hit by some trawler vessel or an anchor by chance. But you can wonder, like in northern parts of Norway, in Svalbard, we had an incident like 2.5 years ago where one vessel had traveled across the cable 130 times. And then it was able to ram the cable and make a power outage on the cables. And you can question whether that was intentional or not, but it was a Russian vessel. If there's an outage, that's why we come to places like the New Jersey Fiber Exchange that interconnects with 6 or 7 of these different subsea cables.
So our facility is prepared to support subsea cables, and these cables need redundancy on land as well. It's no longer possible to have a single point of failure. We've got 26 terrestrial cables that leave NJFX in 4 directions, aerial, underground, which allow diversity for these subsea cables. Now they have options. Something happens on land, whether it's a highway or railroad, we can redivert that traffic in a different path.
The first undersea cable was laid in the 1850s, stretching from Ireland to Newfoundland, with Queen Victoria christening it by sending a telegram to President Buchanan. In the 20th century, telegrams gave way to telephone calls. And then the U.S. deregulated the telephone companies just as the internet arrived on the scene, opening up the market to new players and fueling a boom in competitive investment in submarine cables.
We have always been focused on being the best in the world at moving optical bits.
Gary Smith runs Sienna, whose technology powers the modern global internet, providing the networking systems and software that increase each cable's capacity even as more and more are installed.
Basically, down each end of a piece of fiber, you put different colors of light and pull them out at the ends into, virtual fibers. And the first technology we had in this space, we think we can make, 4 fibers out of this single fiber. And they said, that's fantastic. We don't think we'll ever need 4. By the time we got to deploy it, it was 8. And they said, we're never going to use 8 fibers. And now we're putting literally, thousands of virtual fibers down a single fiber.
In the boom years of the 1990s and early 2000s, building transoceanic cables seemed like a great business to be in.
It was like, where do we build the next one? How do we leverage the debt and equity markets to get the capital? And then let's deploy it very, very quickly.
Mike Constable was at Global Crossing during that time, a company that pre-sold capacity to telecom carriers before cables even hit the water. But then the music stopped.
And at that stage, all the speculation about how much data the world was going to need was not being accurately analysed and forecast. So suddenly the debt levels were super high and they couldn't pay off that debt. So ultimately there was a collapse. Investment pretty much stopped. Around 2002, investment in subsea cables effectively stopped. And it took a long time to see investment come back.
Everybody built so much capacity with this kind of technology because all of a sudden we could scale up the fibers. The challenge was no one knew what to do with that capacity, right? And no one would pay for it.
For years, nothing new was built. But the 21st century brought new demands, this time for financial transactions measured not in milliseconds, but in microseconds. Michael Lewis captured it in Flash Boys, a world where speed meant profit. Joe Hilt, now with Anova Financial Networks, led the commercial team behind a bold new cable called the Hibernia Express.
You were particularly involved, as you say, in the financial part of the business, and obviously people really want to be able to trade fast.
Yeah, and I think we saw there was a cable system that was built between New Jersey and the Chicago Mercantile Exchange.
that was built as a straight line, right? And we said, wow, we're a cable system provider in the Atlantic. Somebody must need between the two financial pillars of the world, in New York and London. 2011, we'd begun signing clients that would become financial customers on the system. And when we did that, we started to do subsea surveys.
Wall Street helped finance it, alongside Chinese partner Huawei. But that set off alarm bells in Washington, and as the pressure mounted, the message was clear. The project wouldn't get approved if it relied on Chinese technology.
We originally had started out with Huawei Global Marine. We had decided to move away from Huawei Global Marine about mid-project, right? And most of that was based on the United States and feelings towards companies like Huawei and H3C at that time.
Huawei was out, along with its technology, and in came TE Subcom and Ciena.
So we did need to make a change in our equipment, and we chose to have a bigger relationship with Ciena. So much like we laid the cable systems with TE Subcom, we decided to make Ciena at that point in time our de facto standard for wavelength services.
Frankly, the whole Huawei piece was really a wake-up call for the West, in general, around the criticality of this infrastructure. By deploying this infrastructure, letting someone, else have that infrastructure was a real challenge.
Unlike others, Ciena hadn't partnered with Chinese firms. For years, that was seen as a mistake, until it wasn't.
And we decided really to be sort of in some ways the sort of our main competitor around the world was Huawei. So we decided to be, the antithesis of that. We had no manufacturing in China. We were very unusual in that regard, but that was a strategic decision on our part. You look at the marketplace now, and you see a very bifurcated market between those that utilize Huawei and those that don't want to, which is really a proxy for geopolitical divide that you're seeing in the world. Governments are very conscious of it now. It's not just left to normal commercial decision making, for sure.
Mike Constable was tapped to lead Huawei Marine as the Chinese giant sought to push past U.S. resistance. But as geopolitical tensions continued to rise, the U.S. stood firm.
So that was really quite damaging at that time. Slowly, our access to, or our invitations to bid on a number of projects started to dry up. We, Huawei Marine, weren't able to build cables into the US. We were not able to build cables into Europe and to other nations such as Australia. In fact, at the time, we had won a contract to build a cable from the Solomon Islands to Australia, and that was subsequently terminated.
The U.S. intervened in several planned trans-Pacific cables, including the Pacific Light Cable Network linking Hong Kong and California. According to Jennifer Bacchus, acting head of the State Department's Bureau of Cyberspace and Digital Policy, it came down to one word: trust.
What started to become apparent to us is that we do not see the world in the same way that China sees the world. And that ultimately, while we view this as a positive way to work together, to bring people together, I think the Chinese view it as a way to control, surveil, and steal. And so as a result, I think it's been a gradual realization that we don't have the same worldview, we don't share the same values.
Pacific Light Cable was one that was going to go to Hong Kong, got shut down. Is that why you decide not to allow them to have a land station in Hong Kong?
So on the Pacific Light Cable, yes, what it would do is if it landed in Hong Kong, the Chinese government could very easily access that landing station and both take any information they wanted to, exfiltrate it, steal it, call it what you want. They also could potentially use that access to interrupt the data flows, to reroute the data flows. There's no way to tear apart espionage from intellectual property theft, from essentially having the dagger poised at your neck that you're going to cut off somebody's communications network.
Is there a cost here in protecting some of the data that you suggest to potentially U.S. businesses competing with their Chinese counterparts in third parts of the world?
What we have found in going around the world is that there's enthusiasm for trusted connectivity, especially when you're talking about subsea cables. And when you talk about how do you attract investment into a country, whether you are a small island state or a large country, they want advanced Western technology. They want AI, they want data centers, they want hyperscale cloud. If you look at sort of the share of the market that HMN Tech, which is the Huawei company, has had worldwide, where they were 5 years ago versus where they are today, they're on a downward trajectory. As countries, economies, and people embrace the idea that they want to have sovereignty and control over their information and over their future success and prosperity.
Google invested in a single fiber pair, which we thought initially was going to be enough capacity. But the one thing Google and all of the hyperscalers always get wrong is forecasting and demand models. Demand has always outstripped actual need. So shortly after completing Unity, we started on a second Transpac cable called Faster, because that's what we kept getting told. Build it faster. We need it now.
Jane Stowell was the first employee for Google's subsea unit when the hyperscaler moved into the business, connecting their data centers around the globe.
There was definitely a rising need, with Google driving that need. So I had never done Latin American cables before, so I turned my attention there and put together a consortium to build from the US to Brazil, and then a second mini consortium to build from Brazil to Uruguay, and then onward to Argentina. One of the important things to understand about putting together a consortium is sometimes it can take as long to build a consortium as it does to build a cable. If you build it yourself, you can move much faster. There are three primary reasons. One is cost, the second is speed to market, and the third is network architecture technology. Google wanted to control all three elements.
You said that historically it's been very difficult to predict demand, that often people are wrong about demand. What is the risk today that there's overbuilding going on?
I think relatively low, because we had been building cables for the internet and for the cloud, for cloud computing. The next advent is AI. This is not just about cables. This is about cables that are connecting the lifeblood of data centers. And for artificial intelligence, you need to build the artificial intelligence models first before you can have the inference for anything that's useful for you and me. So building those models requires mass amounts of data transport to key data centers that are modern, energy efficient, plenitude of energy, and nearby access to subsea cables. So you will see a whole new model of data centers moving outside of city centers to locations with large amounts of reliable power and ready access to big fat pipes of subsea cables.
One such fat pipe is the Hafru cable connecting New Jersey to Norway's low-cost renewable energy. Petter Narbo, executive chairman of Bulk Infrastructure, partnered with Google and Meta on the project.
Norway has about 100% of renewable energy. And we have a surplus of it because we have 100 years of history of building hydropower plants from high altitude lakes that runs in cracks in the river into the ocean, where we harvest the energy several times. So that's why Norway is such a good place for large compute and the new power-hungry industry that we see today.
For hyperscalers like Google and Meta, building and owning subsea cables became much more than simply a cost of doing business. It was the backbone of their growth, and they decided they couldn't rely on others. They had to invest and build for themselves and work directly with firms like Subcom for the cable and gear, and Ciena to provide the optical technology.
The entry point for us was actually aligned around the cloud players coming into that space, because all of a sudden you needed very high speed performance and capacity, step function more than you'd seen in the past. And so the timing of that, was such that these cloud players really wanted a very high performance, submarine cables. Their ambitions are, into all the, most of the countries around the world, and without that submarine cable capacity, and no one was going to build it for them.
Given the demand, why is it that others didn't step in to build what the hyperscalers needed? Projesh Banerjee is Infrastructure Managing Director at KKR and says that the economics are quite different for subsea cables than for other private equity investments.
What has happened historically is that though data demand has gone up exponentially, the price of data has come down substantially over time. So if you owned the cable itself and you owned the fibers, you would have effectively a depreciating asset from a pricing power perspective. Data centers are quite different because data centers, again, yes, you're in a specific availability zone or, connected into network architecture, but the value of that land should be appreciating over time, right? The value, you're not selling bandwidth and connectivity. You're selling power and real estate, very strategic real estate, within a certain availability zone or network architecture.
So if it's the hyperscalers who are destined to be the dominant investors in the undersea cables themselves, what does that leave for other investors?
Where we do see private equity and digital infrastructure funds coming into the market is in the services or the support companies that support the market. So the digital infrastructure funds and the private equity players aren't investing in greenfield networks or building cable systems themselves. They are very focused on, broadly speaking, on the service industry that supports this critical infrastructure.
KKR sees opportunity in the services surrounding undersea cables, providing critical functions that hyperscalers need but prefer not to manage themselves.
Subsea cables are to data centers what railway tracks are to railway stations. You can't just upgrade the stations and the terminals and have those tracks lying completely unrepaired and having them break down, as traffic goes up. You've got to invest in both parts of the ecosystem to ensure that you have uninterrupted service, especially today when the cost of the downtime, right, for the OTTs, for the hyperscalers, for the e-commerce players, the cost of network interruption has gone up meaningfully. So it's mission-critical infrastructure services provided through asset-heavy companies, but not exposed to the actual volume and the price of that data that goes through that fiber system.
As an industry, we have a global fleet of around 60 ships, and around 30% of that fleet is going to reach its end of use-by date within the next decade. So while we are putting tens of billions of dollars of investment into new cable systems, as an industry, we're not putting the same sort of capital to help maintain these systems.
Nobody wants to build a navy, right, to service their own subsea needs, because that's also inefficient. You need independent service providers who can use those same vessels to service other people. So let us build the cable ships and service all the hyperscalers and the telcos. Let them focus on their core competence, their revenue drivers, exactly what they want to be using their capital budget allowances towards, and let us take on the burden of managing the subsea needs.
First came deregulation and the internet boom, and a rush to lay undersea cables. Then came the bust, when overbuilding and deal-making got ahead of business fundamentals. Now we're in the middle of a new boom, powered by hyperscalers and the rise of AI data centers. So what's next? Smith says Sienna is busier than ever, and they are just getting started.
We're still at the very early days of this. If people are going to monetize all this investment that they're making in GPUs and AI, it's got to come out onto the network. It's got to come out of the data centers. I think as an ecosystem, as an industry, we're grossly underestimating how much capacity will be required.
Is there a great investment opportunity? The demand drivers say there are, but really it is who is going to move into this space, because it is dominated by the people who are moving the most data around the world. From the cable industry perspective, we're not quite sure exactly what the development of AI is going to do to the deployment of cables. I think, you know, it's obviously going to require a lot more cable deployments. Just how much, we're not sure.
News when you want it with Bloomberg News Now. I'm Nathan Hager. President Trump is going after fellow Republican Rand Paul as he pushes for quick Senate action on his big tax and spending cut bill. On Capitol Hill last night, the Kentucky senator said he could not support the legislation because it would raise the debt ceiling.
It's just not a conservative thing to do, and I've told him I can't support the bill.
But on Truth Social today, President Trump called Senator Paul's ideas crazy and said he just wants to vote no on everything. Bloomberg's Tyler Kendall reports fiscal hawks aren't the only Republicans who might want to change the bill.
President Trump has to contend with those more moderate members who are raising concerns about really what's at the heart of the spending cuts, which are changes to benefit programs, including how quickly work requirements could be instituted when it comes to Medicaid, and also that the House plans to freeze the Medicaid provider tax and also shift some of that cost sharing on to states.
Bloomberg's Tyler Kendall in Washington. President Trump is pushing to sign the tax cut bill by the 4th of July, but any changes in the Senate would send the legislation right back to the House for even more votes. Bloomberg News has learned NATO is pushing for even more ground-based air defense commitments from European member states. Sources tell us NATO's asking for a 5-fold increase, a new target that'll be discussed at a defense ministers meeting in Brussels on Thursday. It comes as Ukraine ramps up attacks on Russia even further. This morning, Ukraine says it attacked the Crimean bridge with explosives as Russia closed traffic on the span. That followed some of the deepest drone strikes into Russia since the war began more than 3 years ago. Here's Ukrainian President Volodymyr Zelensky.
The strategic operation that we have conducted on the territory of Russia is definitely reducing Russia's potential and demonstrating Russians that Ukraine is working on certain steps, and unless they will stop, we will continue.
Ukrainian President Volodymyr Zelensky spoke to ABC News through an interpreter as the latest round of peace talks with Russia came to an end in Istanbul. It didn't get both sides any closer to a deal, but did lay the groundwork for another prisoner exchange. A big change is coming to South Korea. With 40% of votes counted in the presidential election, opposition leader Lee Jae-myung is on track to win with nearly 49% of the vote. Ruling party candidate Kim Moon-soo's picked up nearly 43%. Lee is already thanking voters for what he calls a great decision, and local media report he's expected to have a call with President Trump tomorrow. Dutch Prime Minister Dick Schoof says he will resign and lead a caretaker government. That's after far-right lawmaker Geert Wilders pulled his Freedom Party out of the country's ruling coalition in a dispute over immigration. We get more on that from Bloomberg's Oliver Crook.
Once again, the perennial issue in Dutch politics is this issue of migration. It's what triggered an election not too long ago that ousted Mark Rutte and then put the Freedom Party by Geert Wilders party into government after many months of coalition building. And this is a government that has stood now for less than 1 year, 11 months, before it's collapsed to be brought down again once more by this issue of immigration.
Bloomberg's Oliver Crook reports all this sets the stage for a snap election in the Netherlands 2 years ahead of schedule. Back in this country, the mayor of Newark, New Jersey, Ross Baraka, is suing the state's top federal prosecutor after he was arrested on a trespassing charge at an immigration facility in his city. That charge was later dropped. Baraka is running in a crowded Democratic field to be New Jersey's next governor. That primary is set for next Tuesday. On Wall Street, stocks are moving higher after an unexpected sign of labor market resilience. Bloomberg's Vinny Del Giudice reports job openings picked up in April.
The number of job openings nationwide rose to 7.4 million in a broad advance. Professional and business services, as well as healthcare and social assistance, led April's gain. Businesses have been hesitant to cut jobs, but jobless claims have been running low, supporting the Federal Reserve's assertion that America's labor market is in a good place. On Friday, the government issues monthly employment data, and economists are forecasting a moderating pace of payroll growth. Vinny Del Giudice, Bloomberg Radio.
All right, Vinny, thanks. Right now, the S&P 500's up 0.4%. The Dow is 0.2% higher. The NASDAQ Composite with a gain of 0.8%. Constellation Energy is up about 1%, trimming some of its gains after the nuclear provider announced it'll sell energy to Meta Platforms from one of its plants in Illinois to meet its insatiable artificial intelligence power demand. The terms of that deal were not disclosed, but the contract's for 20 years, starting in 2027. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlet Food, taking you through to the closing business, as always, as we welcome our audiences across all of our Bloomberg platforms, television, radio, and our partnership with you too, Tim. A bit of a bifurcated trade here. Big gains in the NASDAQ on the day, but you're still seeing the Russell, the transports, and the mid-caps basically straddling in the line between gains and losses.
Yeah, and it's kind of like not really what we saw earlier in the session. We saw stocks were really doing nothing earlier. They got a little bit of a bounce just in the last couple of hours, and we've been hovering around this area. I don't know. Maybe they're thinking about investors are thinking about the economic data that we got today that we'll get later this week. Broadcom earnings after the bell later this week. Not too many catalysts in the near term, I think, that are kind of moving markets right now.
But if you're a cross-asset reporter, it was an exciting day across asset classes. You look at the move in long-term treasuries, oil moving higher, Bitcoin is lower, which you wouldn't expect that on a risk-on day. So under the hood, the cross-asset is interesting.
And don't forget the U.S. dollar near a 2-year low as well. I mean, this could all change later on this week if President Trump and Chinese President Xi Jinping end up having their conversation that we've been teased on for so many days now.
Yeah, I mean, what's that conversation going to look like, though? Because at this point, I'm so confused as to exactly what either country wants. I think I have a sense here of what President of the United States wants, but I'm not really clear how that dovetails with what the Chinese government, at least what they've communicated publicly. All right, we get the closing bells here in New York. Let's take a quick look here. With the Dow Jones Industrial Average relatively unchanged on the day, as it takes a while for these numbers to settle. Seeing EW Scripps actually ringing the bell there on the NASDAQ. And look at that, over at the NYSE Grinder ringing the bell there in honor of the start of Pride Month here in the U.S. The S&P 500 higher by 24 points, or about 0.4%. The NASDAQ up about 0.7% on the day, and the Russell 2000 clinging to gains higher by 4 points, or 0.2%.
Kind of evenly split between gainers and decliners in the S&P 500. 241 stocks moved higher, 261 to the downside.
Yeah, you look at the sector performances, and there's a lot of green here on the IMAP. The only sector to finish in the red is industrials, losing about 0.25%. Healthcare and REITs were basically unchanged on the day, although they did tick into the green at the close, with the S&P 500 ending at its session highs. Energy, the best performer here, as crude oil, as Emily mentioned earlier, getting a big bid. And tech and communication services all gaining as well.
All right, let's take a look at some of the gainers on this day today. Applied Digital up more than 48%. It's a digital infrastructure company, i.e. cloud services for high-performance computing. Shares surged, and get this, it was only the biggest jump going back to September. This after the company entered into 2 lease agreements with CoreWeave in North Dakota. Remember, CoreWeave is the cloud services company. So under these agreements, Applied Digital will deliver 250 megawatts of critical IT load to host CoreWeave's AI and high-performance computing infrastructure at its North Dakota Center campus. Also, keep an eye on what happened with steel and aluminum stocks today. A host of these companies moved higher. I picked out in particular Steel Dynamics, higher by 10% today. This after President Trump said he would be increasing tariffs on steel and aluminum by 50% from 25%. The president did say on Friday that the move would help protect American workers. This was as he visited a U.S. steel plant earlier late last week, I should say. The president also said he would raise aluminum rates in a post on Truth Social. That post said the new rates would become effective this coming Wednesday.
Why did you choose Steel Dynamics and not the others, Tim?
Steel Dynamics was the best performer when I looked in the S&P 500 on a percentage basis.
Oh, okay.
Yeah, so in the S&P 500.
There's a method to his madness.
Okay.
Yeah, there is a method. It was actually a hard decision. I, in fact, even looked at some steel ETFs if I wanted to do one of those.
Ooh. Yeah.
But it was only moving higher by like 2.5%, 3%. I thought this was a more dramatic move. So.
All right. Well, Cleveland Cliffs up 23% on the day.
That was the
best
one
day since 2016.
But that's not in the S&P 500.
How's that for a superlative?
It's not in the S&P 500.
Oh, my gosh.
And the market cap is only a fraction
of
what Steel Dynamics is. So, yeah, there is a method to this madness.
He's got big cap bias.
Hey, there is a little merger action happening. M&A Monday, Blueprint Medicines Corporation, higher today, just surging 26%. Sanofi agreeing to buy the company for at least $9.1 billion. Sanofi is looking to further expand its rare immunological disease portfolio. The company plans to finance the transaction with a combination of cash on hand and proceeds from new debt.
All right, and looking at the decliners right now, DraftKings falling as much as 8.5%. but it actually ended the day down 6% after Illinois lawmakers proposed a sports betting tax increase in the fiscal 2026 budget. Flutter Entertainment was also lower, but the DraftKings drop perhaps more significant here. This was a surprise move from Illinois following last year's unexpected boost. According to analysts at Truist and Oppenheimer, they say that online sports betting operators will have to pay a 25-cent fine on the first 20 million wagers accepted, and then a 50-cent charge thereafter. I'm also looking at shares.
I just want to say, too, we caught up with David Katz at Jefferies, because I was kind of confused as to why the shares are reacting so much. And he said the bigger issue here was that if Illinois does this, then it gives sort of a green light for other states to follow suit, and that would be the real risk. That's his view, not mine.
Right, yeah. I feel like we typically see those fears of like a contagion effect when it comes to anything around sports betting proposals like this one. But now flipping back to Tesla, shares dropped as much as 3.8%, finished the day down 1%. A French industry association said today that Tesla sales plunged 67% to an almost 3-year low in France. And this is undercutting CEO Elon Musk's assertion last month that the car maker has recovered from its early year sales slump. And then finally, advertising agencies fell. Interpublic Group is one of them. The Wall Street Journal reported that Meta is planning to enable brands to fully create and also target ads using AI by the end of next year. And we saw this company, $8.4 billion market cap. It's an organization of ad agencies, finishing the day down 4.5%.
All right. Just real quickly, speaking of trade, we are getting some headlines here out of the border, Customs and Border Administration here in the United States saying that they have extended the pause on U.S. tariffs on some Chinese goods to August 31st. And, of course, there's been a lot of chatter today about more high-level talks between the U.S. and China in resolving this trade dispute here. And, of course, it's hard to keep track of exactly which goods and which tariffs this actually applies to. But the headline here is that it has extended the tariff pause on some Chinese goods until August 31st. Let's take a quick look at yields. They did finish up across the board and across the curve here by about 4 basis points, almost evenly. You're taking a look at that 2-year yield, still holding just below that 4% level. Your 10-year yield at 4.4, and your 30-year yield right now at about 4.9.
Hey, one of the stories that caught our attention today has to do with everything that's happening at Newark Airport. I know a lot of people in the Northeast are focused on this.
Is there anything happening at Newark Airport?
There is. They actually finished a runway ahead of schedule.
Ahead of schedule?
I know. It's pretty wild. They finished a runway ahead of schedule, and now they're set to actually increase flights later this month. This follows the completion of construction at one of the busiest hub's runways. This, according to the FAA, earlier today. The FAA also saying it's going to allow 34 hourly arrivals once it certifies the recently rebuilt runway. It's now limited to a maximum of 28 per hour under restrictions imposed by the FAA to reduce delays. That compares to the typical maximum capacity of roughly 38 landings each hour.
So this increased capacity, it's expected to alleviate congestion and delays at the airport. We'll have to hold them to this. It's interesting because even if the flights are going to increase, will the demand increase? The New York area has a number of different airports that consumers can typically choose from. So it's interesting.
What's your favorite airport, Emily?
What's my favorite?
Yeah.
LaGuardia. But obviously, I mean, you can't fly international, but I love LaGuardia.
Yeah, well, no one can.
Unless you want to go to Montreal. I think there's some nice Montreal flights from LaGuardia.
But you can't go to California, for instance, Tim. When you want to go home, like, that's not a possibility.
It's JFK or Newark. And I was a Newark person until a few weeks ago when I switched all my travel for the summer over to JFK because of the issues that Newark has faced. This is a huge issue for United Airlines, of course, which has one of its busiest hubs at Newark Airport.
Although it has that partnership now with JetBlue, so that does give it more of a, I guess, presence at JFK.
Not overnight, right?
Not overnight,
when they do get those slots at JFK and then JetBlue gets some spots at Newark. We'll see.
Yeah. Okay, so good. That's good. Things kind of returning to normal at Newark, and maybe the IPO market is returning to normal as well. One can hope. Circle Internet Group, as well as its shareholders, increasing the size and price of its IPO. So that, of course, signals perhaps strong demand for the stock. This is the stablecoin issuer. They're now offering 32 million shares between $27 to $28 a pop. That's according to a filing with the SEC.
Yeah, I mean, this is interesting. I mean, we've actually had a lot of IPO activity over the last couple of weeks, and I was actually curious when we were talking about, I can't remember if it was the Mountain or the eToro one, and someone was showing the data about the number of IPOs so far this year, at least through the month of May, higher than last year. over the same stretch of period, and the number of companies going public has been higher as well. You would kind of not think that given all the chaos.
Well, I think what's so interesting is there was this pullback right after the so-called Liberation Day and when markets were in chaos and leading into that. And then as we've seen this steady drumbeat higher, more than 20% from those lows on April 8th, we've seen some of those companies dip back into the markets, and we've seen a stability come back, and we'll see what happens throughout the summer. But it does look like at least some big news coming from when it comes to those tariffs on some Chinese goods coming into the U.S. We'll get more details on that headline on both of our programs.
Could mean for growth. But Jamie Dimon was talking about when it comes to the bond market breaking. Terry Haynes, we're going to speak about, actually says this helps the Trump administration. They could talk about more spending cuts because they could say, look, even Jamie Dimon is talking about how our deficits are ballooning and the bond market might crack.
Well, this is going to be something we'll be debating throughout the week. Meanwhile, we are seeing a little bit of softness coming off the biggest monthly gain in 18 months, the biggest May performance going back to 1990. Today, we're taking back just a bit of that, down about 0.6% on the S&P. You are seeing yields just marginally higher across the board. 10-year yields 4.44. And you could see crude popping. And this is something we're going to get to in a little bit on the heels of a number of attacks overnight between Ukraine and Russia ahead of talks today, supposedly taking place in Turkey. Coming up this hour, we've got Russ Kostrich of BlackRock as trade uncertainty weighs on stocks. Former Trump White House trade official Kate Kulukowicz with U.S.-China trade tensions back on the table, and Matt Hornbach of Morgan Stanley predicting yet more dollar weakness. We begin this hour with stocks lower as tariff concerns weigh on markets once more. Russ Kostrich of BlackRock writing elevated valuations and the potential for further economic disruptions suggest a trading range rather than a quick sprint to new highs. Russ joins us now. Russ, I got to tell you, every single note that I read over the weekend said the exact same thing. It's going to be a trading range. It's going to be choppy. How are you trying to get an edge in this?
Well, good morning. I think there are a couple of things. Again, it's probably no big surprise that people are seeing the challenges you're going to have to, putting new highs in the near term. But I do think we've learned a couple of things in the last few months, one of which the economy is still, as of now, fairly resilient. Second, while tariffs are going to impact prices in the near term, and we probably haven't felt the full effect yet, at least we're going into the situation with inflation coming down, getting closer to Fed's target, so that's a good thing. And finally, earnings were surprisingly good in Q1. So we are thinking about this as a range. One of the things we've been doing, which has worked very well the last few months, is using volatility as an asset class. Thinking about times in the market when you're close to what we would define as the upper end of the range, selling upside, using volatility to manage your downside. Because again, this is a very different market than we had in 23 and 24, where the market just sprinted 20, 25% a year. This year, we've had a ton of vol, and we're within spitting distance of where we started 2025.
Russ, to pick up on your point about the earnings, just that's one piece of the larger puzzle that you were just laying out there. It's something that a lot of people really honed in on. Julian Emanuel of Evercore ISI saying that this is one of the strongest earnings season blowouts since 1992. Lori Calvasina of RBC Capital this morning upgraded their expectation for year-end S&P 500 targets on the heels of some of this earnings performance. Does that make you more bullish on the margins for U.S. equities than you were before the earnings season began?
So certainly I feel better about it because I do think you came out of the earnings season with a couple of things. Not only were the overall earnings strong, one of the things you've noticed in this market is that really since around mid to late April, it's been the mega cap tech companies that have led. And a lot of the strength we saw in earnings season was because of those companies. And if you remember back to January, even before the tariff situation really became exacerbated, there was a lot of concern about would companies spend on AI? Did the DeepSeek news disrupt the narrative about spending on data centers and other types of CapEx? And so far, we have not seen that change. We've still seen a lot of very strong investment by the hyperscalers, and that's given some people confidence in that AI trade. The caveat to all of that is a lot of companies maintain guidance in Q1 into the rest of the year, not so much out of a table-pounding sense of conviction, but more because they just don't know. There's so many uncertainties around policy, around tariffs, about the breadth of the tariffs, that it's still very hard to say with certainty how they're going to affect the economy going into the back half of the year.
What could be the new catalyst then for new highs? Is it going to be trade certainty?
I think certainty would definitely help. I think if we knew the extent, if we were able to plug some numbers into assumptions both about earnings and the broader economy, have a better feeling for what the downside is likely to be in terms of growth, yes, I think that's one catalyst. But the other one is still going to be some of these fundamental bottom-up themes that have really driven the market the last few years. And again, I turn back to some of the resilience we're seeing in mega cap tech, which is really what has helped the market move nearly 20% off of those lows we saw back in April.
But when it comes to mega cap tech, and I'm thinking of companies like NVIDIA at the moment, does it concern you that the Trump administration is really ratcheting up export controls and they want to de-risk when it comes to semiconductors and how much of those can get into China?
Well, just with the tariff situation, again, if we don't know all of the regulatory environment, that's going to create uncertainty, that's going to create a little less conviction. One thing that I think helps in this space, you had this massive correction in those names that actually began last year. It accelerated in January after the DeepSeek news. And of course, we saw the worst of it back in March and April. As a result, again, I don't think I would describe many of the names in this space as cheap. But relative to the broader market, we've seen a pretty significant repricing versus where we were at the peak last summer.
You say in your notes that you have a 3 to 4% position in gold as a hedge against policy uncertainty and also what's going on with the deficit. Is that enough at this moment?
It actually has worked very well. I mean, we've done a lot of analysis on what's the right position. Of course, there is no right answer, but I think that's probably around the right level. And one of the things that it has done, again, we've spoken about this in the past. If you look at gold day to day, it's not necessarily a perfect hedge. It doesn't work as reliably in the short term as, for example, U.S. Treasuries did last decade when there was that very consistent negative correlation between stocks and bonds. But in general, what are you concerned about in this environment? You're concerned about uncertainty. You're concerned about equity market volatility on the back of that policy uncertainty. And you're also concerned about that long-term deficit and thinking about a store of value. In that context, gold works very well. And even though it's not a huge amount, we found it really has been a risk mitigant during the first half of the year.
And going forward, this is one thing that we're watching this week is the Senate coming back to Washington, D.C. and marking up the reconciliation bill. And a real question, especially as the likes of John Waldron of Goldman Sachs and Jamie Dimon of J.P. Morgan coming out and saying this is going to be a real problem if Washington, D.C. doesn't get the deficit under control. How much do you see this time as different? That this is a bond market and this is an investor base that is ready to protest in mass if this bill doesn't pass muster in terms of deficit reduction?
Well, I think this is the key question. Honestly, this is coming up in almost every client meeting I had. There is more focus on the deficit. I think there is more concern than I saw 5 or 10 years ago. Having said that, as we all know, the time is extremely difficult. When does this become a problem? Clearly, it's more acute than it was, let's say, 5 years ago in the sense that we're talking about bond market auctions, not just in the U.S., but also in Japan. That's something I don't remember as much in recent years. So how to think about it, again, there are parts of the bond market we really like. The short, the middle part of the curve, high quality spread has been a key part of the portfolio. But as we've spoken about in the past, we do remain a bit more cautious on the long end of the curve because you've got to ask yourself, are you being adequately compensated to take that long duration risk given the current U.S. fiscal situation?
Russ Kosterich of BlackRock, thank you so much for being with us. And it's something, Anne-Marie, that we keep hearing about, the idea that the 30-year Treasury is a risk asset at a time when it's very hard to calculate what the future might look like.
And that's why everyone asks whether or not the bond market is going to have a seat at the table when it comes to this vote for the one big, beautiful bill. We're talking about the Senate coming back. They have such a tight deadline, July 4th, to try to get this done. Every single senator on the Republican side is basically a king. Thune can lose 3 people because the vice president could be a tie-breaking vote. Well, there's a lot more than 3 people that have issues with this current reconciliation bill that was sent over by the lower chamber.
That's something that sounds like it's a recipe for a mess when everyone thinks that they're a king in Washington, D.C. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. China is accusing the U.S. of violating their recent trade deal and vows to take measures to defend its interests. The Chinese Ministry of Commerce is rebuking President Trump's claim on Friday that Beijing breached the consensus reached in Geneva last month. White House National Economic Council Director Kevin Hassett believes the two leaders could talk this week. Meanwhile, several people were injured in Boulder, Colorado in an attack on an event being held to support Israeli hostages. Police say the weapons appear to be bottles of flammable liquid, and a suspect is now in custody. Colorado Governor Jared Polis issued a statement condemning all hate-filled acts, while Boulder's police chief says it's too early to determine if the motive was terrorism. And former Fed Vice Chair Stanley Fischer has died. Fischer served as vice chairman of the Fed from 2014 to 2017, following 8 years as governor of the Bank of Israel. He mentored a generation of policymakers at MIT, including Ben Bernanke, Mario Draghi, and Kazuo Ueda. Fischer was 81. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, never going to default.
The United States of America is never going to default. That is never going to happen. That we are on the warning track and we will never hit the wall.
Terry Haynes of Geopolitical joins us coming up next on a day we're taking back a little bit of the gains that we saw last month. This is Bloomberg. Coming into a new week, a new month with just a bit of losses after the biggest monthly gain in 18 months going back to 2023. This morning, we're taking back some of that across the board, led by some of the biggest gainers, the big tech names. NASDAQ down by almost 0.7%, S&P futures down by 0.5%. Yields are higher, dollar weaker. That is a continuation of what we have seen in the past, and this comes with
This is an iHeart podcast.
Senator Paul's idea is crazy and said he just wants to vote no on everything. Bloomberg's Tyler Kendall reports fiscal hawks aren't the only Republicans who might want to change the bill.
President Trump has to contend with those more moderate members who are raising concerns about really what's at the heart of this.
The magnitude and the severity of the trade restrictions are in doubt.
Many companies are on pause. They're waiting to see what's going to happen.
One thing that we have seen has been a willingness by the administration to extend deadlines related to tariffs.
What can happen from a policy standpoint can change any minute.
Data, the administration, trade is so volatile, but at this point, I think that we've really seen the worst case.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance in a new week, a new month with a lot of the same problems. Trade tensions piling up between the U.S. and China yet again, with both sides accusing the other of violating recent agreements. Washington, D.C., meanwhile, shrugging off bond market worries despite Jamie Dimon's warning that the market will, quote, crack under the weight of the deficit, and Wall Street counting down to payrolls Friday at a time when traders have no idea what to do with data these days. Anne-Marie, I've got to say, Peter Scheer of Academy Securities summed it up for me over the weekend when he said, for me, sentiment surveys are on the cusp of shifting from confusing to irrelevant. Even the establishment data is not getting the kind of survey responses that usually warrant any kind of particular credibility or support.
Well, what does the data matter when the policy is still so uncertain? And what we hear from corporate America, from what we hear from the Fed, is that everything is on pause. Everyone is wait and see because they're waiting for policy certainty. And we begin today with more policy uncertainty. We thought we had this détente between Washington and Beijing, the world's two biggest economies, and yet we're back to square one. And there's a lot of flame throwing right now and rhetoric when actually the market was almost arguably set up for something more positive.
So let's talk about where we are. We had this idea of a 90-day pause, and then suddenly these recriminations start going on where both sides are saying the other violated. And now it's back to who's going to call who again between Xi Jinping and President Trump?
Exactly. And Kevin Hassett, the director of the National Economic Council, said yesterday on the Sunday shows that he was expecting a call this week between President Trump and President Xi. After Friday, this time on Friday, we got that Truth Social from the president talking about that China is not living up to what they agreed upon in Geneva. China has come back and said, actually, that's not true, and it's the United States that is creating issues when it comes to AI export controls on chips, revoking visas when it comes to Chinese students. So now there's a multitude of issues right now in this détente we saw out of Geneva.
How likely is it that we're going to get some sort of phone call between the leaders of two countries at a time where you're talking about visas getting revoked for Chinese students? You're talking about slow walking the rare earths export license from China. And you've got a lot of pretty volatile language coming out from both sides.
Well, here's the thing. I think before there is going to be a call, everyone's going to go in with their maximalist approach and hottest rhetoric. So potentially we could see a call today. And even the Treasury Secretary is also leaning on at some point there will be a call. But I'm sorry, not today, this week. But the Commerce Ministry of China has come out with some pretty harsh words. So potentially Beijing is going to look at this and say, we're going to slow walk this, because something the United States has made really clear, they want those licenses when it comes to the critical minerals they need for the industrial supply chain.
Yeah, the language of the Chinese Commerce Ministry, if the U.S. insists on going its own way and continues to undermine China's interests, China will continue to resolutely take forceful measures to safeguard its legitimate rights and interests. Meanwhile, we also have, of course, budget discussions that are ongoing in Washington, D.C., with the Senate reconvening and possibly taking up the reconciliation bill. This is going to be quite a fight at a time where you have Wall Street officials, and yes, Jamie Dimon's been sending out this warning for quite a bit, saying this time is different. The deficit looks more concerning, and we will act quickly if we don't like what we see.
Exactly. But for years, Jamie Dimon has been saying Washington, D.C., the government has been spending like drunken sailors. And they are. And this bill, this tax and spending bill, they will spend. One thing the Treasury Secretary did push back on this weekend was the fact that the CBO does not take into consideration other things the Trump administration is considering when it comes to the extension of TCJA and some other priorities of the president, things like the tariff revenue they are bringing in, and also what this could mean for growth. But Jamie Dimon was talking about when it comes to the bond market breaking. Terry Haynes, we're going to speak about, actually says this helps the Trump administration. They could talk about more spending cuts because they could say, look, even Jamie Dimon is talking about how our deficits are ballooning and the bond market might crack.
Well, this is going to be something we'll be debating throughout the week. Meanwhile, we are seeing a little bit of softness coming off the biggest monthly gain in 18 months, the biggest May performance going back to 1990. Today, we're taking back just a bit of that, down about 0.6% on the S&P. You are seeing yields just marginally higher across the board. 10-year yields 4.44, and you could see crude popping. And this is something we're going to get to in a little bit on the heels of a number of attacks overnight between Ukraine and Russia ahead of talks today, supposedly taking place in Turkey. Coming up this hour, we've got Russ Kostrich of BlackRock as trade uncertainty weighs on stocks. Former Trump White House trade official Kate Kulukowicz with U.S.-China trade tensions back on the table, and Matt Hornbach of Morgan Stanley predicting yet more dollar weakness. We begin this hour with stocks lower as tariff concerns weigh on markets once more. Russ Kostrich of BlackRock writing, elevated valuations and the potential for further economic disruptions suggest a trading range rather than a quick sprint to new highs. Russ joins us now. Russ, I got to tell you, every single note that I read over the weekend said the exact same thing. It's going to be a trading range. It's going to be choppy. How are you trying to get an edge in this?
Well, good morning. I think there are a couple things. Again, it's probably no big surprise that people are seeing the challenges you're going to have to, putting new highs in the near term. But I do think we've learned a couple things in the last few months, one of which the economy is still, as of now, fairly resilient. Second, while tariffs are going to impact prices in the near term, and we probably haven't felt the full effect yet, at least we're going into the situation with inflation coming down, getting closer to Fed's target, so that's a good thing. And finally, earnings were surprisingly good in Q1. So we are thinking about this as a range. One of the things we've been doing, which has worked very well the last few months, is using volatility as an asset class. Thinking about times in the market when you're close to what we would define as the upper end of the range, selling upside, using volatility to manage your downside. Because again, this is a very different market than we had in 23 and 24, where the market just sprinted 20, 25% a year. This year, we've had a ton of vol, and we're within spitting distance of where we started 2025.
Russ, to pick up on your point about the earnings, just that's one piece of the larger puzzle that you were just laying out there. It's something that a lot of people really honed in on. Julian Emanuel of Evercore ISI saying that this is one of the strongest earnings season blowouts since 1992. Lori Calvasina of RBC Capital this morning upgraded their expectation for year-end S&P 500 targets on the heels of some of this earnings performance. Does that make you more bullish on the margins for U.S. equities than you were before the earnings season began?
So certainly I feel better about it because I do think you came out of the earnings season with a couple of things. Not only were the overall earnings strong, one of the things you've noticed in this market is that really since around mid to late April, it's been the mega cap tech companies that have led. And a lot of the strength we saw in earnings season was because of those companies. And if you remember back to January, even before the tariff situation really became exacerbated, there was a lot of concern about would companies spend on AI? Did the DeepSeek news disrupt the narrative about spending on data centers and other types of CapEx? And so far, we have not seen that change. We've still seen a lot of very strong investment by the hyperscalers, and that's given some people confidence in that AI trade. The caveat to all of that is a lot of companies maintain guidance in Q1 into the rest of the year, not so much out of a table-pounding sense of conviction, but more because they just don't know. There's so many uncertainties around policy, around tariffs, about the breadth of the tariffs, that it's still very hard to say with certainty how they're going to affect the economy going into the back half of the year.
What could be the new catalyst then for new highs? Is it going to be trade certainty?
I think certainty would definitely help. I think if we knew the extent, if we were able to plug some numbers into assumptions both about earnings and the broader economy, have a better feeling for what the downside is likely to be in terms of growth, yes, I think that's one catalyst. But the other one is still going to be some of these fundamental bottom-up themes that have really driven the market the last few years. And again, I turn back to some of the resilience we're seeing in mega cap tech, which is really what has helped the market move nearly 20% off of those lows we saw back in April.
But when it comes to mega cap tech, and I'm thinking of companies like NVIDIA at the moment, does it concern you that the Trump administration is really ratcheting up export controls and they want to de-risk when it comes to semiconductors and how much of those can get into China?
Well, just with the tariff situation, again, if we don't know all of the regulatory environment, that's going to create uncertainty, that's going to create a little less conviction. One thing that I think helps in this space, you had this massive correction in those names that actually began last year. It accelerated in January after the DeepSeek news. And of course, we saw the worst of it back in March and April. As a result, again, I don't think I would describe many of the names in this space as cheap. But relative to the broader market, we've seen a pretty significant repricing versus where we were at the peak last summer.
You say in your notes that you have a 3 to 4% position in gold as a hedge against policy uncertainty and also what's going on with the deficit. Is that enough at this moment?
It actually has worked very well. I mean, we've done a lot of analysis on what's the right position. Of course, there is no right answer, but I think that's probably around the right level. And one of the things that it has done, again, we've spoken about this in the past. If you look at gold day to day, it's not necessarily a perfect hedge. It doesn't work as reliably in the short term as, for example, U.S. Treasuries did last decade when there was that very consistent negative correlation between stocks and bonds. But in general, what are you concerned about in this environment? You're concerned about uncertainty. You're concerned about equity market volatility on the back of that policy uncertainty. And you're also concerned about that long-term deficit and thinking about a store of value. In that context, gold works very well. And even though it's not a huge amount, we found it really has been a risk mitigant during the first half of the year.
And going forward, this is one thing that we're watching this week is the Senate coming back to Washington, D.C. and marking up the reconciliation bill. And a real question, especially as the likes of John Waldron of Goldman Sachs and Jamie Dimon of J.P. Morgan coming out and saying this is going to be a real problem if Washington, D.C. doesn't get the deficit under control. How much do you see this time as different? That this is a bond market and this is an investor base that is ready to protest in mass if this bill doesn't pass muster in terms of deficit reduction?
Well, I think this is the key question. Honestly, this is coming up in almost every client meeting I had. There is more focus on the deficit. I think there is more concern than I saw 5 or 10 years ago. Having said that, as we all know, the time is extremely difficult. When does this become a problem? Clearly, it's more acute than it was, let's say, 5 years ago in the sense that we're talking about bond market auctions, not just in the U.S., but also in Japan. That's something I don't remember as much in recent years. So how to think about it, again, there are parts of the bond market we really like. The short, the middle part of the curve, high quality spread has been a key part of the portfolio. But as we've spoken about in the past, we do remain a bit more cautious on the long end of the curve because you've got to ask yourself, are you being adequately compensated to take that long duration risk given the current U.S. fiscal situation?
Russ Kosterich of BlackRock, thank you so much for being with us. And it's something, Anne-Marie, that we keep hearing about, the idea that the 30-year Treasury is a risk asset at a time when it's very hard to calculate what the future might look like.
And that's why everyone asks whether or not the bond market is going to have a seat at the table when it comes to this vote for the one big, beautiful bill. We're talking about the Senate coming back. They have such a tight deadline, July 4th, to try to get this done. Every single senator on the Republican side is basically a king. Thune can lose 3 people because the vice president could be a tie-breaking vote. Well, there's a lot more than 3 people that have issues with this current reconciliation bill that was sent over by the lower chamber.
That's something that sounds like it's a recipe for a mess when everyone thinks that they're a king in Washington, D.C. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. China is accusing the U.S. of violating their recent trade deal and vows to take measures to defend its interests. The Chinese Ministry of Commerce is rebuking President Trump's claim on Friday that Beijing breached the consensus reached in Geneva last month. White House National Economic Council Director Kevin Hassett believes the 2 leaders could talk this week. Meanwhile, several people were injured in Boulder, Colorado in an attack on an event being held to support Israeli hostages. Police say the weapons appear to be bottles of flammable liquid, and a suspect is now in custody. Colorado Governor Jared Polis issued a statement condemning all hate-filled acts, while Boulder's police chief says it's too early to determine if the motive was terrorism. And former Fed Vice Chair Stanley Fischer has died. Fischer served as vice chairman of the Fed from 2014 to 2017, following 8 years as governor of the Bank of Israel. He mentored a generation of policymakers at MIT, including Ben Bernanke, Mario Draghi, and Kazuo Ueda. Fischer was 81. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahira. Up next, never going to default.
The United States of America is never going to default. That is never going to happen. The we are on the warning track and we will never hit the wall.
Terry Haynes of Pangea Policy joins us coming up next on a day when we're taking back a little bit of the gains that we saw last month. This is Bloomberg. Coming into a new week, a new month with just a bit of losses after the biggest monthly gain in 18 months going back to 2023. This morning, we're taking back some of that across the board, led by some of the biggest gainers, the big tech names. NASDAQ down by almost 0.7%, S&P futures down by 0.5%. Yields are higher, dollar weaker. That is a continuation of what we have seen in the past. And this comes with, under surveillance this morning, never going to default.
The United States of America is never going to default. That is never going to happen. That we are on the warning track and we will never hit the wall. The deficit this year is going to be lower than the deficit last year, and in 2 years it will be lower again. We are going to bring the deficit down slowly. So the goal is to bring it down over the next 4 years, leave the country in great shape in 2028.
Here's the latest. Treasury Secretary Scott Bessent pushing back against concerns the U.S. will not meet its debt obligations. Republican leaders in Senate set to begin negotiating President Trump's tax bill, which includes an increase in the debt limit this week. Bloomberg's Tyler Kendall joins us now from Washington. Words you never really want to be saying. We're not going to default. How much of a concern is this on Washington, D.C., as the Senate heads back to deliberations?
Yeah. Hey, Lisa. Good morning. Well, it probably depends on who you ask and how motivated they are to really make this a focal point and a priority. As we know, one of the biggest issues of doing this as one big, beautiful bill is that there's other priorities on the table that Republicans are ultimately trying to get through. And in fact, Lisa, I actually posed one of your top questions to members of the House when they were negotiating this about whether or not they were looking at the bond market here. And you had members like Congressman Tim Burchett, a Republican from Tennessee, telling me, yes, he thinks, in fact, it's a canary in the coal mine. But then ultimately he ended up voting for the legislation as it stood. Now, the administration, for their end, really has been focusing more on what they say will ultimately grow the economy. I was at Treasury Secretary Scott Bessent's latest testimony on Capitol Hill last month, where he said that, yes, this bill will contribute to long-term debt in this country, but they're more focused on stabilizing the debt to GDP ratio, which he says will happen if the administration is able to implement what they think are pro-growth policies. But of course, a lot needs to really happen here at the end of the day. Treasury Secretary Bessent pointed to tariff as a revenue raiser as one example in some of his interviews over the weekend. But the question really becomes, is the Senate going to make some sort of meaningful changes to ultimately address this issue? And perhaps one of the biggest sticking points here is when it comes to lifting the debt ceiling. That could really be one of the areas that needs perhaps the most negotiation. Lisa, keep in mind the House plan would lift it by $4 trillion, but the Senate blueprint had originally called for lifting it by $5 trillion.
Taylor, I said earlier that everyone in the Senate is a king. The margins are just too slim. Who are you watching to make sure that this bill actually gets passed?
Anne-Marie, there are a few key senators that are emerging here. One is Rand Paul, a Republican from Kentucky. In fact, it seems President Trump is watching his vote as well. He singled him out in a post on Truth Social over the weekend. Lifting the debt ceiling is really one of the biggest issues here for Senator Paul, who has said he's not going to vote for any legislation that would do as such, and doubled down on his position in some interviews over the weekend, saying that at the moment the math just isn't adding up for him. He's sort of falling in line with some other members who are sort of pitching themselves as fiscal hawks, including Mike Lee of Utah, Ron Johnson of Wisconsin, and Rick Scott of Florida, who's really considered to be a key ally of President Trump's. And then on the other side of this, watch closely those more moderate senators who have said that they have some issues with those changes to Medicaid, such as Lisa Murkowski or Susan Collins. And then lastly, Anne-Marie, keep your eye on Josh Hawley of Missouri. He's someone who's really trying to thread the needle here when it comes to his broader support of the package, but has said that he does not like any changes to Medicaid, and he wants to see perhaps some bigger pullbacks when it comes to those IRA subsidies. Just another thing in this big, beautiful bill that we're closely watching.
Tyler Kendall, thank you so much. As always, we'll be catching up with you in just a little bit. Terry Haynes of Pangea Policy joins us now, and Anne-Marie nailed it. The line of the weekend really stood out to me from you, which is that Jamie Dimon's comments about the bond market potentially cracking somehow helps this administration. How does that make sense?
Well, thank you for that first. And secondly, I follow that context because I read Bloomberg. So, and Bloomberg, I thought, reported very well on Diamond's comments. But Diamond's point was that if there's a crack in the bond market, firstly, it could be in months, it could be in 6 years, I think he said. It's because of essentially the decade plus of fiscal incontinence support. These are my words. Fiscal incontinence supported by accommodative monetary policy. So, that's short of full-throated support for Trump and Bassett. But what it does say, and what I think the White House probably picks up on, is this is a mess we didn't create, and it takes us a while to unravel it. And you heard that in Besant's comments loud and clear yesterday.
Well, Terry, what's the alternative? Americans' taxes go up next year?
Well, yeah, essentially, yeah. I mean, they're up against the wall in that sense. So they're not going to preside over anything that increases Americans' taxes, so they won't. And Besant's comment, of course, was essentially Rome wasn't built in a day, and neither was this situation, and we're going to decrease the deficit gradually over time. I think what Besant isn't saying, I don't think he's hiding it, but I think what he isn't saying is the bogey everybody's really looking at isn't debt or deficit, it's debt service. And debt service just became the largest category of spending last year for the first time, and they are focused on getting rid of that, largely because you can't be a great power for very long and have your wealth sucked into the black hole of debt service.
When you see the bond market pushing back, Terry, is it about the uncertainty regarding trade policy? I mean, just over the weekend, we also potentially are going to see 50% now on steel and aluminum, as well as all the tit for tat regarding China. Or is it about the spending plans and the one big beautiful bill?
I think it's a little bit of both, frankly. I mean, there's some restiveness generally. It's not just the United States, as you all know, about the spiraling levels of debt across the board, whether it be United States, whether it be the UK, European Union, whether it be China. And Besant's point about China is correct. It's not in great shape itself. So they're trying to do what they can to force a deal there.
Terry, when you talk to people in D.C., how concerned are they that the three-pillar stool is kind of having some issues, is getting a little bit wobbly right now at the increase in tensions between U.S. and China, as well as this question about how quickly they can get through this bill?
It is much clearer in Washington than it is to markets, for whatever reason, that so much of this has to do with geopolitics. My top theme, as you all know, is geopolitics is essentially, for the United States, is essentially driving economic policy. They see it very much that way, too. That's very transparent. Concerns alone about the lack of defense industrial base have been mounting for years. And the way to look at the manufacturing push, the way to look at what happened with U.S. Steel and Nippon Steel is an attempt to address that, frankly. And it's the major reason why Trump and Republicans are going to continue along to try to put the United States economy in the best growth position to counter China and be much more attractive partners to countries from the UK to Australia to India and everywhere in between.
Yeah, but is it working, Terry? I mean, this is what I'm asking, given the fact that China and the U.S. seem to be at an impasse. There's a question about how quickly some of these other deals can get through, given the fact that we keep hearing deals are going to be announced any day now.
I'll take the glass half full on that. Again, my bogey on this is probably around July 4th, partially because that's what Trump wants for the tax bill, partially because a lot of the other trade-related things, major trade deals and the like, as well as decisions on reciprocal tariffs, are all scheduled to hit at that time. So what they're hoping is that they combine a series of events that provide a much more positive market direction and a much more positive look for the United States economy.
Terry Haynes of Geopolitical, thank you so much for being with us this morning, and good luck this week. I do wonder, Anne-Marie, how close some of these deals are. We have heard Kevin Hassett talk about there are a couple of deals that it could be announced any day now. We've talked about Japan. We know that the UK was announced, but there's still some details that are trying to get worked through.
Yeah, and the UK now has questions, talking to the Financial Times over the weekend about what the 50% new aluminum and steel tariff level might mean for the deal that just a few weeks ago they already inked.
And it does look like potentially Canada and Europe are the ones that end up with the biggest part of that. Coming up, we're going to discuss this a bit more. Former Trump trade official Kate Kalukowicz as U.S.-China trade tensions ramp up yet again. From New York, this is Bloomberg. Coming into a Monday with a bit of a softer tone after the biggest May performance for the S&P 500 going back to 1990. The biggest return, more than 6% going back 18 months since 2023. Today we are softening a bit, led by some of the biggest winners are becoming the biggest losers. NASDAQ down about 0.7%. Take a look at what's going on in the currency space. We have seen a consistent dollar weakening trend, and that continues this morning with now the euro at the strongest versus the dollar in more than a month going back to late April, and it goes at a time when Morgan Stanley is talking about the dollar poised to weaken an additional potentially 9% over the next year, with many other banks piling on and saying the same. 3 hours away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with steel stocks soaring after President Trump said he'll double tariffs on steel imports from 25 to 50%. So the big winners are American steel companies like Cleveland-Cliffs. Those shares are up more than 30%, as well as Steel Dynamics and Nucor. And just to give you an idea of where we stand, the U.S. still imports 17% of its steel. So yes, this move will help domestic producers, but it's a headache for those in the auto and housing sectors, which will see material costs rise as a result of these staggering 50% tariffs. And speaking of autos, we are seeing shares of Stellantis falling nearly 3% now. Some of that having to do with the steel tariff impact, since it does have factories here in the U.S. But also, we got numbers out of France for new car registrations showing overall weakness in the auto sector there, and the declines were led by Stellantis. And last up, we end on some M&A action. We are seeing Blueprint Medicines up to nearly 27% now after Sanofi agreed to buy the U.S. biotech for $129 a share in cash. That represents a 27% premium to Blueprint's closing price on Friday, and that is a hefty price in a market where pharma M&A has been cautious. We haven't seen big deals like this one out of pharma this year. Lisa?
Thank you so much, Yahaira. And it seems like a bit of a merger Monday coming back, which is actually notable after the absence of any such deals earlier this year.
Yeah, potentially they're feeling like it's a green light to actually do something, maybe a little bit more of reading the tea leaves in Washington, D.C. and the push for deregulation, easier business environment out of the Trump administration.
So how do you read this tea leaf? On our radar this morning, China accusing the U.S. of severely violating their 90-day trade truce, saying the White House is imposing new discriminatory restrictions with its AI chip export guidelines and design software sale curbs. This just puts another potential wrench in the works when it comes to this ongoing discussion.
Right, and it's a flare-up, new war of words between these two after we saw that détente. But that détente was just a month ago. The question I really have going into this week is, now that we have this war of words between Friday and today, between Washington and Beijing, what does this mean for the call that we were expecting between Xi Jinping and Donald Trump? And we're expecting that call because the White House told us they were expecting a call this week. And you have to just wonder, does this just diminish that? And that means that potentially this is going to be further pushed. And this relationship, which seemed to be moving in the right direction in terms of dialogue, is now put on ice.
We're going to be talking more about this with Kate Kalukowicz, which I think is going to be a really important conversation, in part also to understand what are the ultimate goals, because I feel like that's part of what's getting lost in this conversation. What does this new trade relationship even look like? We'll get to that in 1 second. In the meantime, the European Union saying it's prepared to impose countermeasures after President Trump threatened to double tariffs on steel and aluminum to 50%. Existing and new EU levy measures are set to take effect on July 14th. It feels like we're moving perhaps a bit further away from some sort of détente here as well.
So the EU had paused those countermeasures, but they have a list somewhere. So when they say they're going to come out and respond to this 50% new tariff, potentially a higher threshold on steel and aluminum, what does that mean when it comes to the EU countermeasures? They have that list. Are they just going to ratchet up their tariff level as well? We don't know. But I would imagine a lot of this right now is also just tension brewing, why they tried to work out a trade agreement. But can they get this done in time? Because they are one of a handful of countries that are also trying to get to the finish line with this administration.
But aren't they actually cracking down on China, too, right now?
They are. They're looking at the procurements when it comes to China, and they are talking a little bit tougher. Potentially, that is something the United States wants to see out of the European Union before they ink a deal.
The other aspect that people are keeping close eyes on is Russia and Ukraine set to resume peace talks in Turkey later today. The talks come after Ukraine staged one of its boldest aerial attacks on Russia, and Moscow retaliated with a drone and missile attack against Kyiv that killed at least 12 people. Ukraine's attack on Russia targeted planes that were capable of delivering nuclear loads as well as other potential equipment. What do we know about how much this was an escalation?
Long-term planning on Ukraine's part to carry this out. Zelensky said 34% of Russia's strategic bombers were hit. At the same time, then, Moscow did respond, and you saw a barrage of missiles down on Kyiv. And this sets the tone going into today's meeting. Samuel Sharap, who I follow, who at RAND, talked about the fact that when you read headlines proclaiming today's talks a failure, bear in mind the expectations of anything resembling a breakthrough at this stage in the process do not reflect the realities of the war. This is going to be a long, hard slog. And I think those realities were on full display the past 24 hours.
We'll be keeping track of that throughout the day. Turning back to trade, China hitting back at the Trump administration, accusing the U.S. of violating its trade truce. Former Trump trade official Kate Kalukowicz joins us now. Kate, thank you so much for being with us. What's your take on the ratcheting up in tensions that we saw between the officials in China and the U.S. over the past 4 or 5 days?
It has been a whirlwind, I think, in the U.S.-China space. Of course, we saw huge tariffs. We saw those tariffs come down without much else agreed between the two parties. And now this war of words. I think it lends itself to the fact that some of the very baseline issues between the two nations remain very much in place, even though domestic pressure forced both sides to bring those tariffs down. So we're very much in the same space without the tariff pressure, I think.
Kate, is there really going to be an agreement if there isn't some understanding between the two countries on the AI sector and advanced semiconductors?
Well, you know, I suppose it depends on what China is willing to accept here, because I think that it's very clear from the United States perspective that these types of export restrictions on high-tech goods are here to stay. In the big strategic economic competition with China, the focus from both sides, frankly, in D.C., has been to restrict access of these technologies. So unless China is willing to accept that, I think we're not going to see an agreement. They're going to have to decide, I think, whether this is a status quo that they can move forward with.
Is there a chance that the Trump administration gives in more and allows them some more access to this sector?
Well, you know, President Trump, of course, has sent some mixed messages around what he expects and hopes from China. After the tariff detente, the president announced his long-term goal is to do business with China, which, you know, undermines a bit this notion that we could really sever our economies. So I wouldn't say never. The president certainly has shown, you know, willingness to walk back some of his strong rhetoric. But this will be difficult because, you know, in a bipartisan way, Congress has been quite firm on this point.
The rhetoric we've seen, the war of words back and forth over the weekend from Friday to today, could that derail a potential talk that Kevin Hassett said we should expect this week between the two leaders?
I suppose it could, although the signals I see on the U.S. side, at least, are very strong language from the president, softer language, of course, from his you know, cabinet officials. We saw Ambassador Greer, Secretary Bessent try to walk back a bit the very strong tone to say things aren't going great, but we're hoping the leaders will speak. So the U.S. at least is sending a very strong signal that it would like to see a leader-level discussion.
Do we have a sense, Kate, of what the ultimate goal is? It feels like that's getting lost in all of this. Is the idea to decouple with respect to tech between the U.S. and China at a time where NVIDIA is saying that that's not the answer? Is it to just isolate China with the allies that we have, albeit in a somewhat messy way? We don't have a real sense of that through all of this, do you?
Well, I wish I could help come up with a stronger, clear plan here. The reality is the president has many many goals when it comes to economic relationships with the rest of the world. And at times these do appear somewhat to conflict with one another. As I said, I do think his long-term goal here is to reset the relationship with China, but to continue to have an economic relationship with China. Regrettably, I think some of these other discussions, whether it's with the Europeans, India, others, these steel and aluminum tariff announcements, cloud the framework of where we're going to go with China. So I'd say we're not quite there yet. I don't know that the president has been as specific as he needs to be with the Chinese as to where he hopes to go. And so we're going to need to have a little bit more discussion before we can see something emerging.
We heard over the weekend from a number of different advisors to President Trump that July 9th is the deadline and it will not be extended past that in terms of the reciprocal tariffs. Do you believe that?
Well, I think the president is always flexible. And I think if we need to go beyond July 9th, we'll find a way to go beyond July 9th. Of course, the president is a bit on his heels given the court decision last week. But I think it means that he's going to show signals that he can move tariffs forward in other manners, as we've seen. We saw the announcement on steel and aluminum. He has quite a few other tools in his toolbox to bring to the ready. So I think other nations really ought to continue negotiating with the United States and keep this date in mind. It benefits them as well to negotiate some deals before the president starts to use these other tariffs. But if we need to extend, I think the president and certainly Secretary Bessent has indicated if we need more time, we'll take more time.
Just quickly, when you talk to your clients, what are the risk dates, the risk events that you have that you flag to them saying this actually you need to keep your eye out for?
Well, when I talk to my clients, I really say, predicting is too late in the game. We need to anticipate big outcomes as opposed to the actual when and the dates into when they might occur, because we know the president wants to move on large-scale sectoral tariffs. Beyond IEEPA, beyond China, we are anticipating several big decisions this summer when it comes to semiconductor tariffs, pharmaceutical tariffs, copper, critical minerals, and a range of other 232 tariffs. We have impending review of the U.S.-Mexico-Canada agreement. So when I speak to my clients, we're working to prepare for all of these eventualities to ensure that they're well positioned even before a date is announced.
Kate Kalukowicz, former Trump trade official, thank you so much for being with us. And Anne-Marie, I guess that's kind of what we saw with the 50% steel tariffs. That wasn't on my bingo card. Was that something that was on your radar?
Well, potentially this was the president delivering to a constituency that he said he was going to block this Nippon Steel, U.S. Steel deal, and said allowing it to go through. We're still waiting on a lot of these details, but at the same time saying, but I'm going to make it harder for all of that steel that's coming into the United States to come in. They have no choice now but to buy American.
More on that in just a bit. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. OPEC Plus has agreed to increase oil output for the third month in a row, despite reservations from Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July, matching increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share, and satisfy President Trump's desire for cheaper oil. Meanwhile, dozens of people have been killed near two aid distribution stations in the Gaza Strip. Medics and witnesses say Israeli forces fired on Palestinians gathering in southern Rafah and the Netzarim corridor. Israel's military denies those claims based on what it calls its initial inquiry. Meanwhile, a U.S. proposal for a ceasefire that would increase aid to Gaza is in limbo after Washington rejected a Hamas counteroffer. And billionaire Elon Musk said he is not using the ketamine, disputing a report by the New York Times. Musk wrote on X, "I tried prescription ketamine a few years ago and said so on X, so this is not even news." The Times reported on Friday that Musk had used drugs more heavily than previously known during Trump's presidential campaign, and that he took ketamine often and also used ecstasy and psychedelic mushrooms on occasion. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, doubting the dollar.
If I'm a long-term investor, I may have my doubts about the dollar, but I want to wait for those, for those doubts to be confirmed. You don't want to be, upstream without a paddle.
That conversation coming up next with Matthew Hornbach of Morgan Stanley. Right now, we are seeing a weaker dollar with the euro at one of the strongest levels that we've seen it going back more than a month. This is Bloomberg Surveillance. Welcome back to a new trading week. Right now we're looking at a bit of softness in the heels of increased trade tensions. What a surprise after a weekend where there are some headlines. And it is causing a bit of a retracement after last month's blowout returns. We are seeing it led by the tech sector. NASDAQ down 0.6%, S&P lower by 0.5%. You can see yields higher. So this move that we've seen, this sort of negative, this unfortunate positive correlation between bonds and stocks where yields go higher. Bonds sell off in tandem with stocks across the board, although led by the long end. 30-year yields 4.96%. And what you can see in the currency space is ongoing dollar weakness. This question of how much are we seeing a flight from U.S. assets, in particular the dollar, with the euro at one of its highest levels, strongest levels versus the dollar going back to late April. Under surveillance this morning, doubting the dollar.
It's not a story of the U.S. getting worse than everyone, but it's a story where the U.S. falls back into the pack. If I'm a long-term investor, I may have my doubts about the dollar, but I want to wait for those, for those doubts to be confirmed. You don't want to be, upstream without a paddle.
Here's the latest. Dollar sell-off accelerating as trade and geopolitical tensions take center stage yet again. Matt Hornbach and the team at Morgan Stanley looking for the greenback to hit COVID-era lows within the next year, predicting the U.S. dollar index will fall 9% even after the big decline so far this year. Matt joins us now. Matt, it is wonderful to see you. It's been way too long.
Yeah,
Welcome.
Thanks for having me on the show.
Yeah, you guys wrote a really interesting note over the weekend talking about your full year review. The dollar is going to weaken, even though you still see potential upside for other U.S. assets. Explain.
Well, investors in the United States, Lisa, have a tremendous home bias, and we don't think that is changing anytime soon. What we're really seeing is investors outside of the United States take a second look at their exposures to the U.S., both in terms of their asset holdings, but also in terms of the currency exposure that they have related to those asset holdings. So one of the things that we're expecting are investors outside of the U.S. to increase their currency hedge ratios. And that's not something that requires them to sell U.S. assets. They don't need to sell the money that they have in the S&P 500, but maybe they take up their currency hedge ratios. And that is one of the factors that we think will be putting downward pressure on the dollar over the next 12 months.
It's one thing if investors don't want to go into dollar-denominated assets. It's another thing, and I'm talking about international investors. It's another thing if they actually are trying to just hedge against the dollar. It's two different things. And there's this question about the bond market and whether these international investors are wary of parking their money there. How do you see a scenario where yields could go down? You could see a bid into the bond market even at a time of international flight from the dollar.
Yeah, well, this is exactly why we think that in this move to lower yields that we're forecasting, you have a very large curve steepening. In fact, it takes the shape of the curve to levels that existed the last time the dollar hit those lows that you mentioned earlier. So we are expecting the Fed to cut rates, not this year, but next year. We've got the Fed cutting 175 basis points next year. That is way more than you see priced into the bond market today. And that's one of the main factors that drives yields lower. But that move is primarily driven in the long and the short end of the curve. So you get this very large yield curve steepening, and that's going to bring us back to levels that existed before the GFC, we think. When it comes to the dollar, is the direction of travel highly dependent on trade policy? It is dependent on trade policy, no doubt. If the reciprocal tariffs were to go back into effect, that's not the baseline view of our public policy strategists, but if we do see something like that, then I think we would have to adjust lower our dollar forecasts. And they're already well below current levels. They're well below consensus forecasts. So we would probably have to change them again if the reciprocal tariffs went back into effect. That's not our baseline, but certainly, somewhere in the realm of possibility.
So what are you recommending to go long on if it's not the dollar?
Well, the currencies that we are most interested in buying would be the euro and the yen. Effectively, the DXY index, if you wanted to summarize it, would be the index that we would be trading the dollar short from. But those would be primarily the two currencies that we like the most.
As I was reading your note over the weekend, I was struggling to understand this idea of a much steeper curve and yet a growth environment that would be conducive for risk assets. I'm thinking about the housing market. I'm thinking about businesses borrowing long in order to make cap expenditures and things of that nature. How do you have that type of scenario when you have a yield curve that looks something like how it did before the great financial crisis?
Yeah, well, we do have growth slowing. That's important. When you talk to Seth Carpenter or Michael Gapin, what they're going to tell you is growth slows, but it doesn't dip into recessionary territory. And it's that type of slower growth, lower interest rate environment that ultimately will sow the seeds for a rebound in economic activity beyond our forecast horizon. Financial markets are forward looking. So by the time we get to the end of our forecast horizon, right, in the end of 2026, you should have some asset prices having a bit more of an optimistic view on what comes thereafter. But that's not something that we're forecasting in the next 6 to 12 months.
How do you price in the deficit, which seems to be the boogeyman for everyone from Jamie Dimon to John Waldron of Goldman Sachs? You have a lot of officials that are coming out and saying this is going to be the U.S.'s Liz Truss moment. How do you shrug that off and say this is something much more pedestrian and normal?
Well, look, I've been listening to investors ask me about these big deficits for 25 years. I've been, talking about bond vigilantes for 25 years. I don't know where they are. The bond vigilantes show up every so often, and then they go hibernate for the next 10 years. So, I guess I'm growing a little tired of it, to be honest. But it is a topic that is worth talking about every so often. And I think the type of deficit expansion that we're forecasting is not a usual type of deficit expansion. By and large, we are extending tax rates that are already in place. This might have a deficit impact depending on exactly what baseline you're operating from. But in terms of the economic impact, we just don't see it. And so you have this kind of very mixed emotion in the bond market. Typically, you get a big deficit, you get a big expansion in the economy, bond yields move higher. That is, I think, clear cut. This is not that type of deficit expansion. So the bond market has mixed emotions. In fact, some of the spending cuts could weigh on growth. It's not a usual deficit expansion.
Is that mostly because at the crux of this bill is just extension of current policy? And if we don't get this bill, this means American tax rates are going up.
That's right. I think our bond yield forecast will almost certainly be lower if we didn't have an extension of these current tax rates. So the extension of the tax rates doesn't do much for the economy, but it does expand the deficit. And so we should see higher supply in the Treasury market, but most investors that we've been talking to for the better part of a year now have already expected that. So I don't think it's going to have a big impact on the market itself.
Just to sum up quickly, it's economic growth, it's not supply. Is that what you're saying?
It's supply, it's not economic growth. So just to twist it. But yes, effectively, we do see more supply, but we just don't see a big economic effect.
Matthew Hornbach of Morgan Stanley, thank you so much. It seems like in terms of what the drivers are for the bond market, it's going to be the economic growth or the lack thereof, and not necessarily just how many bonds are being sold.
A little refreshing in the sense that we have the story out this morning that there's a buyer strike on the long end from Double Line Capital and other investment firms avoiding or shorting the 30-year U.S. Treasury. And to Matt's point, we've been hearing Jamie Dimon talk about drunken sailors in Washington, D.C., the way they spend for years. Not sure why it's exactly this moment.
Well, to be fair, it does seem like people are expecting that steepener, this idea of yield curves going to a very different type of level. And it does seem like people are getting a little queasy of 30-year yields.
Yippee.
Whether that can yippee. A lot of yips out there. We'll discuss this coming up. Coming up next with Sarah Hunt of Alpine Saxon Woods, Bloomberg's Tyler Kendall, Brandon Ferris of the Steel Manufacturers Association, and Aditya Bahave of Bank of America as we parse through all of the economic data, the trade tensions, and potentially what's going on with the naysayers out there of the deficit. This is Bloomberg.
Uncertainty is the theme for the market, and it starts to become a headwind for equities here.
The market, has probably some near-term upside, but there's a trading range here.
Yeah, I'm not a buyer of the end of U.S. exceptionalism.
It's back to the U.S. It's back to the U.S. tech.
There is still a narrow path here towards, a better outcome than I think markets are expecting.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance with another week of trade whiplash. Yes, we have economic data with a countdown to non-farm payrolls, but everything that happens before that may be even more important with rising trade tensions with China and the Senate, Emery, coming back to budget negotiations.
I think all of this really centers on whether or not we get another rapprochement détente between Washington and Beijing, and potentially the breakthrough could be this call that Kevin Hassett told us yesterday he was expecting this week. And then what do we get this morning? More tit-for-tat war of words between Washington and Beijing. The Chinese Commerce Ministry saying Beijing, quote, firmly rejects these unjustified accusations from the U.S. On Friday. This hour, the president was truthing that China has actually gone away from what they agreed upon in Geneva when it comes to these raw materials.
Is that what it is, truthing? I think that's what we have to say now, that he was truthing out there this morning. I am wondering how much there's this battle between the ongoing tit for tat that we see between the U.S. and trade partners and just the nuts and bolts of what drove the rally of the last month, which is earnings have been amazing. And big tech, Danny Berger, has been very much back in focus.
It's been back in focus so much that if you took that out of the picture, the S&P would not be up for the year. It is back up for the year, but it's still not outperforming internationally. It does seem to be that everyone's gorging on trades with this idea that tariffs are negotiations, not outcomes. And that narrative works until it doesn't work. For now, it's working, but does that change at some point?
Meanwhile, people are trying to figure out what's the next catalyst. We did have this blowout earnings season, as Julian Emanuel was talking about. We have the jobs numbers on Friday. A lot of people talking about this as also a key catalyst. But Peter Scheer put some dampening spirit on that over the weekend, saying a lot of this data is becoming increasingly unreliable because these survey response rates are going down. We don't know what to do with soft data. And frankly, people don't understand what's backward looking, what's forward looking, what's sideways looking, and what's just simply, Danny, irrelevant.
Or if you're Chris Waller, who gave a speech very recently, said even if the survey data is right and consumers are expecting more inflation, the labor market's so tight that they're not going to be able to demand more wages. So in that way, you can pour more cold water over it, saying, yes, consumers expect more inflation, but that's not how it's going to play out.
Meanwhile, in Washington, D.C., the budget very much in focus, and that's something that a lot of people are wondering, do we get the bond vigilantes? I mean, Matt Hornbach just also pouring some cold water over it, saying, I'm sick of it. Stop coming to me with the bond vigilantes. They're not coming. We haven't seen them. They stay for about a half a minute and then they leave. But there is a feeling that maybe, Anne-Marie, this time is different.
Well, they've been complaining for decades, and that's Matt's point. I think also the crux of Matt's argument is when you look at this bill, the nuts and bolts of it are extension of current policy. And if you don't have that, what kind of trigger to not having growth could there be if you have American tax rates going higher, especially if people are concerned with inflation? So is this really going to be stimulative, or is it extension of current policy and a few sweeteners that the president has promised on the campaign trail?
I also think for the markets, the remarkable thing is the degree to which we keep swinging back and forth about what we care about. One day we care about trade. One day we care about the fiscal budget. I just don't know how you operate in that kind of environment, how you have any conviction in this type of environment where the narrative and what's shifting things changes from day to day.
What you do get is a lot of notes that say range bound. We're going to be trading within a range. And that's what you hear again and again. What you see in markets is a bit of softness. After the best monthly performance going back 18 months, you can see led by big tech, which have been some of the biggest winners. You can see across the board, S&P futures down 0.4%, and NASDAQ down 0.6%. The Russell actually doing better, ironically enough. What you can see in the yield space is not what you want, which is positive correlation in all the wrong ways. Yields higher, bonds lower, as people look to Washington, D.C. for the deficit. A question of who's going to buy that 30-year, maybe not PIMCO, maybe not Double Line, maybe not JP Morgan Asset Management right now, touching up against that 5% level, up about 4 basis points. Meanwhile, in the currency space, and this has been the theme and something that a lot of people are taking notice of, dollar weakness across the board. Dollar, the weakest, one of the weakest levels going back more than a month versus the euro, as people question whether this still is the type of haven spot, and also whether it just simply has gotten overvalued over the past couple of years. Coming up over the next hour, Sarah Hunt of Alpine Saxon Woods with their stocks coming off their best May since 1990. Brandon Ferris of the Steel Manufacturers Association with President Trump set to hike steel and aluminum tariffs, and Aditya Bahave of Bank of America as the Fed games out its rate cut strategy amid trade uncertainty. We begin this hour with stocks lower. U.S.-China trade tensions back on the table. Sarah Hunt of Alpine Saxon Woods writing, where do we go from here is always a tough question, but under current circumstances, to echo what Danny was just saying, it is difficult to have conviction about the economic environment. The understatement of the year. Sarah joins us now. Sarah, thank you so much.
Good morning.
What is your compass at a time when, as Danny and Anne-Marie were talking about, there's so many different things that you have to have kind of a head on a swivel and pay attention to one thing at a time.
Well, certainly for the economic data, there's a lot of questions about whether or not the trade tensions and the tariffs have pulled forward a lot of activity. So it's hard to understand whether or not some of the good current economic data is because people have rushed out to buy things or not. I think you have to keep looking at earnings. And right now, to your point earlier, that's been a pretty good situation. The technology stocks have really continued to carry the day, and they have not been pessimistic about CapEx and spend. And I think that in all the other noise